have these constant earthquakes coming from global shores to worry about.
And they don't even have a Donald Trump.
They don't, but they have many. Someone or the other is going to get up and either have a new update, or another global CEO is going to get up and say, hey, I'm worried, or I'm happy, or I'm scared. And this time it's Arvind Krishna, the CEO of IBM. The IBM boss has talked about how they are just seeing a drop in spends because clients are spending all of that money on hardware and chips before prices zoom even further. He said we should have been ready for it, but we were not able to. That stock got hammered. Look, while we anticipated some supply chain related impact in our expectations, we were not ready for that extent, is what he says. We don't anticipate the magnitude of the capex reprioritization. Look what happened to that stock, 26% down.
Yeah, started off 20% lower, only worsened further. And I was reading a post 2 days ago of how, where is it that the cash flows are lined up over the next 12 to 18 to 24 months? It is amongst the chip makers. The others are actually spending, Amazon, etc., and they are gonna see the other end of the stick. So it's an interesting world, and yes, I think that analogy is really, really fair. I mean, you have IT and you have crude, and both are getting hit every second day with something unexpected.
It's almost as if what those companies do themselves is in the pecking order of factors that could impact their stock price dropping lower. You might have, in any given company, have a lot of AI deals that you're striking, your AI revenues are increasing, but investors are going to look at factors which are beyond your own control. So that is a bit of a tricky phase.
I guess when you've had such significant growth in the stocks of all of those companies that have some correlation to IT, not very direct correlation to IT, one might add, because they're building out the hardware, etc. And those stocks dropped 20%. People are going to extend that to India.
Yeah, look at all the ADRs last night, and I don't know if you can pull those up, but you had Infosys and the Wipro ADR put down. This is actually an improvement with just a 3% cut. So we'll wait and see what happens there. But it's not as if there's no action beyond IBM and IT. So much happening, including Trump now deciding to convert his, now what do we call it when you say that if you pass through this, I will take a 20% fee on you?
Protection fee.
Protection fee. I don't know. In India, they call it hafta. I don't know.
The mafia call it protection. Protection money.
So that protection money now becomes investment. So that's a bit of a relief for the markets. US markets recovered after inflation numbers came in cooler than expected. Just pull up the key indices as far as the US is concerned. So it's the CPI data which gave a breath of relief, I suppose. So NASDAQ was up 1%. Let's pull up futures as well for you before we get to that specific CPI data and tell you what US futures are looking like. 0.61% up on the NASDAQ. So the June consumer price index fell 0.4% versus expectations of a drop of 0.2%. Annual inflation figure is now at 3.5% in the US. The expectation was that it would be 3.8%. Bond yields have also slid after this cooler than expected inflation print. So the 10-year is at 4.59%. Now add to this important statement from the Federal Reserve Chairman Kevin Warsh, where he was speaking in front of the Senate, and he says the central bank remains committed to bringing inflation under control. It's not just that. He says the high inflation period that they've been seeing will be a thing of the past if he succeeds.
Now, at the Fed, our number one objective is getting monetary policy right. That's our clear and constant aim, the star we steer by. And if we get policy right, and I can assure you we will, the inflation surge of the last 5 years will be a thing of the past. The Supreme Court said that the Federal Reserve and the conduct of monetary policy is independent. To the extent there were questions about it, the courts answered those questions.
So what would you do?
I would continue to do my job.
Okay, good. Chair Walsh, do you agree that current monetary policy exists in an extremely polarized and politicized environment?
Outside the four walls of the Federal Reserve, there's no doubt a lot of politics. But my goal inside the central bank is for there to be no politics. To the extent there's politics there, we're going to get rid of them.
Okay, oil prices meanwhile did stay elevated as the US and Iran battle over the control of the Strait of Hormuz, because that's what it's down to right now, right? Who controls the strait? Let's pull up the latest Brent prices, and you're at 85.76, so not a comfortable spot at all. Asian markets, let's look at how Asia has opened in the midst of all of this, at least up in the green. Nikkei, Hang Seng, Shanghai, all up in the green. You'd expected India also to at least open maybe in the green with a slight gap up, not anything major, which is going to be a big relief there.
Just that small news, maybe you marked it, but yeah, Shanghai would be slightly skittish also because the Chinese GDP growth has come in at the lowest since, I think, 2022 at 4.3%. So that economy isn't quite skating ahead the way some of the others are.
Yeah, and we'll have to wait and see if that is a spillover, because that's a huge consumer, right? So we'll have to wait and see. The point we were making about why that relief. So US President Donald Trump on Tuesday seemed to have dropped the idea of charging a 20% protection fee on all cargo shipped through the Strait of Hormuz. So he said this on his Truth Social post, saying, based on highly productive conversations with Middle East leadership, I have decided to replace the 20% United States reimbursement fee with trade and investment deals that the various Gulf states will be making in the US. Those investments will be massive, but at the same time, extraordinarily good for them and their future. So I think that's a bit of a relief, at least for now. Richard Yengsa, Chief Economist at ANZ Group, joins us now. Richard, very good morning to you. Do you think that crude prices will stay in this range, or are we looking at a sharper cool-off if things settle once again?
Oh, my presumption is we're back in a more difficult phase of this conflict, and so at the moment, I think the path of least resistance is for crude prices to correct higher a little bit more. We're up about 15% from the lows, so the increase is already pretty noticeable. But you know, against the backdrop of a pretty substantial interruption in global crude supply, spot prices at $80 to $85 a barrel to me aren't too damaging for the global economy, although they do add to just that pricing tension, that extra little bit of inflation, which Fed Chair Walsh spoke about, and you can see also in the AI supply chain.
Richard, morning. Wondering what you think about the Chinese GDP numbers and whether this is really par for the course in the context of what the globe is going through and what it means for global growth.
Look, it's kind of not a global story, really. In fact, a lot of the global themes of recent years have been, if you like, except China, inflation, except China, labour markets that are too strong, except for China. So China's been dealing with its own, if you like, Japanification of its economy. The symptoms that we've seen in Japan over the past few decades, you can identify more and more of those in China. And look, 4.3%, there was some volatility around the pandemic 2020 and 2022. Apart from that period, this is the lowest growth rate in modern history for China, and I think is symptomatic of, you know, when you have a high debt load and you have a shrinking population, growth is going to moderate over time. You can stimulate to try and kind of keep things up for a little bit longer, but inevitably the path of least resistance is for economic growth to continue to slow over time, and I think that's what China is doing.
Okay, Richard, here's the question. Does global money get the confidence to move beyond the AI plays and US yields, and in a world where Hormuz is not getting decided? And therefore, part two of the question is, even if emerging markets, Asian markets, etc., get a bit cheaper because of various reasons, does money get the confidence to go there, or will it get stuck, remain in safe havens or predictable names until this is sorted?
Look, I don't think money's lacked confidence, even with the uncertainty of what's going on in the Middle East, and has been going on obviously for more than 1,000. Sorry, I was Ukraine. It's going on for more than 3 months now. I think there's been modest enough damage from the Middle East that the other drivers, like this incredible AI story, have been able to prosper. I think the bigger challenge for AI comes within the AI tent. If what we saw from IBM last night and occasionally other companies causes a genuine reconsideration of this story, I think that's a much bigger challenge not just for the markets but for the global economy, because in the last couple of years AI has been a very discrete positive driver of activity in the US, the wealth effect in the US, and also trade, particularly in Asia, where in the last 2 years, more than 3/4 of export growth has been somehow linked to this AI and technology cycle.
Yeah, that's an interesting take. Richard, thanks so much for taking the time this morning. Pleasure speaking with you as always. All right, let's talk about what happened in trade yesterday. And the equity markets, of course, dropped in line with that global risk-off sentiment, with crude oil prices going up and geopolitical tensions rising. Foreign institutions net sold equity for a second day in a row, but not too much, in that it stood at just under 740 crore rupees. Domestic institutions net buying to the extent of 2,928 crore rupees. The Nifty 50 declined by over 150 points and ended the day just about 0.1% above the day's low. You had the benchmark that managed to stay above the 24,000 mark, and that can be looked at as positive. Bear in mind that the broader range that the benchmark has been since the start of June, in fact, has been 23,800 to about 24,200 on the upside, and it's failed to break out of that on either the low end or on the upper end. The Nifty Bank underperformed, dropping about 1.2%, and that was on account of an underperformance of the PSU banking pack. It was, in fact, the second worst performing sector, dropping as much as 1.8%. You had the Bank of Maharashtra, Canara Bank, Bank of India, State Bank of India, all dropping over 2%. And only the Nifty Realty was a worse performer sectorally, dropping nearly 2% on profit taking. This has been a sector that has gained from strength to strength in the recent past. Broader markets declined as well, with the mid-cap index losing about 0.5%, the small-cap index dropping more, 1.1%. But bear in mind that still at this juncture, the Nifty mid-cap index is just about 0.6% away from 52-week highs, and the small-cap index is just about 1.2% below the 52-week high. So it's interesting to note that there has been considerable strength in the broader markets. In fact, at a time when the benchmark Nifty 50 is over 10% down from 52-week highs.
Yeah, and then that continues. But just that, the whole of last week, we were getting this pattern of strong intraday recoveries, and I wonder if this higher oil prices have disrupted that market pattern of the every intraday drawdown seeing a strong recovery. So I think maybe that's a chink in the armor, and therefore just maybe very large index bets or very large bets on some of the large cap index components are off until oil prices cool off. I mean, think of it, the bogey of higher oil prices and the tech uncertainty is back today, and therefore you got to wonder whether there is merit in trying to take a nifty trade on the long side in a scenario like this, and maybe the answer could be a no. So, and it's fine. I mean, leave the index out. You don't necessarily need to have Nifty futures in your portfolio. Yeah, look at specific stocks and try and do that. And frankly, the one thing that stands out is that wherever there is a large QIP appetite for paper, whether it's an OFS or a preferential, I think it's a big trigger for those individual names, as we saw in Biocon yesterday, as we saw, I think, at Adani Enterprises about a couple of weeks back. And in between those two, there were 2 or 3 others in which there were QIPs and the demand was very, very strong. Blue Jet, wherein there was a fundraise and the demand was so strong that 2 institutions picked up the entire paper. So for those individual names, those are proving to be very healthy triggers, and you got to keep an eye out for some of those. I mean, I was really impressed with the way Biocon, despite such a large set of paper coming to the market, got absorbed so easily, and the way the stock reacted.
Do you think that it's because the fact that Mylan has exited completely, the pressure of the supply coming through?
Very likely, Alex, in Biocon's case, but in Blue Jet that was not the case. In Adani End that was not the case, because these companies presumably will do more fundraise. But wherever the demand is strong, I think the market reaction is very, very hard.
Interesting.
Very interesting counter view on Biocon coming in from one of the brokerages today, and it's on my it's on my watch list as well. But let me start with factors. The broader trend remains positive, but the market is currently stuck in a consolidation zone, stuck between 23,800 to 24,300 range for the past several sessions. It requires a decisive breakout on either side for the next meaningful move. Expect range-bound trading with stock-specific action driven by earnings and global developments. As long as the Nifty holds above 23,950 to 24,000, the broader bullish structure remains intact. A sustained move above 24,300 can open the path towards 24,500. For the Bank Nifty, it's faced aggressive profit booking. Sustained move above 57,900 can revive bullish momentum, while a break below 56,800 may trigger further weakness. Ultimate short-term protection rests in the 56,900 to 56,800 zone. Slicing through 56,800 will accelerate selling pressure down towards 56,200. Upside recovery requires reclaiming the 57,800 to 57,900 barrier. I wanted to highlight a quick note by Lawrence Belanco, who's of CLSA, who's talking about breakout highlights. He's talking about Delivery, Titan, Shriram Finance and Max Healthcare. He says that the delivery breakout zone presents an attractive risk-reward entry point. Pattern supports an upside objective of 655. Maintain a bullish bias while prices hold above the 484 to 490 breakout area. For Titan, development projects an upside target of 5,250 to 5,260. A close below 4,306 as the initial stop loss trigger. On Shriram Finance, he says current pullback towards the 50 DMA provides an attractive entry opportunity. He cited a breakout pattern supporting an upside target of 1,230 to 1,240. And for Max Health, recent retracement offers an attractive entry point, supports an upside objective of 1,363. Use a close below 1,011 as the initial stop loss. So just some quick trading ideas this morning that CLSA has put out for you. Let me go across to Sharad to see if there's any upside there in the F&O setup this morning.
Well, it seems like there might be a little bit of positive upside in the F&O setup, and the reason is the US inflation data. That has actually changed the risk-on sentiment for most of the assets globally, and we can see that in the Asian markets also. And you could say a range bound with a positive up move can be expected, but not a very big gap up opening, but definitely a range bound with a positive sentiment we can expect in the GIFT Nifty, the numbers which we are talking about. And Nifty Bank, however, a little bit more sell-off was there in the last session, so the technicals are slightly weaker. But remember, the IT might put a little bit of pressure on the Nifty, at least in the initial minutes of the trade. But FI is looking at it for second straight day, the sell-off is there in the cash market, but the amount is on the lower side. Yesterday it was 3,000 odd crore plus. But FI shorts, it's still near the highest levels in the series. Little bit of concerns coming in around 90 odd percent. So it will be very interesting in case any technical reversal happens or not. But of course, for both the sides, bulls and bears, there is a fight going on in the call input segment, especially the congestion level at 24,000. 324,000. This is where the action is lying right now. But open interest gainers, let's get in those stocks as well. I would like to point out especially Tata Elxsi reaction on the results itself, and pharma space, that's where the defensives are working. Divis Labs, brokerages are turning bullish also. So you can see a little bit more momentum in the pharma space. On the other hand, the IT names might be at least under a little bit of pressure, and Apollo Hospitals also. Channel checks are suggesting that a good value-based buying might come in. So the sector-specific moves, if you talk about it, pharma and IT should be there on your radar. But yes, a technical reversal, you cannot rule that out.
Okay, let's look at some of the stocks on our watch list. I'm starting with LTTS. Good set of numbers on the face of it. I would say okay, but considering expectations have been low, we can give it a thumbs up. So Q1 numbers were ahead on revenue and margins. They've improved year on year. Constant currency revenue growth was at 1.5% quarter on quarter versus minus 1.1% in Q4. Mobility returns to growth. Sustainability stays strong. There were 6 large deals that were won. Engineering intelligence has gained traction, and AI-led solutions continue to drive client engagements. Here are the core numbers. Revenues are up 2.9% at 2,940 crores. EBIT was at 6.1% at 461 crores. EBIT margin at up 47 basis points at 15.68% versus 15.21%. And net profit was up 1.5% at 352 crores versus 347 crores. Here's what JP Morgan is saying on it. They've maintained a neutral, but they have cut the target price slightly from a 3,400 to a 3,300, which is pretty much where the stock is. They're saying the Q1 print was a beat on both revenues and margins. wins. Large deal total contract value, however, was weak. They provided an optimistic outlook on the rest of FY27 and cut earnings by 2 to 7%, mainly due to forex losses. They're waiting to see positive proof points of the new strategy. Nuvama has retained a hold with a target price of 3,500, also a cut from their earlier target price of 4,000 rupees. They're saying results are decent. They're turning over a new leaf. Post-divestment company has started FY27 with a decent performance and optimistic outlook. They believe ERD industry should take more time to recover from the current weak macro headwinds in specific sectors such as auto. They've maintained their FY27 and 28 EPS estimate at less than 1% change. The next one is Biocon, and the stock has really been in focus. Wanted to highlight what Bernstein is saying about it. They've maintained an underperform with a target price of 326. They're saying Biocon still has EPS drag, leverage risk, succession doubts, innovation spend yet to convert into top line enough to support the $1 billion plus leverage. Policy shifts are lowering competitive barriers. Biocon will require a minimum 4 to 5 years to cross the $2 billion revenue threshold. Succession still appears anchored around science-led bets rather than sharper commercial and capital allocation leadership. I thought this point was it was important because, of course, it was a family member who's taking over, who has the chops to understand the space as a scientist, but maybe the street is also looking at someone who can steer the ship in terms of managing the capital that this large company has. PDS Limited, the third one on my radar, it's a thumbs up. So back-to-back announcements on this company. The stock has already run up a fair bit. They have announced a strategic partnership with a company called Busana Apparel Group. It's one of Indonesia's leading apparel manufacturing companies, generating annual revenues of over $500 million USD. They will jointly pursue new opportunities with global brands and retailers and aims to diversify their sourcing footprint. If I look at what this means in terms of what they've done earlier, they had an announcement yesterday itself, and if we can pull that up, with a French company. So that came in market hours. You saw that stock come, spike up, and then of course off the highs of the day, and then now with Busana as well. So yeah, those are some of the few on my radar.
It came off quite dramatically. I think that was more a sign of the market and the way that the breadth changed over the course of the session, though. I'm going to start with what might be the accident of the day. Who knows? Tata Elxsi on the back of its earnings, and it's a pretty soft start to FY27 for this company. A few of the metrics that you should pay attention to: the healthcare and life sciences has grown about 1.7% on a quarter-on-quarter basis. It saw muted industry environment. You also had media and communications that has grown as much as 4.7%, transportation growing just about 1%. Uncertainty persists in both transportation as well as certain other business lines, but in transportation on account of European automotive players. The EBIT margin has fallen short, and I was reading a note by Nirmal Bang, and they've actually talked about why that has been the case. You have the fact that selling general administrative expenses that have increased as a percentage of revenue, standing at 13.2%. And there's also, while there was an impact on the positive of 40 basis points on account of the currency, there was a negative impact of 150 basis points on account of short-term costs, which were one-off in nature, as well as 220 basis points on account of investments towards people and capability. So as a result of which, you've had that margin performance come in at 19%, compared with 22.3% on a sequential basis, and the PAT number as a result of which has taken a bit of a hit. It's down as much as 23%, coming at 171 crore rupees. The revenue, though, was more or less in line with expectations. Let's see what it does in trade. It was already down about 3.3% in trade yesterday. The other two updates are pretty straightforward. Capacity Infra is likely going to react to an order win that it has gotten, 482 crore rupees. This is from 25 Downtown Realty. They have worked with 25 Downtown in the past. The order is for the construction of a residential tower in Mahalakshmi in Mumbai. And finally, KC International has got a number of orders worth about 1,180 crore rupees. Among them, it's gotten a 400 kV transmission line project in West India. It's gotten a supply order for transmission lines, towers rather, actually, in the Middle East, and it's gotten orders for supply of towers and hardware as well as poles in the Americas. Pretty standard, but it's interesting, I think, that they're getting orders in that West Asia region. It bodes well.
It does, and you know, unfortunately, despite that power grid thing getting resolved, the stock is actually lower from that time. It was at 520, 530 when the power grid, whatever you call it, resolution happened, and still the stock is lower. So all of this bodes well. By the way, adding to PDS's attractiveness, maybe just maybe, is the fact that the India-UK FTA is attractive from today. So therefore, on my radar, the first set of stocks were the textile stocks as well as the stocks like United Spirits, which presumably benefit. Now remember, this is not new news, well discovered, well known dates transmitted across, so not a surprise at all, but you never know. This could well bring about some more momentum into select names, so keep an eye out for some of these. Hero and Ather was interesting because it's a large market cap, Ather now, so 1,000 crores doesn't really move the needle too much, I presume, on that market cap. Or it is important, it's not a small number, but not a large number. But still, Hero board approving an additional investment of up to 1,000 crores in Ather, because Hero already holds about 29.48% stake in Ather before the proposed 1,000 crore investment. What does it speak for one of India's premier two-wheeler companies taking an enhanced bet on an EV two-wheeler maker, which is actually doing pretty well? I would say you kind of think of it as a promoter buying further stake into that company, if you will, right? So it's akin to that. It's interesting. Let's see how this one does in trade today.
Just on this point, it's been strategic for Hero for the longest time, right? Even before, while other people were jumping into electric vehicles, I think the consensus view was Hero is not doing it because मेरे पास Ather में stake है.
Yeah.
That is the view, and they're doubling down on it.
Yeah. So
which is good.
And which is why I said maybe akin to what you know, almost similar to what a promoter would be buying, right? Per se, because 30% stake hai. And there was a negative note at Tamanna's and there's a positive note at my end, DV's lab, you know. And one of the points that I think Citi makes in that note is very interesting. But effectively, firstly, they maintain a buy with a target price of 9,450. That's quite a bit. I mean, 30-35% higher from where it is right now. They say the peptide pipeline is nearing commercial inflection, and the next 12 to 15 months could be critical for new product commercialization for DVs, and the GLP-1 supplies could begin in FY27 itself. Now remember, you know, DVs has got this very smooth track record with most things that it does. The point that I think Citi was making, that the hero of this space is now lagging in valuations to almost all of the other smaller CDMO players. Can that reverse? And can DVs again take pole position in valuation multiples? Because if that were to happen, then some of these targets seem to be very, very realistic and very, very short term as well. I'm not saying it will happen, but the point that Citi is making, that it is lagging, and therefore, is there room for upside? You could argue that the answer could be a yes. So therefore, let's see if the next 12 months belong to DVs or some of the other CDMO players which have really shown in the last 12 to 18 months.
So, okay, two pharma companies in focus, one positive, one negative view right now. We'll see how they go. Just wanted to highlight what HSBC is saying on Pidilite, because they've initiated a buy with a target price of 1890. They're saying stick with India's market leader in adhesives. Pidilite's deep distribution network, broad portfolio, brand strength, innovation and execution set it apart from its rivals. Waterproofing and tile adhesives remain key growth drivers, even as core Fevicol business grows over 1 times of GDP levels, like the earnings visibility and long-term growth story. So we're all about ideas here this morning. But having said that, what should the strategy be? We'll take a very short break. We're coming right back with all the top technical picks and the big stocks of the morning. Stay tuned.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रिकमेंड करता हूं? 17 years of experience, largest database of elite profiles, or 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
Ready for the next big IPO? Apply for it on Grow. Open your free DMAT account, check all IPO details, apply easily in a few taps. And that's it. Download Grow now for stocks, mutual funds and IPOs.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
That if a boy from Ahmedabad with no capital and no connections could build, then there must be 1,000 more Gautam Adanis sitting undiscovered.
जिनके आइडियाज हैं दमदार, वो सब हैं वंदे भारतम के नेशनल स्टेज के हकदार। प्रो इनोवेटर्स रजिस्ट्रेशन करो wandebharatam.org पर 19 जुलाई तक। An initiative by Gautam Adani.
A stage that has captured the pulse of leadership since 2006.
NDTV Profit Most Inspiring Leader of the Year Award goes to Mr. Anand Mahindra.
Celebrating visionary trailblazers and industry mega stars who redefine leadership every day. An unmatched legacy, unwavering trust, enduring credibility. NDTV Profit Business Leadership Awards 2026. 26th July. Only on NDTV.
As India's mobility story is racing into a new future, it's in search for a new fuel map. Electric, ethanol, hydrogen, CNG, hybrid. What will power India next? India's sharpest mobility minds come together to decode the fuel mix that will define the road ahead. The NDTV Automate Fuel and Future Summit 2026 on 15 July only on NDTV Network.
Welcome back to India Market Open right here on NDTV Profit. And well, just before we get to markets, and the markets may not provide an upset, but I tell you, as decorated a team as Spain is, and they played a solid match, I would say that a lot of people might think that, whoa, did they really defeat France?
Yeah.
Yeah, Mbappe led France.
I'm not surprised.
You're not surprised?
No.
I was actually. When I saw the scoreline, I was like, wow, there's something.
So in this case, you've had an answer to what happens when an irresistible force meets an immovable object.
Unstoppable force.
Whatever.
Yeah, an immovable object, yes.
Yeah. But it was something like that. You actually thought that train would just fly through everything, but they met Spanish resistance and how. And by the way, 3 goals. One was offside, but it was a beautiful goal that they did as well. But superb match, Kush. Did you manage to see it?
The highlights in the morning. Varna yahan pe bhi to aana tha. No, but I got the highlights. I was surprised. I was just as equally surprised because France were the clear runners-up for this tournament. मतलब मेसी तो जीतने ही वाला है, अर्जेंटीना को जिताने ही वाले हैं, ठीक है?
No chance. Such a bad insinuation, but okay.
I'm kidding. No, on paper, France were the strongest team, and for them to lose with that scoreline was definitely a big surprise. So yeah, I'm looking forward to the finals between Argentina and Spain.
Just goes to show that the favorites are losing this time around. Let's see what happens tonight.
Everything said and done about Argentina and Messi and how the draws have been and everything, this has truly been a World Cup of upsets and genuine ones. Cabo Verde, the highlight of
My producer is asking me to say it's coming home.
It's not.
It is
not.
So are you making any predictions, Kush, based on technical data on who's going to win?
I am making predictions on observational data. Argentina is going to win.
Okay, we'll see. We'll discuss this tomorrow. But what about the markets?
Slightly different view there. Slightly different. Yesterday we spoke of how markets could perhaps consolidate. I think it was a combination of crude, expiry, all of that. That kept the upsides under check. 24,100. That was the pivotal range on the Nifty. Nifty did hold above the 24,000 mark, but just below the 20-day moving average. And we'll give it that grace because of the expiry and everything else that is happening around it. you could still say that there is the range play, which is still active on Nifty, which is 23,800 and 24,300 on the upside. I would perhaps be a little cautious at this point. I mean, if you're an aggressive trader, you could still go long with 23,800 as your stop loss. Bank Nifty, that's the more interesting one. The 200-day moving average and that support zone of 57,300, that has been respected. Tested, but respected. Both PSU and private banks came under pressure. PSUs more so, right? But here too, I think this is the buying point for Bank Nifty, 56,500, that's your stop loss. On the upside, 58,500, 59,000 plus targets very much on the cards. The issue is momentum seems to be missing on both these names and consolidation. Even the momentum indicators are suggesting some consolidative moves for the next few days. Not surprised with the 4 big banks, private banks declaring results on Saturday. I don't expect big moves, just ahead of this. And what, you've got 2-3 days to go. So maybe some consolidation on the Bank Nifty as well.
Okay. Before I come to you for picks, I must ask Parag Bhai about IBM and IT stocks. Is this just one more?
So today, so it's a commitment from my side. TCS, HCL Tech, LTI, Mindtree, if they fall by more than 3% today because of IBM's 25% fall, I am going to buy.
Okay.
Simple.
That is as clear cut as it can go.
Yeah.
Why aren't you worried about everything that Arvind Krishna is saying?
I'm not worried. You see, first of all, what he has said is clients have prioritized hardware purchase because they are afraid of the memory prices going up.
Yeah.
Second is he has also accepted they did not adapt. And so they were not able to close the deals.
So he's saying our execution was bad.
Execution or deal, I'll say, let us put it that way.
He says it. He says it very clearly. He's admitting it.
Yeah. So for example, now come to our companies. Okay, HCL Tech has done highest deal signings ever in Q1, $2.4 billion. That does not include that $1.14 billion deal of Mercedes. Okay, so July, August, September will be very good for deal wins, at least I'm saying. So TCS, LTI Mindtree has clearly said that FY27 will be better than FY26, which means above 6% revenue growth. Plus, they have said that margins will improve. Now, TCS at 14 PE, we discussed at 13 PE at below 2,100. I gave a table thumping buy, and I still feel that below 2,100, even 2,150, it's a great buy. And just see one thing. For example, HCL Tech today market cap is 3,16,000 crores. They made 20,000 crore of operating cash flow last year. It's a 7% yield. Out of that 7%, they give you 80-90% as dividend. So 5 to 6% is dividend yield. Right? TCS also, today market cap is today it should be 7,95,000 crores. That day we discussed it was 740. And they make 52,000 crore of cash. So 7% yield. So it is above your bond yield. Above your bond yield, and that too, this is comparable to bond yield because here 80 to 90% of that cash comes to you as a shareholder. So it is you can hold it with 5 to 6% gains for sure for 1 year. I am sure people are not happy with the 5 to 6% return, but the sentiment level is at such a bottom that even if there's little bit of change, you can get 15-20% very quickly during the year, anytime. That we cannot time.
Okay. No, so just to give you context of what has happened, I'm going to go across to Jasmeet. The IBM shares, of course, plummeted in Tuesday's trade after the hardware, software and consulting provider released their preliminary second quarter results that fell short of expectations. Jasmeet joining us for more.
Well, Tamanna, thank you for that. As rightly said, the company came out with its Q2 numbers a bit early on the back of this miss. Now, what we are seeing is the revenue and EPS have missed by over 3% and revenue has fallen short by roughly $660 million. Well, here are the top 3 key reasons why there was a miss. The first one is clients have moved their budgets from the traditional infrastructure spending to AI infrastructure. The second reason is the company could not close a lot of deals in the Q2 which got slipped. And the third reason is the overall software and infra becomes a key overhang for the company and they're seeing softness. Now, what exactly does this mean to Indian IT is the biggest question so far. While the first one is the IBM saw major impact on the infra end. While Indian IT's bread and butter comes from the consulting business and not from the infra business, so there should not be much impact given the consulting has done well for IBM itself. So IBM also mentions that overall Gen AI led deals were really good for the company and the consulting saw a flattish growth in the quarter. The second reason is the overall stretch that the traditional business might see a slowdown, which has been a case from last couple of years for IT services also. And the third case is a lot of analysts are penciling in the overall ADR fall, which we saw yesterday in the market, was overstressed. And given the Indian IT don't really deal in infra and majority of the software, there should be not much impact for the Indian IT companies.
Okay, that's interesting. Not much of an impact. Kush, why don't you give us a call on your picks and then on the IT stocks for today?
So let me start with IT because that's under discussion. And I'm reminded of that saying, that motivational one, कि it's not how hard you get hit, it's how how soon you get back, how stand up. बराबर. अब देखो ये न्यूज़ की वजह से अगर हम गिरे तो ठीक है. But it's the recovery that will show whether the strength and the reversal is there or not. We've spoken of 28,500 on the Nifty IT index as that level from where it should rebound. For volatility, I'll give it some grace, make it a range of 28,000 to 28,500. If we respect this range on closing, I think the reversal, I'll still call it a reversal, at the risk of being perhaps being proven wrong, but I'll still call it a reversal. So as long as that range is maintained, I think Nifty IT's recovery and reversal will perhaps hold in good stead. So that's the view on IT. Now, before I go to stocks, I have something very interesting to mention. So usually I'm very gung-ho about, ठीक है, index में जो हो रहा है होने दो, stocks में ध्यान रखो, You might want to go a little light on stocks. Right, the behavior is a little erratic for stocks. Now, a lot of strong setup calls have actually slipped lower, and I'm taking me out of the equation. कि वो मेरा call नहीं चला, right? It's the long, it's the strong long setup calls that are starting to slip. But also, very interestingly, the short calls, right, have started to move higher. So, for example, a VBL, we gave a call, a few days ago, target towards it, but yesterday had no business, but actually ended in green. My theory, couple of them. One, actually, I liked what Neeraj said in opening. It's perhaps the high crude which is starting to now being factored in again, and you're starting to see some consolidation and some lightening of positions. It could, by the way, also be the fact that this is the result season, and maybe because we've already had a run up in this space, investors would want to stay light and see how results play out, and then perhaps build on their positions. So stay light on stocks in a nutshell. I'll still go with a mix of 2 long and 1 short calls. The hotel sector, by the way, you remember I've said has seen some spark every here and there. EIH, Taj, GVK. This time around it's Chalet Hotels. The stock conquered the 200-day moving average, healthy volumes for the last 3 days. So a long call on Chalet for 880, 910. Stop loss at the 830 mark. PG Electroplast, this one's, by the way, quietly gaining ground in this entire EMS space. Upper end of the resistance band, healthy price and volume action. 650 and 640 are your targets. 585 is where you keep that stop loss. And PI Industries, structurally weak, right? Yesterday it's broken the support zone as well of 2550 on the back of good volumes. So short call on PI Industries, 2515, 2485 targets, 2575 is where you keep that stop loss.
So when you're saying go light on stocks, are you saying the index bet is a better one?
So from a positional standpoint, right now the risk-reward ratio there seems favorable, but even there the indices and the technical indicators are suggesting consolidation. So you might not get an immediate bump up. But if I were to really pick right now, I would actually pick Bank Nifty amongst Nifty, Bank Nifty, stocks, everything, and with a very tight stop loss at 56,500.
Okay, so Bank Nifty is the preferred play, at least for today. Varsha joining in with the other stocks that should be on your focus.
Well, let me start with Anand Rathi share, wherein they've come up with the Q1 FY27 numbers. Overall, a mixed set of numbers is what we are seeing. Exceptional loss did impact PAT. Operational parameters remain in line. There was a strong growth when it comes to the margin trading facility, and they've also announced 500 crore NCDs. Now, talking about Signature Global, they've come up with their Q1 business update. But overall, if you see on a year-on-year basis, if you see the pre-sales have actually reduced 25%, which is a negative thing. The collections, if you see, was down almost 28% year-on-year and 27% quarter-on-quarter. The major foray into branded residence in collaboration with Italy's Tonino Lamborghini is one of the key things that you must watch out. But overall, the pre-sales and collections were not good for Q1. Other stocks which should be in focus is IOL Chemicals, wherein they've got China approved their one of the APIs. So this is nothing but an expansion into the Chinese pharmaceutical market. Kirloskar Brothers will also be in focus as they've secured 150 crore order from Saipem, which is into vertical pumps and spares, and the order needs to be executed in the next 52 to 60 weeks.
Okay, Varsha, thanks for that. So many of these other stocks in focus as well, and let's speak about some of these other stocks. Parag bhai, we were making this point in the morning that some of these names which have Actually, just before we get to the QIP players and Biocon, etc., since we're talking about IT, let's just round that off. Two other names which came out. One of them was LTTS, the other one was Tata Elxsi. Maybe you got a chance to look at LTTS.
Yeah, so LTTS result was good, margins were good. I think the commentary was good, but only deal wins were slow. Deal wins, generally they were doing $200 million every quarter. This time it is $100 million. But I think the management has given good commentary on upcoming quarter results and margins both. Okay. But I think their target of 13 to 15% revenue growth in such environment looks ambitious.
Would it not be in your, top 3?
Not be. Although the stock has corrected
even top
nicely.
5?
The stock has corrected very nicely, so it might come. I don't promise that it will not come. But right now, my hands are full with TCS, HCL, LTM entry. These 3 stocks.
No, clearly not that much conviction when it comes to LTTS.
Also, I think for LTTS or even KPIT Tech, the European auto space is looking slightly skittish, and therefore both of them have reasonably, KPIT is entirely auto, but even LTTS has some.
And you see the results of US banks, Bank of America, Goldman Sachs. Goldman Sachs was up 9% yesterday. Wells Fargo, Citi. And Indian IT, this large cap IT services pack mainly caters to BFSI.
Even the mid-sized ones, there are a couple of them who got a large US BFSI.
Absolutely. And even in like Emphasis has a very big BFSI.
Emphasis is also insurance. But persistent emphasis.
But then these large US banks would also be allocating higher capex to your memory and hardware, etc.
No, that is true. That I'm saying that BFSI for all. If you see TCS, HCL Tech, LTI inventory, all have commented very strong deal wins in BFSI and very strong QOQ growth also in BFSI.
Just LTTS, Kush, your view on charts?
No, like you said, even in discussions, it doesn't really make the cut, right? Has been under pressure, and even when the index is rebounding, this one's not. So, doesn't really make the cut.
Okay, all right. Let's head across now to my colleague Somit Sarkar, who's joining in to tell you about what he's hearing on the street. And some of these are very interesting. We heard the first cut of these at 2:45 yesterday, actually earlier than that, because some of these very time sensitive, aren't they, Somit?
Well, yes, a lot of stock specific action and time sensitive action that we're seeing in trade. Firstly, it's on Bharti Hexacom. Now, there's a buzz of Government of India looking to sell its stake in the counter. Now, Government of India owns close to 15% stake under the name of Telecommunications Consultants India, and this could come on the block very soon is what dealing rooms are indicating. For MCX, there are buy flows on institutional desks. Dealers indicate a strong pickup in volumes owing to the volatility that we are seeing in commodity prices is happening, and that's the reason we had seen the share prices spike to nearly 4% in trade yesterday. Then there is Paytm and Pine Labs. Now there's a market rumor of some potential deal happening here. The dealers indicate that Paytm might look to acquire some division of Pine Labs, but do remember this is completely a market rumor or a market chatter that has been going on. There is no confirmation regarding the same. Also, when it comes to solar industries, Hindalco, Radico Khaitan and PG Electroplast, there are buy flows on the large HNI and the PMS desk. Dealers indicate strong Q1 numbers coming in from all the 4 names. And couple of news that we indicated earlier. Firstly, it was Bellrise. We did mention on June 13 that the QIP will be opening very soon, and yesterday the QIP has opened. It will be interesting to see how the demand goes through for this QIP. And Biocon, we mentioned yesterday that all the domestic mutual funds, the big ones like ICICI, Pru, HDFC, Kotak, Axis and SBI were among the top buyers. And if you look at the bulk and block deal data that has come out for Biocon, block deal, all these names appear on that list.
A lot for that, Somit. So certainly some khabars confirmed as well. One of the khabars would have been, and I'm sure Somit spoke about it across the many shows that he does as well, is what's happening to some of those QIP names. And can't not talk about Biocon in that breath yesterday, because there is a negative note today on Biocon. But frankly, Parag bhai, very good appetite. And a lot of people say that it may not come in Kush's radar, because Kush will look at a 10-year chart and say कि अभी तक 10 साल से कुछ नहीं किया तो अभी क्या करेगा. So completely fair, right? I'm asked, and I would probably be of that thing. Let it do something and then we'll think about it. But are there makings of things happening in Biocon?
So I'll tell you.
Such good appetite for the Mylan stake.
Yeah, I completely agree. So I feel that all good investors have bought into it. So they must have seen some inflection point. But from the numbers, what I can say, I don't like to invest in a pharma company which has a debt of more than 10,000 crores. Okay, and which is also done to acquire something, right? So then that whatever they have acquired has to deliver, right? So right now they are sitting at a EBITDA of around 3,500 crores. And their market cap today is 71,000 crores and net debt is around 12, so 83,000 crores. So they are already at 20 times EBITDA or more actually, 23, 24 times. And as you rightly said, this company has not delivered so much, but it might be at an inflection point, which is evident from the interest which it has generated amongst very good quality institutional investors. So I might not be aware of that inflection point. That's what my humble submission is.
Do you own pharmaceutical companies?
Yeah. We own it. So Mankind is there, Sun is there.
So, and what is the thinking behind it? Because even in Kiran Mazumdar Shaw's interview with NDTV Profit, she spoke about the fact that Biocon has gone slow relatively to their detriment on CDMO, right? And so those are the companies that have been doing incredibly well. So what is your thinking when you approach investing in pharmaceuticals?
So pharmaceutical, two things. One is a chronic therapy. So for example, Torrent Pharma has been my old favorite.
Sure.
And it has always given a positive surprise only.
But it's too expensive.
It's too expensive now, so I'll not buy at this price. And plus there is some MSCI buying also. So it's a technical factor due to which it has gone up. So, but I would say a great company by all means, super portfolio, chronic portfolio, which keeps growing. Even this month, IPM data showed that chronic therapies have grown by 20%, especially cardiac. So I would say that that's one segment of business which I would like to own. Mankind is figuring there. Mankind chronic portfolio is increasing now to 40%. And of course, then CDMO plays are there where Divi's is undoubtedly the best. But now it is expensive. So now I'll not chase because a lot of those, because it is trading at 72 times trailing now.
And Citi saying that their target is 9,400.
So basically, see, in some of these stocks, Neeraj, what happens is the person who specializes in that, he can clearly see that direction, that GLP-1 opportunities at the door now. So he can see the inflection point. I might not be able to see it because it is not my area
so then what my takeaway from what you're saying is that if you are not someone who understands the details of pharmaceuticals, then companies that have a good hold over chronic diseases is a safe bet because it's ongoing, everlasting, and only unfortunately going to grow, where people will have more and more lifestyle and chronic diseases.
So diabetes bhi hai na, GLP-1 is supposed to be a big, but
everyone and their grandmother is now in GLP-1.
See, for example, for Dr. Reddy's, for example, when Revlimid was coming off, the big offsetting factor was semaglutide. Now that semaglutide opportunity seems to be fading away for Dr. Reddy. That's why stock has fallen. So there are many things which are not
because
in your control.
Because they had some delays coming in and some issues,
that API impurity and all.
So would it be fair to say chronic but not commoditized, and therefore where margins have been completely eroded?
Yes.
No, but diabetes is still not in. So today, if someone goes to a doctor and says, I'm diabetic, the first thing they're going to do is not give you a semaglutide
that's
prescription.
not the first thing that
it's not the first thing. You're still going to go to your metformin and all of that.
I was about to say, let me ask the resident doctor on this table. No, I know of somebody who's now taking Ozempic or the version of Ozempic. Not because of the fact that the person wants to look thin, but the person is saying that it is also making a big difference to my sugar levels.
No, that is the isn't that the purpose?
It was first for diabetic, for diabetes, for controlling
cosmetic
sugar.
reasons के लिए लोग लेते हैं ना.
So now it's become the wonder drug. Like people say, it helps you even not look at your phone too much. It helps you not shop too much.
Why? Because you're feeling nauseous?
No, because maybe because its basic premise is that it controls your desire for overdoing anything, including eating. So that's what studies are now showing, that it rewires your brain. But let's get back to the focus of today, which is what are the other stocks that you should be watching out for? And Parth has that list.
Yeah, so 4 really interesting names. The first one is Dalmia Bharat Sugar, which has approved an investment of $132 million in a sugar project in Tanzania. Now, this project includes both sugarcane plantation as well as setting up a sugar manufacturing plant. The plant will have a capacity of 3,500 tons of cane per day with a 20 megawatt of cogeneration capacity as well. The company also will be investing an additional $19.7 million in its subsidiary as well. The next one is Belrise Industries, which has opened its QIP issue for institutional investors. The size of this QIP stands at 1200 crores with the floor price fixed at 230.79 rupees per share. The next one is Jain Resource Recycling, which has reported a furnace explosion in the second unit of its Tamil Nadu plant. As a result, one worker has lost their life and several others are injured as well. The production in the facility has been temporarily suspended while the damage assessment remains underway, with the losses being covered under insurance. Lastly, we have Texmaco Rail and Engineering, where the CFO, Mr. Kishore Rajgaria, has tendered his resignation. It was due to personal reasons, and his effective relieving date will be announced shortly. So these are the 4 names that you should keep on your track for the markets today.
Okay. Thank you for that part. We're all about the stocks that you should be watching and the ideas that you should have today. Parag bhai, just in terms of, what else should be looked at, would you say, an interesting comment from Kush earlier, that maybe right now stock specific, as we have been saying, is not the safer bet because uncertainties have come back. Is there a safe space that you're looking at right now?
So private sector banks, I repeat, ICICI Axis, I'm expecting good results on Saturday.
Saturday is the big day.
Itself, yes. And this IT names, after this IBM fall today, if they fall more than 2-3%, then definitely these are the 2 good places to invest. And remember one thing, yesterday US inflation has cooled off.
Yes.
In a scenario where if we would not have been in a war again.
But our inflation is up.
That's okay. Our inflation will come down if oil comes down. It's a simple call, right? If oil comes down, our inflation will come down. So in my view, and of course monsoon also, because food gets
impacted. And core is still at 4.1%.
Yeah. So I am saying that if yesterday US inflation figures they have cooled off so much, then the chances of Fed rate hike would have been postponed and so on and so forth, which would have been very good for equities. The only unfortunate thing is that again we are at war and again oil is above $85. Otherwise, we could have seen a very smart rally with US inflation cooling off.
Okay, sticking with getting you more stocks that you should focus on, and we've got a Kotak Securities note. They've remained positive on Britannia, saying that the company's new leadership is focusing on faster product innovation. What exactly are they saying? What are their targets and what's their call? Mahima joining in to tell you just that. Mahima?
Right, Alex. So they've met the management and they've maintained ad on the counter and hiked the target price to 6175 from 6150 earlier. What they're saying is the new CEO, that is Rakshit Hargave, is aiming to transform company into well-rounded foods player, and the strategy centers on accelerating new product launches. And this, they're doing by focusing on protein-based offerings, healthy snacks and indulgence products. What they've also said is that they're seeing an overall innovation which is aimed at recruiting new customers and addressing additional consumption occasions as well. And something that's, stood out for me in the note was that the management has said that they believe successful execution could drive a 300 basis points acceleration in terms of growth to a low double-digit revenue CAGR with stable margins is what they've said. So this was, I think, the biggest takeaway for me from the note, and that's why I think they've gone ahead and hiked the target price too.
Okay. Britannia in focus. Parag bhai, any view on the FMCG players and Britannia specifically with this monsoon overhang? What was looking quite like a relief last week is not so much anymore. Your deficits have gone up again. The monsoon deficit, which was at 14%, is now back up at 18%.
And plus oil has also gone up.
Plus oil has gone up.
So that is a short-term headwind for FMCG sector, but I would stick to it that Liber, ITC, even Britannia's of the world look very attractive. Marico is doing structurally phenomenally well, least impacted by rural slowdown, least impacted by I would say crude oil also, because they use copra oil mainly.
And that's come off.
And that has come off 45% from the peak. But Marico right now compared to other FMCG stocks looks expensive.
No, but Britannia in particular, because of the new CEO, Rakshit Hargave.
So I have heard this new CEO on the call also. He was absolutely great. He has, I think, come from Birla Opus. And so his focus area was absolutely bang on. So I would back this Kotak Securities.
While we're speaking of Marico, and pre-open rates should be on your screen in just a bit, I just want to complete this conversation on Bajaj Consumer, because the stock dropped as much as 10 10.5% yesterday. I think more so on account of the way that it's run up in 2026, right? Because the numbers were pretty good.
So it is just that the stock has done so well.
Yeah. But what would you do? At what level would this be attractive to you? It's at 600.
I think if it falls another 5-6% should be looked at. But I would like to see that, you know, what changes the management has done to so that they can deliver such numbers.
Interesting. 122% year-to-date Kush, despite the fact that it dropped 10% yesterday and more day before yesterday, if I remember correctly. What does it look like on the charts?
Yeah, again, some cooling off, absolutely par for the course. The last two sessions of downticks have been with fairly healthy volumes, negative divergence emerging on daily and weekly setups. So you wouldn't want to buy now. Again, rounding off the support levels, the first one is at 550. Anything below that is at 515. So maybe around those levels, remains a good buy, an attractive risk-reward ratio. Not at the current moment, but definitely, like you said, an outlier in the pack.
Okay, just want to look at some of the movers as we start off trade today. KEC International, because of those order wins, are looking interesting. LTTS, good set of numbers, right? All things considered, 3% up today. I want to look at what some of the tech pack is doing. Is the IBM effect haunting them this morning? Let's look at a TCS, let's look at an Infosys, let's look at an HCL Tech. Okay, 4% down on a TCS. It's only 9:01, so all of this will settle. Don't be trigger happy in that buy call if you're following what Parag Thakkar is saying. Let's look at Infosys as well, another 3% down. LTTS, like we said, the numbers seem decent. Let's look at Tata Elxsi and Signature Global. Tata Elxsi had a weak set of numbers. Signature Global had business updates, 10% down on Tata Elxsi. Really weak set of numbers. Signature Global business updates seem okay. I want to look at Quest Corp and TeamLease. India has prohibited the import of goods produced using forced labor. I don't think it's going to have much of an impact. This is more of a diplomatic tit for tat in a way because of something that the US has announced recently for countries using forced labor and included India in that list. Textile stocks, the UK FTA is effective from today. I want to look at PDS as well. If we can, you can see some of those textile names up and about, but let's look at PDS. Because there are a couple of things happening with that. Also a tie-up with this company called Busan International. Dalmia Bharat has an investment in a Tanzania project of $132 million. That's about 0.5% up. Belrise has launched its QIP. Let's look at that. And Ather, once again in focus with additional investments by Hero Motor. This is something I think we were talking about as well on your watch list. And
Pidilite is doing okay, I think. It's fluctuating. At one point it was up 3%. It might have cooled off just a tad bit. HSBC initiating coverage 1.3%. We were going to talk about that. Parag bhai, what do you make of this?
So it is my all-time favorite, like Torrent Pharma. So I just find a reason to buy Pidilite, and when crude oil suddenly shoots up, that's a great time to buy Pidilite. That's my experience over the last 20 years.
Why is that?
Because when crude oil goes up, people think that Pidilite margins will go down, which actually they go down, and that is why stock corrects. So you have to buy exactly contra, right? When you feel that crude oil has gone to a euphoric level, you buy Pidilite. That trade generally works.
Interesting. Chandan Tabare joining in this morning. Chandan, very good morning to you. Let's start with the Nifty outlook.
Yes, very good morning. Thanks for having me, Tamanna. So looking at the market, index has got stuck in a broader range from last couple of days. Multiple supports are intact near 50-day MA and key level of 23,800. But market is finding tough to surpass key barrier of 24,250, 24,450. So I believe it may be some more consolidation. It requires a decisive range back out of the current trading band. Then only we can see the next leg of rally. But as of now, the immediate structure is slightly positive with consolidation. So we can go with buy on decline stance. Given the other data internal, put call ratio is comparatively okay. India VIX is near 12.5, 13 marks. FIs are selling. There is a concern. Crude and USD INR are key reasons. But as of now, as market is in a range, we would suggest to go with buy on decline with major support at 23,800 for a bounce towards 24,250, 24,450. So mixed set of cues with these levels in this market scenario.
And then, very good morning. What is the view specifically on the Nifty Bank? And one, that's two. Two, what do you think about individual stocks in this kind of a market?
Yeah, good morning, Alex. So yes, talking about Bank Nifty, which really outperforming the last series by around 4.5%. We have seen short covering, but now the momentum is missing. In fact, from last 20 trading session, the Bank Nifty got stuck in a range. In fact, from last almost 10 days, it got stuck in between 56,500 to 58,500. Declines are being bought, but multiple hurdles are not allowing the Bank Nifty to move on higher side. So I believe some more range bound bias could be there. Immediate support is at 57,000. Upside bounce could be there towards 58,000 to 58,250. So mixed set of cues with range bound bias in Bank Nifty as well. Now, if I look at the stock specific idea, first is buy on Divis Lab. In fact, we are positive on the selective pharma counter, and Divis Lab has given a major consolidation breakout on the daily, weekly, and the monthly chart. In fact, this consolidation is happening after almost 40 days of long consolidation. On last day, it witnessed a huge surge in trading and the delivery volume. So with support near 7,050, one can buy for an upside target towards 74.50 and 74.70. Apart from this, positive view on counter like Lotus Lab or Apollo Hospital. So somehow positive on the pharma and the healthcare, and recommended Divis Lab as a top preferred idea. Second trading idea, that is buy on Adani part. In fact, most of the Adani counters have seen the decent recovery on the last trading session, somehow giving a consolidation breakout, whether we talk about Adani Power, Adani Energy Solution, Adani Green. But here I'll suggest to go with Adani Power, looking at the positive price pattern, which is happening after the long corrective and consolidative move of last 30 days. It took support near 50-day and formed a bullish belt kind of candle. So one can buy with support of 220, and this counter can head towards 235. So Divis Lab and Adani Power could be two preferred idea, and positive on the pharma and Adani group of companies.
Okay, and we are going to do a conversation on the rupee with in just 30 seconds. But Kush, because we're on the topic of the stocks, Adani Green had a big move yesterday. Do you like it on the charts? Chandan is constructive with Adani Group stocks.
The entire pack's doing well. This one too, by the way, and this has had a breakout on a daily setup above 1565. So as long as that is maintained, I think you should continue that long trade on Adani Green. No worries.
Okay, Anindya Banerjee of Kotak Securities Johnson to talk about the rupee. And Anindya, good morning. Thanks so much for joining. Sorry to keep you waiting. Just had to finish a couple of these chats. But, despite the measures that have been taken by the powers in place, somehow the rupee strength has failed to hold on, isn't it? We're back to sub 96. I mean, today may be a slice of green, but it's largely not been on a trajectory of strength. Why is that the case?
Oh, very good morning. Yes, actually, Indian rupee is still waiting for that impact from the positive impact from the FCNRB flows. Although we have actually seen the improvement in the FPI flows, equity is now positive for the month, and we have been seeing for the last 45 days a good improvement in the debt flows on the FPI segment. But that's not enough to basically counterbalance the demand which is coming from higher oil prices through the oil import bill, because the oil is back above $84-85 on the Brent and is looking to move higher. So, but we expect that as we get near to that deadline of 30th of September, this FCNRB flows can pick up, because the interest rates which the banks are offering, 7 to 7.5% on dollar deposit without any currency risk, I think that is still very attractive. They're offering leverage structures, so that makes the overall return significantly higher on the dollar. I think we could see a significant pickup in the flow. So the original estimation that $40 to $50 billion could come in, if that materialized, I think the Indian rupee could see some appreciation.
Follow up, is that appreciation going to be capped though? And are we more likely to see a consolidation at levels close to 95, 96?
It depends on how fast the oil prices rise. We don't anticipate that we are going back to $120 again, like we saw a couple of months back. So the pressure from the oil won't be that significant. But at the same time, we don't also anticipate the RBI to step in and start mopping up dollars at 95 to prevent an appreciation, because the RBI would be comfortable to see the rupee appreciate towards 94 or 93. So it looks like even the interest rate, its cycle expectation of the Fed is playing out on the rupee through the dollar index, because the dollar index is around 101. So that is also playing. But having said, having considered all of that, I think once the flows pick up, because these flows are going to be quite bulky. We are talking about 40-50 billion over a very short period of time, 2 months. So that can give some strength to the rupee.
Thank you so much, Anindya. Great to have you with us this morning for that quick view coming in on the rupees. The rupees seeming to do okay this morning. But let's go across to Sharad, who has the big brokerage call of the day. Sharad.
Well, yes, we are talking about the technical up move coming in the Adani group of stocks, and that's why I have picked up Adani Ports also. HSBC has come out with this report. They have given a maintained buy rating, but the target price has been hiked, almost 10 to 15% of hike coming in. Now, the price is at 2,200 rupees per share, and they have stated that it is de-risked right now and acceleration is happening across all the operational parameters. The governance risks have eased, and the deleveraging, better disclosure and compounding operations can support further re-rating into this stock. Now, the FY31 target is anchored by above market organic domestic port growth and geared to have a strong container and growth going ahead. And also the bullishness is coming in from the unit economics expected going ahead. And that's why the bullishness is coming for Adani Ports.
Okay, standard disclaimers here. You're watching this report on NDTV Profit, and NDTV is a subsidiary of AMG Media Networks Limited, an Adani Group company. The entire space, and Chandan Taparia spoke about Adani Green, but we own an Adani Ports.
No, that was my call on Adani Green. So 1565, we mentioned that as the a breakout level. That should be your stop loss. Adani Ports, we know structurally has been strong, has been an outlier for the bank, but right now consolidation, no signs of breakout. So I would actually maintain a hold on this. If you have a position, you can continue holding with 1770, 1750, that range as your stop loss. But momentum missing, so I wouldn't really buy into it from a momentum perspective.
Chandan, IT looks like it's going to open gap down. Are there opportunities that you would find in particular stocks?
So IT witnessed some recovery in last few days, but trust me, the setup is not that clear, which can provide me the sense of the momentum to pick up. So better wait and watch. If we have to pick two names in IT, I'll focus on Coforge and Oracle Finance. Otherwise, better to wait and watch, let them settle to form any positive price pattern before it start the next leg of rally.
Quickly look at Sheela Foam, and an Investec note on it has raised some concerns. That stock just about 0.35% down. Now look at what Biocon is doing after its huge up move yesterday after that Milan clean out trade and the question mark that Bernstein has raised. That stock completely flat this morning. I want to look at in KEC International with its order wins. That's looking decent. Dixon Tech, another one which is on brokerage radars and positive views coming in there. That's 1.5% up right now. Let's look at Britannia. Kotak is pretty positive on it. And look at what that stock is doing. That's also about 0.5% up right now. And then Pidilite, we should look at very quickly with that HSBC initiate coverage on it.
Yeah, that too. And a lot of other stocks. So let me try and nail it down to that one top idea for the day. So the first one to Chandan Taparia. Chandan, what is the top call for the day today?
Yeah, so I'll focus on Divis Lab. The strongest price pattern, margin of safety, defense is in flavor. So Divis could be on focus with support of 7,050, looking for 7470 plus.
Kush Bora, if you had to bet on one top stock today, which one would that be?
With the caveat that stay light on stocks, it will be Chalet Hotels that we've mentioned, 880, 910 targets to reiterate, 830 stop loss.
Okay, so those are the stocks that you should watch out for this morning. Now, what the setup was, of course, is that we were expecting there to be just a flat opening for the benchmark Nifty 50. Where would there be pressure? Based on what you've seen in the IBM commentary, you can expect that the Nifty IT will open gap down. And in all probability, the stocks that will be at the bottom of the list when we look at the heat map for the Nifty 50 will indeed be the IT frontline companies, which have gained a little ground, one must say, in the recent past. Where do we open this morning? Possibly with marginal gains, just about flat for the benchmark Nifty 50, just above 24,100 at the start. And I'd be curious to find out what the IT index is doing. The Bank Nifty is up about 0.5% or so. IT is down 1.6%, and this is where the pressure is. We'll look at the heat map for the Nifty 50 in just a bit. Let's pull that up, in fact, and talk about the breadth. The breadth actually does not look too bad in the broader markets. High beta counter Shriram Finance is up as much as 1.7%. It was losing ground yesterday. It tends to do that significantly so whenever the benchmark loses ground. Financials seem to be doing okay today. Bajaj Finance, HDFC Life up and about. Indigo lost a little bit of ground on account of the spike in crude oil prices. It's back up. Axis Bank, a couple of other names in the pharmaceutical space also doing okay today. Adani Ports about 0.5% up. You saw the HSBC note. On the bottom of the screen, it's all tech. TCS, Tech Mahindra, HCL Tech, Infi, Wipro. It's the pack of IT companies that is in the red. Pull up the contributors chart for the Nifty 50 just to see what the weightage and the impact of that is. And you see a couple of strong moves by the private sector banks and other financials as well. Bajaj Finance and also Reliance Industries fitting into this list just a tad bit. But all of these others that are proving to be a bit of a drag this morning, Tamanna, are the IT companies.
You know, I would say it's not as bad as what would have been expected, considering the way IBM cracked and some of those ADRs cracked. And if you look at it, you're looking at the crude sensitives back up. Brent is still at 85, 86 odd. So the tolerance level to that also seems to be improving. On the other hand, look at the advanced decline ratio. Let's pull that up if we can. And also let's look at what the broader markets are doing this morning. Advanced decline ratio looking quite positive. So we should actually look at where the action is. In the Nifty mid cap 150 about 0.5% up right now. You have the small cap 250 also 0.5% up right now. So you have the action in the broader markets. The India VIX has cooled off a fair bit, and pull up the India VIX very quickly, about 2.5% down, under 14, in fact 13.43. That's a good number with everything that's happening around the world. So that's showing resilience coming in. Let's pull up the sectoral heat map, and you might have the Nifty IT at the bottom, but it could show signs of recovery because it's only 1.5% down. You've seen worse for IT on smaller triggers, if I could put it that way. Private banks are ruling the roost today, just 0.67% up. Financial services about 0.79% up, and largely green on the screen. So I would say it's a cautiously positive market this morning, if I were to describe it very simply. Let's look at specific stocks and what's happening there. And KC International first on our list. They've got significant order wins, about 4% up on that stock. I want to look at some of the textile plays because that India-UK FTA comes into effect today. Good for textile companies. Positive, but I think most of those gains have already been priced in for a Trident, a Welspun, a Gokuldas, for example. A PDS, they have a tie-up with an Indonesian company. Yesterday there was a tie-up with a French company. That stock about 5% up this morning, was on our watch list as well. So was Aether Energy with an additional investment coming in from Hero, 4% up on Aether. Results impact, you had LTTS, which posted results were pretty decent. The stock was doing better in the pre-open session, is positive but muted right now. Let's look at Anand Rathi. Results didn't really excite the market, 3.5% down. Tata Elxsi had a rough start in the pre-open session and continues to do so, 5% down, and so does Jindal SAW. I want to just relook at some of those IT names, and apart from a TCS, Infosys and HCL Tech, what a Persistent and a Coforge are doing. TCS about 2% down right now, but a Persistent and a Coforge also about 1.5%. So between 0.5% to 2.5% is the range where you're seeing the crack in IT overall. I would say that's not too bad for the kind of commentary that came in from IBM and the stock impact that you saw.
Yes, indeed. Yes, indeed. And holding out well. So maybe that's the quick opening question. Chandan Taparia, this weakness is not very pronounced, but is there a trade in any of the IT names? Therefore.
Yeah, so like Nifty witness recovery, there is a good part that somehow the immediate support near 24,000 is being respected, but we need to look at 24,224. If I look at the Nifty IT, somehow this Nifty IT is down by around 1.5%. We have not seen major recovery, but if I have to pick the name, I can I can explore the counters. So again, I'll focus on the COFORs if I have to pick one. So looking at the price setup, as of now, it has support near 1485 or 1490. With that, it can bounce towards 1570 something. But I think we just need to look at more stability in the counter going forward.
You know, a couple of stocks in the broader markets doing particularly well. Of course, we'd marked Nuvoco Vistas on the back of its earnings just a short while back, earlier in the week, in fact, where it posted, if I remember my numbers correctly, a 20% uptick in the PAT, despite a one-off hit. And the margins had remained pretty stable in the quarter gone by. It's up about 7.5%. What would you do on the charts, though, Kush?
So, Alex, especially in the context of the market that we are in, it's a good idea to take some money off the table. If you believe that, this is perhaps going to do much better than at least partially, I would actually book 50% profit, if not more, in this stock, hold the rest with a deepish stop loss close to 345, 350 zones, but not a bad idea to take some money off the table. I want to quickly mention one stock which was mentioned by Parth and Somit both, which is Bellrise. Mind you, this has been our call. This has been one of the preferred stocks in this space. Just doesn't seem to crack, right? So if it does, if you get any kind of dip towards 220 levels or maybe just under, just keep accumulating, Bellrise from a medium to a long-term perspective as well.
Very interesting. By the way, a few more stocks in the broader markets. Tejas Networks doing well. Apar Industries, Aegis Logistics, all gaining over 4% at this moment. And by the way, Hyundai Motor doesn't really move the needle too much usually in a big way, but today it's up as much as 4%. On that note, gentlemen, Parag, Kush, as well as Chandan, thanks so much for taking the time. Pleasure speaking to all three of you this morning.
Thank you.
All right, let's talk about the real estate sector, and it's gained quite considerably. How much, you're wondering? Let me tell you, it's up 20% or nearly 20% in the last 1 month. And this amidst expectations of a revival in demand and also the data center theme that is emerging as what could potentially be the next engine of growth. Parth joining in to set the context before we head into a more deeper conversation and we'll take this forward.
Absolutely, Alex. Data center is indeed becoming the next growth driver for the real estate sector. And this is because India's data center capacity is expected to grow from 1.6 gigawatts right now to over 15 gigawatts by FY35. That's over a 10 times increase that we are expecting. The built-up space requirement is expected to rise to almost 160 million square feet, and data centers might occupy 11 to 12% of the grade A leased office spaces. So that's a huge thing as well. The developers with land banks and powered shells are expected to benefit from this trend, and the top beneficiaries might be number one, Anantraj, which is a direct data center operator targeting capacity of 357 megawatts by FY32. The next one is Lodha, which has a 400-acre Palava data center and is also targeting 2,000 crores of rental run rate by financial year 2032. Also Mindspace, which has a 150 megawatt portfolio for Princeton Digital, and lastly DLF as well, which is expanding its power shell capacity in the city of Noida. So this is the entire outlook about the real estate space and why it has run up a lot in the recent time as well.
Very interesting. All right. Thanks so much, Parth, for that. I wonder whether the data on the pre-sales that you've seen, where it's been a bit spotty for a couple of companies, is something to be concerned about, though. We've got Murtuza Arsiwala, who's Director Research at Kotak Institutional Equities, joining in to talk to us about that. And he tracks the space very closely. We've been looking forward to speaking to you, Murtuza, about this space. So thanks so much for taking the time. Alex here. Good morning. What do you make of the recent uptick, right? Is it driven by an anticipation of a revival in demand or strong demand in the residential space, or, as my colleague was pointing out, some interest in how the data center theme will play out?
Sure. So let me put it this way. Obviously, come March and the entire West Asia conflict did have an impact on stock price performance. As some of those tensions ease, and really we are taking it one day at a time, but as some of those tensions ease, the concerns that sales will falter sort of pushes back. And that's primarily, to my mind, the reason why the revival in stock price. If you look at it point to point, pre sort of the war situation to now, you've not actually noticed as much a movement. As far as pre-sales go, they've been all right, largely resilient. there is not enough data to suggest that, global conflicts lead to a sharp drop in home sales. While that is the general perception, the reality is home sales have been fairly resilient. In fact, if I look at the numbers for April and May of 26, they are far better at an industry level than what we've seen in the preceding years. So actually a lot more resilience on home sales. Some of the companies that have reported so far, Shobha had some fairly fantastic numbers to show. Oberoi, with their launch in Gurgaon, I think pretty much record sales at their latest launch in Gurgaon. So while early days, but the numbers are showing resilience, some amount of consistency, which is leading to that strong price movement, really.
So what I'm hearing essentially is that it's sentiment driven to a certain extent, because the easing of the conflict is what we witnessed for the most part of the last 1 month, which is the time frame that we're talking about, right? And so to a certain extent, one can assume that played out. The question that I have, though, Murtaza, is on, and we've talked about the volumes and we talk about the sales, and therefore that has an implication on the top line, but there would have been increase in input costs, and to a certain extent also because of certain disruptions that the MMR pocket has witnessed in construction for various reasons, the NCR region they've witnessed for various reasons. There would be an implication on timelines as well, one would assume. So do you anticipate that will have a bearing on financials?
Not really, Alex. If you think of a typical life cycle of construction for a home project, you're talking of a period which is 3 to 4 years. The conflict has lasted a few months, right? Typically, early monsoon in various parts of the country, when there is a water shortage, it's normal course of business to slow down construction. In any case, if you had a very aggressive monsoon, construction moderates, the pace of construction moderates. You have similar situations in the north, when you have the pollution-related concerns where you have some sort of stoppage of construction. So it's par for the course to have some amount of disruption. As far as cost inflation goes, you need to appreciate that the construction cost and the overall sales price would be probably between 25 to 30%. Obviously, it would vary from project to project and market to market. Again, that construction cost is spent over a 3-year period or so. So temporary disruptions, short time frames do not, given that you're looking at an execution cycle which typically lasts about 3 years. Yes, it would not be in order to say there is no implication, but I think it's something which can be very comfortably absorbed in the overall scheme of things.
Murtaza, hi, good morning, Neeraj here. Been a while and really good talking to you today. So I'm just trying to understand, do you now bifurcate your preferences amongst regions? Because if IT was in a boom at a point of time, I remember, maybe not you, but the space at large was, okay, let's look at the south-based real estate names because they're the yield, etc. All of that is looking good. Is that still valid, or now it's very, very bottom up? And if that is the case, how does one zero in down on what is doing well? Is it very bottom up?
Morning, Neeraj. The irony of all of this, while, before the West Asia conflict, we were dealing with implications of AI and what potentially, IT job losses or the impact on the job market in IT could mean for Bangalore. And the irony is, if I look at FY26 or even the first few months of FY27, Bangalore is the market which has actually done much better than most other markets. So while there is concern, there are macro concerns around it, the underlying reality is that Bangalore as a market has done very well in the last 12 to 15 months, right, in terms of home sales. So it doesn't connect the dots. If I were to look at office leasing, that continues to be extremely good. So while we're concerned about AI, while we're concerned about job losses in the technology space, Bangalore obviously is a hub. But if you look at office leasing, right, in the country or Bangalore in particular, you'll see that office leasing is at record levels, right? Your occupancy levels are at record levels. You've gone past your pre-COVID occupancy levels. So the office market, which possibly should be a reflection of the job market, looks extremely resilient so far. I'm not saying that it couldn't turn the corner, But so far, things fantastic. If I look at home sales, therefore, in Bangalore, they've actually been more resilient than most other markets, including the price actions in Bangalore. So, there are certain macro sort of concerns. But if one drills down to, what's on the ground, what's happening with companies, what has been the business performance, you actually realize that things are not all that bad. I'm not saying everything's rosy. I'm not saying everything's, we're hitting record sort of sales, but it's not as bad as the market seemed to perceive in the last 3 or 4 months. And I think it's just that realization that the underlying performance has been a lot more resilient relative to what stock price indications were, is possibly leading to that rebound in stock price performance.
Maybe you answered that in part to Alex's question, and therefore my follow-up is, in such a not so rosy scenario, it almost seemed that the only way to play the India data center play was through real estate companies and people. I mean, Anand Raj was right at the top of that list, but some of the others came up as well. Is that still a valid argument, or do you reckon, no, let's not mix the data center opportunity with buying real estate names? There are maybe other real estate names which do better otherwise.
Sure. So let me put that in perspective. Your colleague Parth put out some data points from a note we had previously released. Anand Raj is substantially focused on data center, right? So a large part of its sort of valuation would comprise how they scale up their data centers. They have a small presence so far, but they've got larger and more ambitious plans. When it comes to Lodha in the overall scheme of things, maybe it could add another 10 to 15% in terms of value. But it's valuable, right? Lodha currently has a smaller annuity portfolio and a very large land bank, mind you, right? If they're able to better monetize the Palava land parcel, aside of everything they're doing in Palava from residential and warehousing, it's good monetization. They're looking to use the land to build their own sort of shell, right, which gives them a steady sort of annuity. So you'll have a company which would possibly, they're targeting outside of the data center opportunity 15 billion out of annuity. And maybe the data center, which probably gets self-funded by the land sales that they make, add another 15 to 20 billion. That's a sizable annuity where there is not a very meaningful annuity stream currently. That gives a lot more stability to their cash flows as opposed to being dependent entirely on home sales. And maybe the next time there's a crisis, you'd be a little less worried in terms of what it means, because all of their dependency is on home sales. So it builds a credible sort of annuity portfolio. It helps it monetize the land bank that they have. The other two names that you sort of pulled up, Mindspace, DLF, their data center presence is small. Again, one needs to appreciate when we're talking about data centers out here. Some of them, like so far, Lodha, what they've done is they've sold land to a sort of hyperscaler who is looking to build a data center. Again, up to what stage are they investing in data centers? So most of them are really, they're going beyond the land to sort of build the shell, which can be leased out. They're not going the whole hog in terms of the entire value chain in terms of investment, which is good investment. Data center will provide a more longer tenure sort of annuity stream. In terms of yield profile, maybe comparable to what they're doing in an office, but in office, there are other sort of considerations that come into being. There's a lot of people movement that needs to be taken care of, et cetera, et cetera. With data centers, you're really warehousing servers and CPUs. So it's additional valuable income streams where amongst other technology players, even real estate can play its part.
Very interesting. Murtaza, always an absolute pleasure speaking with you. Thank you so much for taking the time and look forward to having you on more often.
Sure. Thank you so much, Alex.
All right. Take care. All right. It's time now to go across to the management of L&T Technology Services. They've just posted their Q1 numbers and pretty good, actually. So therefore, the stock is up about 2%. Let me go across to Hiral now. Hiral?
Thank you so much for that, Alex. It's an interesting set of numbers because the quarter has been ahead of what the street was estimating. Now, you've seen an improvement coming in not only on the revenue front, but also on the margin front on a year-on-year basis. Your constant currency growth, if you see, is up 1.5% on a sequential basis. Two aspects. Your mobility segment that has returned to growth. So that is one of the key positives. And number two, the sustainability-led business is also up. In fact, let's get in. Alin Saxena, Executive Director and President, Strategic Initiatives and Growth Markets at L&T Tech, to join in. Welcome to the show, Alinda. Always a pleasure to speak to you. Strong first quarter. The question is this kind of growth sustainable through the rest of FY27?
It's a good question. And obviously, you've gone through the results, you have an understanding. See, I would break up that question in three parts. So one is you got to look at, when we look at our organization, we break it into three segments. So that's mobility segment and tech, and which is how I would answer the first part. The second is I will talk a little bit about the things that we are doing differently in these sectors, which are making us happen. And third is we'll talk a little bit about the customer behavior. So if you look at our story for this quarter, we have shown positive growth, 2.3% growth in our mobility sector, and which I think is very encouraging. And then you must understand that when we look at our mobility sector, for us, the diversification strategy helps. So we are not just talking about automotive, which is, of course, the most visible part of what we do, but also trucks on off-highway and aero and rail. And all three of them make tremendous contribution towards mobility as a segment. So we are seeing traction in two of them. And the third one is also that we are seeing traction, maybe not to that greater degree, but it's still a very positive story that we see. So mobility will remain positive, that would grow. If you were to look at the next sector, which is our sustainability sector. So sustainability sector has been a story for, I would say, the last 4, 5, 6 quarters. And we grew year on year, as well as we grew about 4.3% this quarter as well. So that's a continuous sector growth strategy which is there. And you got to look at it at the back of the fact that there is enough demand in the market, especially because of data centers, the modernization of the refineries which is happening, and also the energy consumption which is going up through the roof. So all three of those are creating that demand, which is a good tailwind for us as we are going through, right? So that's on the sustainability side. And then on the tech side, if you were to think about tech as semiconductors and communications, so we are going over there. There is software and platforms where we have seen things move. Part of that because of the acquisition that we did. So things are moving. We had one program which came to a logical end, and a slight delay in picking up the next one, which we're very confident that we should be talking about it very shortly, and there'll be a couple of deals that we will announce shortly in that area. So we remain positive about all the three sectors which go back to the growth story.
So talk to us about mobility, because that's a segment which has shown recovery. Now, is this turnaround driven by, say, a short-term project completion that has happened during the quarter? Or, is the European automotive client stabilizing their long-term research and development budgets? Because there are other companies who've said that OEMs in Europe are on a slowdown.
No, it's a broad-based thing. And again, like I said, we look at mobility as aero and rail, trucks on off-highway, and automotive. And, if you think about our spread, we are not a geography organization, right? So North America is one geography. We have Europe as another geography, and we have Japan and rest of the world as another geography, right? So it's fairly broad-based. And if I were to take a minute and give you a commentary, North America actually grew for us in all the three areas. Europe was flat for us. These are numbers that we have reported. Europe was flat for us. But then the Japan and rest of the world grew for us as well. So we are seeing the growth story across the different geographies. And Europe will take, maybe a little bit more time to stabilize as the OEMs and the tier ones get that story right. But there are consolidation deals in the market that we are bidding for, and we're confident that some of them will come through. So that may turn around to be a very different story going forward as well.
Okay. Now let's talk about the deal wins. Large deal wins have been substantial in terms of this quarter. So when will they actually start contributing meaningfully to your reported revenues? Because a 1.9% year-on-year constant currency growth is what we've seen this time around. So what, all of them will be in the near future?
Yes. So, good question, and obviously you've done your homework well. No, see, I'm fairly confident, and I know that of the 767 deals that we declared, we have got 3 of them already starting to contribute, and we have got teams flying in there and engaging with the customers to get the revenue up. So that's already happening. The others should ramp up fairly quickly. All the 7 deals that we are talking about should ramp up in the next, I would say, a couple of weeks to an extent. Of course, they will go through their ramp up, and there will be scaling of the deals that will happen and scaling of the revenue that will happen. And that happens over a period of time. But we should see them come around by the time we're done with Q2. We should see several peaks on these deals, and then they'll continue to grow from there. So, and then we're not just talking about these deals. We have got a few more in the pipeline, which we spoke about, especially in the tech sector. So you would see those deals also getting announced. We are hoping in the early part of the quarter. And then they will also go through partially an immediate ramp up and partially a gradual ramp up as well. So we're fairly positive about what we see ahead.
Okay. And in terms of your current deal pipeline, how is the AI component panning out? How much of it is going to be AI?
Every deal that we are bidding on, if it does not have an AI component, there are 0 chances of winning that deal. So AI is inherent component of every deal that there is. Every solution that we deliver, it's part of it.
So would you be actively evaluating any AI focused acquisitions, after that strong start that you've seen in FY27?
See, it's a process, and as an organization, we are well aware that we are there in multiple geographies, and there are nuances about each of these geographies which are there, and there is a very close thought process that we have always had to be closer to our customers. In fact, I don't know if you caught that, but we opened up our AI center in Munich very recently. And we had some of our top customers, top global automotive customers come and open that center for us because they're right there and they work very closely with us in that space. So we look at, we are always scanning the market. We are always embedding ourselves close to the customers, and that drives what we do next in which technology and which area. We are not committing to anything yet. But we are keeping our options open to see what it takes. But right now, our core focus is to build on the partnerships that we have created, build on the solution that we have created. In fact, with MIT Labs, we have actually stepped back and created a consulting assignment that, we have created a maturity index because customers come and ask us that, I see all this AI, but tell me, am I ready to take this journey on AI? And am I putting the right building blocks in place to be successful in that area? So along with MIT Media Labs, we have created this consulting assignment, which we have now taken to quite a few customers. We are working with them to define on what their maturity is and then what steps that they should take to be able to progress on the path to success. And of course, the unspoken thing is how can we play a real role to make sure that that happens. So we are excited about the moves that we are making, the investments that we have made in some of these partnerships and solutions. And we're going to double down and focus and make sure that they start accelerating the value that we are creating for our customers going forward.
Okay, so I think acceleration, new strategy, turning the leaf is the key from here on as well. But thank you so much for joining in. It's always a pleasure to speak to you. Tamanna, it's interesting to see the stock also almost at the highs of today, 4% up move coming in there. And the interesting part is, you had a KPIT which came out and said that Europe is something which is a concerning area. But L&T in the mobility segment, which has seen a turnaround, is not really worried about Europe right now to that extent.
Yeah, definitely that sharp stock move while that interview was on, Hiral. Let's keep the corporate focus on the development next. The company that we're speaking to, it's in the spotlight as it's aiming to strengthen its growth platform with a capital raise while approving an allotment of 59.7 lakh shares. But before we understand what's new with the development, post this fundraise, KL Bansal will be speaking with us, the company's chairman and managing director. Parth is joining in to tell us the latest on the company.
Right, so let's start with that capital raise itself. D Development has raised around 300 crores by allotting almost 60 lakh shares at an issue price of 502 rupees per share. Now, this matters a lot because in FY26, company had announced that they have now completed their biggest ever capex cycle. Their Anger fabrication facility and seamless pipe plants are now both fully operational, and management is now expecting stronger asset turns and better cash generation from both of these plants. The focus will now be shifting from capex earlier to execution and profitability now, with lower debt and improving return ratios being the key focus of the management going forward. Their order book is huge as well, currently standing over 2,400 crores, with year-to-date order inflow standing at almost 800 crores and June order inflow almost 100 crores as well. So the capex and setting up of the facilities has now been completed, and now the focus area will be on the improving the operating leverage for the company, and that is going to be dependent on the execution that the management puts out in the upcoming quarters.
Absolutely. KL Bansal, Chairman and Managing Director, with us, and will answer some of those questions. Mr. Bansal, very good morning. Let's start with the purpose of this fundraise and how you mean to deploy this capital.
Thank you very much and good morning to all. The primary purpose of this fundraise is to reduce the debt levels. So we shall be using almost 225 crores out of the fundraise to repay our existing debts, and the balance 75 crores we shall be using it for general corporate purpose, and it will have some element of little bit of capex also, but primarily it will go for general corporate purpose. And with this fundraise, we do expect that our finance cost will drop drastically. It will help us in giving good returns and improving our return ratios and all those.
Why the focus on debt reduction at this juncture, Mr. Bansal? I'm not saying that it's a bad thing, but primary purpose of your fundraise seems to be debt reduction and then general purpose, and you're seeing a little bit on capex. Why this requirement, in your view, at this juncture and this stage for the company?
We are growing almost at 20% CAGR basis, but we are expecting at the same time that the requirement in the market and the potential in the market is much bigger. So we have been telling earlier also that if the growth remains at 20%, there may not be much need for additional facilities or for additional debt raising. But we do expect now that we should be surpassing that 20% CAGR target, and plus we are targeting very seriously and very hard on some new sectors like nuclear sector, which is going to an upcoming and highly where there are high opportunities for growth available. So we are trying to be ready before that particular order flow hits our order book. So that's the plan. So we are trying to take preemptive or advanced actions so that if we require in future, we should be absolutely ready, and then we shouldn't be looking for funding from here and there.
Okay, so just to understand this, to prepare yourself for newer opportunities like in the nuclear sector, you want the ability to raise funds at that point if you need to. Just tell us a little more about these opportunities and the kind of funds you may have to raise in future as well, and on the debt side, I presume.
No, I am saying we have no plan to raise further debt for at least 3 years. So,
Okay.
whatever debt, whatever fundraise we have done at this moment, it is primarily with an eye for further growth, which we are eyeing in the nuclear sector and some other sectors like data center and similar such sectors which are coming in huge numbers actually, and the opportunities are huge and very very big. I will put it like.
Much of this 300 crores is going towards this right now? Data centers
Yeah,
and
right
nuclear
now we
centers.
are assuming doing the debt reduction, but our limits will stand as it is. So tomorrow if we need it, that fund is available handy.
Mr. Bansal, good morning, Neeraj here. In the con call that you guys did in the month of May, you had mentioned that now a large portion of your capex cycle is behind you, and therefore you will actually see better asset turns, stronger cash generation, and improved return ratios. So therefore, while you say this about debt, would it be safe to assume that with the better cash generation and this debt reduction that you've done, you will not need to raise any equity as well for these newer opportunities over the next 12 to 18 months?
Definitely, yes. That's the answer.
Longer than that also possible?
I am saying around 3 years, I don't expect any further fundraise.
No equity raise as well?
No equity raise, yes.
Okay. And then the second part of my question, therefore, sir, is this, that if you indeed have these capex cycle behind you, but tapping into newer opportunities, what's the kind of growth rate does it lead to in your mind for the near term, which is predictable, which is FY27, but based on your initial assessment of how much you benefit out of the newer opportunities for FY28 and 29 as well?
So, this year we are definitely expecting that we should be growing at around 20%, which we were earlier saying 20%. And from next year, we do expect that with the very healthy order book and very healthy inflows also, that we should be growing at least at the rate of 30%.
Can you repeat that again, Mr. Bansal? 30% you will hit when?
Next year, 28, 29.
And is that going to be sustainable over a couple of years, or will it only be in 28, 29?
Next 3 to 4 years, it's very well sustainable.
Understood. Good morning. I didn't wish you, sir. My name is Alex, and thank you so much for speaking to us this morning. So, just want to get a sense on the trajectory for EBITDA as well, because if I look at your EBITDA performance from FY23 to 26, it's been in an upward trajectory. From what I can see, you had a 12% or thereabouts EBITDA margin in FY23, and you've upped it to 17% in the previous financial year. Please correct me if I'm wrong. And based on what you're saying, your capex is done, certain other finance costs, all of that is going to be going down as well. Give us a sense of both operating performance, operating margins, as well as the PAT margin. How do you expect that to go?
The EBITDA margins, our expectation and as a matter of fact, the guidance to the market is that for FY27, we should be doing minimum 19% plus, and going forward by 28, by 29, we should be touching around 22%.
Touching what, sir?
22.
22%. What is going to drive this expansion in the margin, Mr. Bansal?
Primarily, I will say the operational efficiency, that is going to be the major driver. Plus, the moment we increase our top line, our proportionate expenses percentage decreases, and it helps in improving the bottom line at the EBITDA. I mean, these are the natural things, because the growth which we are going to do, it's going to have a lot of operational, it's going to give us a lot of operational leverage. Plus, since we have already commissioned our Anjar plant, we have already started seeing a lot of benefits in terms of operational leverage as far as the labor expenses are concerned, operational expenses are concerned, logistics costs are concerned. We already started seeing that, and it's getting reflected in our books right now. And then major other factor is that since we are primarily doing a lot of coal-fired boilers this year, so the turnaround cycle in coal-fired boiler critical piping is comparatively much lesser than oil and gas piping. That is also going to help us in improved cash flows, and improved cash flows mean your other expenses will fall down, including your purchase prices, including your interest costs and all those costs. That's going to help us.
So that is exactly what I wanted to ask you, Mr. Bansal. If you can give us a sense of the free cash flow generation in FY27 and onwards, if you're saying that your finance costs are going to go down, your margins are going to go up, upwards of what, 22% in FY28-29 itself, that would result in a significant increase in free cash flow generation, and your capex is done. So what are you going to do with the money?
What we are going to do with the money is, ultimately we will look for some more opportunities. We will look for some acquisition, but right now it's not on the board at all. It's right now nothing on the plan. But ultimate aim is that we have to be, first of all, a debt-free company. That's our motive. So let's hope that it happens sooner than later.
So once you get to the debt-free position, Mr. Bansal, do you expect a stronger free cash flow generation?
Definitely, yes.
Okay. Talk to us a little more about this Anjar facility. You talked about how it is now operational and contributing as well. Can you give us some more details on that? Like in terms of contribution to your balance sheet right now, what is the kind of operational capacity you expect over here going forward?
This year we are expecting that this unit should be generating almost around 40% or around 35% of our total balance sheet from this particular plant.
35% from Anjar, yes. And you expect this to scale up?
From?
You expect this to scale up further since this is year one you're talking about?
Yeah, ultimately it will be above 50%. Ultimately this facility will be above 50%.
Okay. You spoke earlier, just one follow-up, you spoke earlier in passing about the data center opportunity, etc. Can you specify a little more on what is the extent of that opportunity that you are right now, I suppose, looking at and, maybe talking to various people about?
We are talking to few firms, but still it has not really materialized. It has really not, moved with the speed which we were expecting. But, 2-3 inquiries are still live. But, we have still not been able to, encash that particular opportunity. But at the same time, I will say, ma'am, that since we are quite full at this moment, we are just trying to select the orders which we really can do it within this financial year or within the capacity which we have it. So, we are trying to be a bit choosy. I mean, I'm not saying that we are going to say no to most of the customers, but we just want to be choosy so that, our main strength, our main focus will be timely execution and customer satisfaction. That's what our tagline is, and this is how, we wish to operate, and this is how we wish to, continue to serve our customers.
Okay, we're going to have to wrap it up here. But Mr. Bansal, thank you for this extensive conversation and answering all of our questions on the show. We look forward to more deeper conversations in the future. That's day development, and the stock seeing a spike as well as we've been having this conversation. But I mean, the real spike today is in a company called Kusumgar. It's set to list today on the bourses, and the rates have settled with quite a bump up compared to the issue price. That might be little surprise because the issue was subscribed nearly 136 times. This is where it settled with a 35% uptick on it, and lo and behold, MK has also initiated a coverage note on Kusumgar on the day of its listing with a buy and a target price of 800 rupees. So it's 569 right now in the pre-open, as where the rates have settled. It will list in another 2 minutes. And there's already an initiate coverage with a buy rating and a target price of 800 on it. So what is this company all about? Let's get to that first. Mahima joining in to talk to us more about Kusumgar and that SWOT analysis.
Right, Tamanna. So I think the GMP was indicating these kinds of gains, and that's why there was so much investor interest coming in for this IPO. And we've seen that 35% of an uptick already. Now, overall, if we talk about the strengths of this company, I think it's a very niche play that they are in because they are into aerospace, defense, and engineered fabrics. They've also, of course, expanded into industrials, auto, etc. Plus, I think they've got 1,000+ SKUs and a 35-year year plus legacy in the same business. It also has a very high entry barrier, and that's why they sit at a premium position, and they have got a very strong margin of around 27% for EBITDA and ROE of around 26 odd %. Like I said, they've also diversified into defense, auto, industrial, lifestyle, which gives them an upper hand. In terms of weakness, I think where the financials go, FY26 revenue saw a downtick of around 10% as compared to FY25. For PAT, a downtick of around 12% was seen in FY26 as compared to FY25. Debt is something that's been on a rising trend, and that is something which is slightly concerning, around 223 odd crore. Like I said, because it's a very high entry barrier business, it's sitting on and that's the reason as to why it's richly valued, and its P stands at around 45 times right now. So that's something which is also concerning because it's overvalued. And this IPO was completely offer for sale, 100% offer for sale. So nothing goes towards the growth of business. In terms of opportunity, there are lots of opportunities because India defense indigenization push. There's also global demand for technical performance fabrics, which is increasing. Plus their expansion into finished aerospace products is also something that could help them grow. So this is the overall...
All of the action right now, right there at the NSE, where the listing party has begun for Kusumgar. We'll get that first rate up. It's about 40% up right now, just as how it has settled in the pre-open session, 595, 42% up right now. Ridhima is with us. She's at the NSE capturing all of that action. Ridhima, I'm sure there's a lot of noise behind you, and you're going to have an opportunity to speak to the management as well. But what have you picked up?
Join us for tea, coffee, refreshments So it's all, the company has gotten listed, and the management before the listing had told that their focus will be on innovation of the products, and no capacity expansion plans are there. And the company is also excited to explore some export opportunities in EU and UK markets after the FTAs. So that is there, and US is still their important export partner, as 40% of the exports revenue comes from the exports for the company. Now the company got listed at a premium, and it was a 650 crore IPO and got most amount of subscription from the QIBs, around 280 times the subscription, and the retailers also showed a lot of interest, over 25 times. And now the company has diversified clients across the defense, aerospace, and even the sports sectors. Decathlon is one of their clients in the sports space, and around 6 to 7% revenue comes from that. And there are many others, other global and Indian defense OEMs which the company will be focusing on, and they will get more clients, as most amount of revenue comes from this. Around 60 to 70% of the product mix comprises of defense and aerospace. Now the company has just gotten listed, and we await how it performs in the listed space now.
Thank you so much, Ridhima, for getting us those details. I'm actually looking this up as we speak. Kusumgar caters to Decathlon, which is quite the interesting update.
And defense.
And defense.
Aerospace. I wonder what,
synthetic fabric. So I'm guessing your wind cheaters and your tracks and all that.
And your bulletproof vests, all coming from the same place. Wow.
Yeah, wow. Very interesting.
Yeah. And apparently this is a Mumbai-based company, if I'm not wrong. Yeah, the promoters are, if I'm not wrong, and pretty interesting. I may be wrong here though, but this is what I was told, that the promoters are Mumbai-based. But interesting start. I mean, after a long time, we're seeing a 40% uptick on a newly listed stock. This is very, very.
They are Mumbai headquartered.
Yeah, they are, right? Yeah. Perfect. Yeah, exactly. Okay, well, that's Kusumgar.
Yeah, it is.
Make sure you don't buy a bulletproof vest instead of a raincoat the next time.
Well, I use
depends on the workout you're doing.
I use an umbrella. All right. But then who knows? Maybe you get bulletproof umbrellas as well if you're watching a spy movie. Let's move on to Tata Elxsi though. It's trading under pressure on the back of weak Q1 margins, and we spoke about the reasons why those margins were under pressure. There is a positive impact on account of Forex, but that's more than outweighed on account of certain one-off costs that were taken during the quarter. Jasmeet here to talk about what is not working for the company. Stock is down as much as 4.7%. Jasmeet?
Well, Well, Alex, thank you for that. Now, if you look at this counter, it has been a tough time for the OEM space, and we have also seen other companies come out and give out the outlook that the OEM spending has been a bit slower. Now, here are the top 5 key takeaways, the key reasons why the stock is tanking in today's trade, what did not work well for the company. The first one is the overall revenue. It was beat in terms of the estimates, while the margins declined sharply, and the margin fall was on the back of a lot of one-off costs, which are expected to settle in coming quarters. The second one is the transportation segment continued to be under pressure, which was down about 0.4%, and that is on the back of that auto demand being reduced over a few quarters. The third one is the European segment for the company, which is down about 1.9%, and that's because of the overall OEMs have reduced the discretionary spending, and so the spending they generally do on ER&D has reduced, impacting the European geography as well. The fourth key reason is the large deal the company has been winning is at a lower profitability. The company is engaging in vendor consolidation, for which there's a lot of competition, and that's why they're signing new deals at lower margin, which might further impact the bottom line going ahead. And the last reason is the brokerages. They have been bearish on this particular counter and on ER&D space altogether. And they've also cut the target price on the back of the same ramp-up issues and low price of signing deals.
Okay, Tata Elxsi seeing some pain this morning. Let's look at what's happening with markets all over though, because while Tata Elxsi is seeing some pain, it's off its lows. The Nifty is seeing a decent bit of recovery, over 24,100, nearly at the 24,200 mark, 135 points up. The Nifty IT is sulking, but look at what banks are doing. Just pull up the bank Nifty, above a percent now, 600-point zoom there. So banks are more than making up for the weakness that you're seeing on the Nifty IT, and ahead of all the big results this weekend coming in from private banks. What to expect from banks, IT and much more. We have that conversation on the other side with Shreyash Devalkar of Axis Mutual Fund. Stay tuned. We'll be right back.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे. केसरिया से मन जोगी हुआ.
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
Ready for the next big IPO? Apply for it on Grow. Open your free DMAT account, check all IPO details, apply easily in a few taps. And that's it. Download Grow now for stocks, mutual funds and IPOs.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
Ready for the next big IPO? Apply for it on Grow. Open your free DMAT account, check all IPO details, apply easily in a few taps. And that's it. Download Grow now for stocks, mutual funds and IPOs.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
That if a boy from Ahmedabad with no capital and no connections could build then there must be 1,000 more Gautam Adanis sitting undiscovered.
जिनके आइडियाज हैं दमदार, वो सब हैं वंदे भारतम के नेशनल स्टेज के हकदार। प्रो इनोवेटर्स, रजिस्ट्रेशन करो wandebharatam.org पर 19 जुलाई तक। An initiative by Gautam Adani.
The stage that has captured the pulse of leadership since 2006.
NDTV Profit Most Inspiring Leader of the Year Award goes to Mr. Anand Mahindra.
Celebrating visionary trailblazers and industry mega stars who redefine leadership every day. An unmatched legacy.
Back with India Market Open right here on NDTV Profit. Like we said, a decent day out for the Nifty thus far. Let's see if it stays. This is despite higher oil prices, by the way, and despite IT having, at least on the face of it, the news not the most positive, what IBM has said. In light of all of this, great time to get in Shreyas Develkar. He's head of equity at Axis Mutual Fund. Shreyas, good having you. Thanks for taking the time out. Good morning to you. How are you approaching the investing process currently, because the Q1 results thus far seem to be okay, but if the bogey of oil had gone away 2 weeks ago, it has certainly come back, even though it's not in the same ferocity, because oil prices are not at 105 but at 85, but still they are no longer at 70 either. Is this a good time, despite the uncertainty, to bet on the names which are giving out results, or would you sit on a bit of cash waiting for the conflict to be completely out of the way?
Hi, good morning, and thank you for having me on the show. Actually, as far as this conflict is concerned, expecting that it will be completely out of the way will be very demanding assumption to make. So, we like it or not, we have to make our assumptions around it and move around accordingly. So, whether you go ahead with the assumption of crude being 80s to 90s or 100 plus or closer to 70s, obviously that makes a difference in the way you would build a portfolio. We would like to believe that, yes, we should build a portfolio around 80s to 90s assumption on a steady state basis. Any positive news with crude growing closer to 70s, the way it happened, is definitely a positive outcome. As far as the growth is concerned, and you're rightly highlighting that, yes, this quarter, if you notice the previews which are coming out, already the Nifty growth rate for this quarter expectation as per various brokerages is around 17% on top line front. Now, this number actually is one of the highest in last 3 years when it comes to top line growth. However, when it comes to bottom line growth, because of the margin contraction in many sectors, like from in autos, it is there in some of the consumer staples, some of the pharmaceuticals. So because of the margin compression, probably the bottom line growth is not as great. It is hovering around 5 to 8% as per various estimates. But top line growth, again, this is, as I said, it is one of the great news. Because historically, what we have seen, especially when it comes to large cap growth, it has been dependent on the nominal GDP growth. Now, average CPI plus WPI for this quarter is around 7%. Again, it is one of the high number in last 2 to 3 years. So net, as far as numbers are concerned, top line trajectory looks good. Even underlying parameters like the volume growth in auto, the impact is not as high as what everyone feared when the war started in Iran. You take multiple categories, the impact is not as much on the volume, and that's where we see that more stability. Again, if the crude goes above 90, 100, then obviously I would call out that yes, then that is a situation to be considered and which may have a negative impact.
Shreyash, hi, morning. Alex here. I'm just wondering what you're making of, and of course, it's very early days in this earnings cycle, but this conversation that we're having more and more repeatedly about the distinction between the trajectory of the large cap names on the earnings front and the broader markets, where you can see 15, 17, 20% earnings growth in the broader markets, but in the large caps, it's restricted to single digits. Is that something that will continue to pan out in FY27, in your opinion?
If you see the construct of large cap, it's not actually not about the large cap versus mid and small. It is about a construct of large cap, it is, if you take around 30-40% of large cap is financial services. Now, here in the lending, the credit growth is improving already, right? It is about 17%. The NIM pressure continues. So even in this quarter, the joker in the pack is the NIM, because as far as the credit quality is concerned, as well as credit growth is concerned, both are actually tracking very well. So if there is a rate hike, which actually supports NIM, especially in case of bank. But once that NIM pressure is behind, then generally even this pack will do good. FMCG is another sector, and IT. These are the two relatively larger sectors. I would call it closer to 15-20% of the index. Here, the growth has not improved. Beyond that, there are sectors like oil and gas, which generally don't tend to grow as much if it's depend only on the commodity prices. All in all, in my opinion, if the financial services, the banking pack, here the growth is delivered and NIM pressure is behind, then probably this may lead to the improvement in the large cap growth rate. Mid and small cap growth rate has been around 15% plus. But if you look at the challenge in the market has been, see, last for 2 years also, the mid and small cap growth has been 15% plus. But when it comes to returns, because of the valuation, the returns has not been that great. They outperform large cap, there is no doubt, but absolute returns has not been commensurate to the earning growth. And that's where when it comes to the large cap versus mid cap, the debate, which I generally don't want to get into, because it's more to do with the construct than anything else. So in case of large cap, in my opinion, if the financial services does well, and the valuations are reasonable compared to their pre-COVID level valuations, there is a good risk reward available here.
Shreyas, good morning. Tamanna here. How are you looking at some of the private bank majors ahead of the results this Saturday? What would you be watching out for, and will this be a very important quarter from that perspective as well, because it will capture some of the turbulence we've seen in the economy and globally?
So for bank and NBFCs, especially lenders, there are two things. One is about the result and one is about overall macro environment, because that also bears broader impact on this sector. So as far as growth is concerned, as we all of us know already, the result previews are out, which are given by the companies themselves and the banks themselves and NBFCs themselves. The credit growth numbers are really good across the board. There is no question on that. The commentary on the asset quality has been great. So that is again a good news. As I highlighted, in case of banks, the NIM pressure has been the concern for the market. Actually, for bank, the increase in the interest rate should be a positive as far as the NIM pressure is concerned. But let's not take a call whether it happens or not. So once that is behind, in my opinion, banks are in the good position as far as growth is concerned, and likewise NBFC. So both the lending part. The other aspect which always works as far as the sector performance of lenders is concerned, which is to do with broader market liquidity. Generally, if you would have observed, there is a correlation between rupee depreciation, there is a correlation between the expectation of interest rate, etc. On that front, the coordinated effort of central bank and central government to arrest the impact on the rupee depreciation, to attract foreign flows in that has been a good news. Let's see how much money we get. The estimates has been right from $50 billion plus to as high as $80 billion as well. If we get good money in that and the liquidity is good, as well as the pressure on the rupees also off because of this, then I think even that will be a good news for the banks.
Okay. Shreyas, a lot of chatter around the need to invest in precision manufacturing and multiple businesses out there, right, which are doing this under various verticals. Where are you present? Where do you find favor in this space? And are valuations still attractive, or now they are uninviting? I mean, you can hold them because you have them. Otherwise, buying afresh might become a problem.
Valuations, yes, I agree. It is high everywhere. So not only precision manufacturing, if you take entire manufacturing space. So generally, when it comes to discussion around manufacturing, I normally include everything in it. So it is right from auto ancillaries. If you notice, many auto ancillaries, they are now no more pure play India OEM auto ancillaries or India OEM oriented auto ancillaries. They are doing defense, they are doing exports, EMS, and so on. And one of them is precision manufacturing. So there are multiple such segments. In case of capital goods, obviously there are segments right from the bearing to gears to lights and so on. So the entire manufacturing piece we are really positive on. And yes, valuations are high, but most of this piece has presence in mid and small cap segment. I don't think many of them are in the large cap, and that's where again comes the debate between the large and mid cap. Now, this entire opportunity is there in the mid and small cap space. The growth is good. The kind of orders they got is good. So multiple orders companies got, even for transformer exports, engine exports, and such things we are hearing from multiple companies. And one more important point is rupee depreciation, the way it has happened so far. That also adds to added advantage as far as exports is concerned or import substitution is concerned. So, but generally in case of manufacturing, it takes a lot of time to really play out, because in the services sector, historically, you must have seen that whenever rupee depreciate, people used to buy IT or pharma, because there the translation into business or the positivity is really straightforward and in shorter period of time. In case of manufacturing sector, generally it would take longer period because people will decide, then the capex will happen, then the orders will come, and then you get the benefit. So it is a relatively long gestation process. But in my opinion, as far as markets is concerned, and that's where you are rightly highlighting, that as far as markets is concerned, we are in the mid cycle. We are no more in the up cycle of the manufacturing as a theme. So we have to be very calibrated on what you want to really buy. We have to really assess. The way we are doing is we are assessing what are the optionalities available, because today at high valuation, you actually price in the option value. In a particular company, this company will get into this new area and the potential is so much. So that optionality we have to assess really well, because if you go wrong on that, then these valuations may hurt us.
That's a good point. Absolutely. All right, Shreyas, absolute pleasure as always speaking with you. Thanks so much for taking the time.
Thank you.
An interesting story for you. Strong compounding is obviously rare to find, and these 5 companies, though, have delivered more than 30% EBITDA growth every year for the last 5 years. Parth is joining in to tell you about which companies these are and how they managed to do what they did. Parth?
Right, so let's first of all talk about our criteria a little bit. The first criteria that we took was that each of the companies should be above 10,000 crores of market cap. And the second criteria we took was that they should have 30% EBITDA growth each year in the last 5 years. So that's what we worked with, and the source for this information was Bloomberg. And isn't that interesting that only 5 companies out of the entire stock universe passed those 2 criteria? The names are Trent, Wari Energies, Keynes Technologies, Anantraj, and Lloyd's Engineering. You can check out their EBITDA growth rates in the last 5 years as well. Let's start with the Trent first of all. Their EBITDA growth has moderated from triple digits to low 30-digit numbers, to low 30% number now, and the reason for this is store maturity and the slower same-store growth that the company has seen. But for the future outlook, if we talk about Trent, they have said that the aggressive expansion on the west side and Zudio stores will drive the earnings going forward, and they have said that the store additions is something that you should keep on track if you are expecting earnings growth in the company. The second one is Wari Energies, which has seen its growth accelerate again in FY27, in FY26 after being above that 70% growth rate for the last 5 years. Now, this was driven by the strong solar module demand that we have seen in the recent years, and also the manufacturing expansion in the company as well. On the outlook side, the company has a huge order book, and their manufacturing manufacturing expansion in the US will support their earnings visibility going forward, and the earnings growth will be coming from the renewable capex that the company is doing as well. The next one is Kaynes Technologies, which has seen its growth normalize but still remains above that 30% mark. They have multiple tailwinds that includes the high EMS demand, the defense demand that we are seeing a lot of capex on, and also industrial electronics. On the outlook side, the company has said that the capacity addition and semiconductor will remain the key catalyst, and also the new customer wins will be supporting the growth going forward. The next one is Anant Raj, which has seen EBITDA growth moderated after being exceptionally strong for the recent years. The shift to premium realty and annuity income will aid the profitability on the company, and on the outlook side, data center is something that you need to track if you are talking about Anant Raj. Lastly, we have Lloyd's Engineering, which has seen growth normalized after being growing exceptionally in the last few years. And on the outlook side, the merger with its entities like Lloyd's Metals and others will strengthen their scale and capabilities. And lastly, on the return potential part, except for Lloyd's, all of the other companies are tracked by analysts, and the highest return potential stands with the Wari Energies at 26%. So these are the 5 companies that have been consistent compounders over the last 5 years.
Interesting data slice there. Thank you for that part, the compounding superstars. Now, Torrent Pharma and RBL Bank will also be in focus today on the back of an MSCI rejig this month. Sharad is joining in to tell us why.
Well, on the last 30 to 40 minutes, you're going to see action in both of these counters on back of MSCI adjustment. As per a note by Nuvama Alternate, of course, MSCI will increase the weight for Torrent Pharma. And remember, this momentum will see a passive inflows of roughly $167 million. To put that in perspective, it is almost 5.5 times of its average daily volumes. This is what I'm talking about, Torrent Pharma. It's a positive reaction can be expected. On the other hand, RBL Bank, over here, it will be deleted from the MSCI Global Small Cap Index. And because of that, there will be outflows as well and a reduction of foreign ownership. Roughly almost $25 million of passive outflows is expected. So these two counters should be in focus as volatility will be more towards the closing session.
Okay. All right, Sharad, thank you for that. So with that, it's a wrap on this edition of India Markets Open. The good news is that markets are holding up, and $84, $85 on the Brent doesn't seem to be too scary right now as far as Indian markets are concerned.
Cross fingers.
Fingers double crossed. Okay, we'll wrap it up here. So from all of us who presented the show and all of us who put it together, thank you so much for watching. Stay tuned. You have Ask Profit up next.
Superstar Stocks of the Day, presented by Tata Azura, हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ.
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
Ready for the next big IPO? Apply for it on Grow. Open your free Demat account, check all IPO details, apply easily in a few taps. And that's it. Download Grow now for stocks, mutual funds and IPOs.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति HDTMT.
Ready for the next big IPO? Apply for it on Grow. Open your free Demat account, check all IPO details, apply easily in a few taps. And that's it. Download Grow now for stocks, mutual funds and IPOs.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
जानते हैं मैं एलीट मैट्रिमनी क्यों रिकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
That if a boy from Ahmedabad with no capital and no connections could build, then there must be 1,000 more Gautam Adanis sitting undiscovered.
जिनके आइडियाज हैं दमदार, वो सब हैं वंदे भारतम के नेशनल स्टेज के हकदार। प्रो इनोवेटर्स, रजिस्ट्रेशन करो wandebharatam.org पर 19 जुलाई तक। An initiative by Gautam Adani.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is in.
Hello and welcome to NDTV Profit. You are tuned in to Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Bitcoin gains on soft US inflation data. Ripple secures MiCA approval. US UK unveil tokenized assets roadmap. And lastly, South Korea maintains blockchain economy push. First deep dive is the Bitcoin. They have neared that $65,000 mark as a soft US inflation has ignited a strong buying in the crypto segment. Now looking at it overall, if you look at it, the soft June CPI print has been there, which has eased the fears of aggressive Fed tightening, lightening all the risk assets. And remember, this shows that more retail and institutional flows can also come in the crypto ecosystem. Ripple has obtained a full MiCA CSP authorization from Luxembourg's regulatory body. Now this allows regulated crypto payment services across all 30 European Economic Area countries, targeting banks, payment firms and even corporates that require clear regulatory frameworks. And this is primarily an institutional and an infrastructure milestone. Looking at the US Treasury and UK's HM Treasury have issued a joint 10-point roadmap to align the oversight of tokenized assets and regulated stablecoins. Now this aims to cut the cross-border regulatory friction without introducing new rules. And also, Donald Trump has continued pushing the Senate to pass the Clarity Act before the August recess. And South Korea's Ministry of Finance and Economy has reiterated its commitment to growing the local blockchain and digital asset economy. Despite a stronger emphasis on AI development, the government plans to launch a pilot project for tokenizing government bonds linked to an institutional central bank digital currency, which is called CBDC project, and this is slated for a 2027 release. And before we wrap, here's a quick check on the changes to the crypto prices over the last 24 hours. And largely all the most traded crypto has done well, all of them rising between 3 to 5% and Bitcoin jumping 4% in the last 24 hours. And because of that, our trading levels, especially the support resistance band, that has moved up on the higher side. Now it ranges between $64,000 to $67,000 odd. Now time to take a look at the crypto strategy for the day. Here's what's there to keep in mind today. Overall, the market outlook is now showing bullish momentum signs. Now it's expected that there might be some more follow-on buying, and this is especially for retail as well as institutional flows. The resistance range that has been pushed up between that $65,000 to $67,000 mark. But remember, in short term, there might also be a profit booking because the up move has been very, you could say very strong. And that's something we should focus on. Now, as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved, whether it's about crypto, regulations, taxation, or the broader industry. The team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
Welcome. You're watching NDTV Profit, and this is Ask Profit, of course. Let's take a quick look as to how the markets are also doing. The Nifty 50 is up by about 0.6%, holding about the 24,200, just about the 24,200 levels is what we are seeing. The Bank Nifty is also holding up today after a downtick of around 1.5% yesterday, up a percent, about the 58,000 levels now. Let's also take a look at the Nifty 50 heat map and see. All right, before we do that, Anand Rathi is in focus on the back of its earning. Shahid, how have the earnings fared?
To be honest, the earnings have been mixed, and to be precise, the PAT numbers were impacted if you look at it on exceptional losses. But overall, sequentially, the numbers were a kind of a little bit of disappointment. But I had a chat with the management also, and we are joined in by Pradeep Gupta. He's the chairman and MD at Anand Rathi Shares and Stock Brokers. Of course, starting with the exceptional loss, but overall, the fall has been there in the F&O volumes. Looking at the market conditions and changes from SEBI?
No, not really. I think if you really look at our number, volumes have, grown if you compare from year-on-year basis. In fact, market-wise, market has grown. I mean, cash market specifically, I'm talking, year-on-year basis grown by about 13%, I think. And we have grown more than that. That's how the statistics is. So yeah, I mean, for first quarter, if I compare, volumes have definitely, grown. So, I mean, the number are before me, like, from last quarter to this quarter, cash market has grown by about 13%. And in terms of turnover, we have also grown by about 20%.
Right. Pradeep, apart from this, what's the growth guidance for the MTF book? Because I see the numbers on the year-on-year basis, that seems to going up for margin trading facility.
So, yeah, I mean, the moment activities have started happening, the MTF book is also started expanding. And if you really see, we are constantly expanding our MTF book. On year-on-year basis, you have seen we have grown more than 50% in terms of MTF book size. And that is also reflecting in our revenue. Our revenue from MTF, interest on MTF is also growing by about 52%.
And Pradeep, the AUM and the non-broking segment outlook for FY27, does that remain positive going ahead? What are the key triggers for it?
So we are quite positive, as you said, and non-broking is a business which is clearly a focus area, because constantly we have been marketing and harping that along with the growth in all the business segment, we are going to grow in broking as well as non-broking, and our growth in non-broking side, which includes MTF as well as distribution side, will grow much faster. And we have typically discussing that in our broking book should grow around 14 to 16% kind of growth, and our non-broking book should go between 30 to 35% or 40%. So if you really look at it, my non-broking book for this quarter has grown by about 40%, and our broking book has grown by about 15%. So we are well within the desired targeted set number, and we are constantly working towards this. So far, non-broking is concerned. So far, non-broking is concerned, we are constantly going to grow, and we are actively working towards it.
Pradeep, just to put things in perspective, there was a capital raise announcement of 500 crore via NCDs. Where will this be deployed? Is it for the new margins which have come in from SEBI?
So this amount is again going to be utilized for our working capital limits and MTF book. As you know, with the present guidelines which is being coming in place from 1st of July, most of the broking houses who are having certain amount of limits from the banks, those have been gone out of system, and that money has to be deployed from your own funding resources. And that's where in our case also about 250 to around 300 crore kind of a book has been utilized for our working capital requirement. And obviously our MTF book requirement is constantly there. So for our growth, whatever funds are going to be raised is going to be utilized for our MTF book side on a constant basis is something which we are going to do. And because of that only, this resolution is being passed to raise those about up to 500 crore kind of a limit.
All right, thanks a lot, Pradeep sir, for your views on the company and the growth outlook going ahead, and best of luck for the future. But moving on from one interview to the other, it's on the primary markets, and Mahima is there to track this. An interesting listing today. That means primary market sentiment is good?
Yeah, it seems so, right? Because almost a 40% listing gains is what we've seen on Kusumgar. Let's try to pull that up and see as to what it's doing right now. But it's in focus, of course. It listed on bourses with around 36% of listing, now 46%. And my colleague Ridhima spoke to Ankur Kothari, the CEO of Kusumgar. Listen to what he had to say exactly.
Thank you for joining us on NDTV Profit.
My pleasure.
Ankur, I want to start by asking you that if we talk about the company's financials in FY26, there was a bit of moderation in the revenue by 11.2% and even the PAT by around 12.3%. And you've attributed this to deferred orders in defense and aerospace. Do you think these are temporary setbacks, and how do you plan to ramp up your revenue and the PAT?
Sure. So I think as far as FY26 is concerned, we were affected by a large order being deferred, and of course also the Trump tariffs that affected our US business. I'm glad to say that both of them are back on track. And I think we should be able to resume our growth trajectory that we had been showing for several years going forward.
All right. And also, the EBITDA margins were positive, over 27%. What has helped for this? Is it the product mix or the pricing strategy? What has really worked, and what's your guidance with margins, and how sustainable are they?
That's a great question. I think every year, as the product mix shifts, there is a little bit of shift in the EBITDA margin percentage. I think one would, to get a steady view of the business, one should take an average of a few years rather than a specific year. We are hopeful that if you would take the last few years as an average, we should be able to replicate that margin performance.
And what has been the product mix so far and going forward?
I think the product mix has been 60 to 70% aerospace and defense, around 15 to 20% automotive, and 10 to 15% activewear. In the midterm, at least, I do not see that shifting too much, unless something dramatic happens. So I think one could expect that margin profile should reflect what's been going on for the last few years.
Also, how do you see this concentration risk in your business? Because around top 10 of your clients contribute most of the revenue of about 60%. How will you diversify this and going forward?
That's a great question. I think the customer concentration risk, while on paper it looks like that, I think you have to understand that even within a customer, we are doing, for example, the Indian military, we do multiple products. So we have a cross-product diversification that allows us to mitigate the risk of one thing or the other going up or down, right? But in the mid to long term, we do intend to diversify further, right? At any point in time, Kusumgar is developing new products, new solutions, both for Indian customers and exports. So there'll be a natural diversification, both of products and geographies, that should take care of this particular thing.
All right, so that was the management of Kusumga, the recent listing. The stock now up around 46%. 10% of an uptick post-listing is what we've seen in this one. Of course, there was a lot of investor interest. But, let's start taking all your stock-related questions. Of course, markets, like I said, have been holding up. The broad end of spectrum is also looking positive. The Nifty 50 is up by about 0.6%. The mid-cap 150 and the small-cap 250 also quickly, if we can try to pull those up. The mid-cap 150 up by about 0.6% and the small-cap 250 up by about 1% at the day's high point. So let's also get in our guest for the day who will answer all your stock-related questions. We are now joined by Vaishali Parekh, Vice President, Technical Research at Prabhudas Lilladher Capital, and Gaurang Shah, Senior Vice President, HDB Financial Services, joining us now. Welcome to both of you and a very good morning to the both of you. I'll take the first question, which is coming in from Jayesh, who's writing us from Mumbai, asking about ITC. From a long-term perspective, he wants to know whether the current market price is an attractive one. He already has around 3,000 shares that he's bought at the levels of 330. Gaurang, would you recommend that, averaging out at the current levels?
Hi, thank you so much, Mahima, for having me on your show. Good morning to all your viewers, to my good friend Vaishali, and to you as well. Well, 3,000 shares as the 330 plus, if I heard that right, and current levels of 277. So firstly, as a standard disclosure, that all recommendations that I'll be sharing with you on your show this morning, Mahima, they are part of our fundamental research team recommendation from a long-term point of view. Our company, Geojit, or myself, we do not have any kind of personal investments, no financial interest, no conflict of interest, but we share similar investment ideas with our clients. They might have their investment interest. So prudent to know. This advice is subject to this gentleman or investor not overexposing himself with other stocks that he's got in your portfolio. I'm assuming that. So first of all, we have a positive coverage on ITC. We have a buy recommendation. At current levels, somewhere close to about 270, 280. Since he got in at elevated levels, Mahima, it would be prudent to average in case if he wants a profitable exit. It will be a challenging time given the kind of headwinds for the core business of tobacco products and cigarettes facing headwinds because of the price hike. But at the same time, other business verticals have started to contribute. And I guess as we go into the future earnings, they will contribute even better and thereby improving the bottom line. So first of all, hold on to it. If you want to average at current levels, maybe you can average a small percentage, 25-30% of the earlier quantity that you are holding. And if you get a dip below, say about 270 or 265, you can further average as well. But hold and add would be the strategy, as I mentioned.
Queries coming in from Bipin from Bangalore, and it's on Sirma SGS. He has around 10,000 shares bought at a price of 242. Should he continue to hold or exit? Vaishali, any view on this?
Hi, very good morning, Mahima, Gaurang, and yourself. I think Sirma has been one of the stocks which has been doing very well. So according to me, the trend is very good, and continue holding because the way I'm looking at the price projections, this can go towards 1,500 and plus. So that would be my view, and 1,350 would be the support. So stay accordingly.
All right, okay. The next one that we have is coming in, and this is on Rainbow Children Hospital. Nalamuthu from Chennai is holding 64 shares. What are the levels of 950? Since the IPO is what he's saying, he wants to hold this for the next 3 odd years. What would you recommend, Gaurang? A good hold or anything in the hospital space that you like?
So, Mahima, again, we had a subscribe recommendation to the IPO. When it hit the street, and I think post that the stock has performed quite well. The IPO, Mahima, was somewhere close to about 516 to 542. And if he got in at IPO levels, I'm assuming it is 542. He's already deep in the money. He's got 3 more years to give in terms of investment. And this particular hospital specializes into child and children related treatment, and they are planning to expand to other geographies as well. We do like the healthcare sector. Current coverage, Mahima, includes Apollo Hospital, Fortis Healthcare, Narayan Rudalya, and Max Healthcare. But like I mentioned, we had a subscribe for the IPO, and since he's a long-term investor, he can continue to hold on. I'm keeping the IPO note as a base of my recommendation.
The next query is coming in from Devi from Coimbatore. He's planning to buy call options in solar industries. Any view on this, Vaishali?
I don't do options, but I can definitely give the levels. So As far as solar industries is concerned, I would say keep a stop loss of 17,800 and look for a near-term target of 19,300. So plan your option accordingly.
The next one that we have is coming in from Sunny, who's writing us from Karnataka, asking about Sambhav Steel. He's got around 300 odd shares at the levels of 111. Wants a long to medium term view on this one. It's a fairly recent listing. Any view on this, Gaurang?
Unfortunately, we did not have a coverage on the IPO, Mahima, and no standalone coverage as well. And one clarification for the earlier question on Rainbow, we do have a fundamental coverage currently. We had come out some time back. So you can continue to hold on with a target price of 1680. This is an approximate target price on Rainbow. On this one, no comments.
Vaishali, by any chance, enough data on the charts to give a view?
Sorry, no view on this.
All right. Okay. The next one then that we have is from Murli, who is writing about IDBI. He's got around 100 shares that he bought at the levels of 57. For the next 1 year, he wants to know the target price. Of course, we have been hearing about the divestment. But Gaurang, any view on IDBI Bank? Because he's sitting on significant profits. What should he do?
You know, Mahima, this is something like an NSE IPO, which all of us have been waiting. And if I'm not mistaken, and if my memory serves me right, it was the late Finance Minister, Mr. Arun Jaitley, who made a statement in the Parliament during the budget session that the government is planning to hive off the stake in IDBI Bank. From that day onwards, till date, years have gone by, but nothing has materialized. No specific comments on IDBI Bank. And more importantly, Mahima, this particular banking stock moves on divestment news, less on the earnings front. So my sense is that there are better banks to get invested. If you're looking at smaller banks as an alternative investment idea, I'm not recommending a sell or a hold or a buy on IDBI Bank since we don't have a coverage. But Federal Bank and City Union banks are better placed.
All right. Okay. The next one that we have is coming in. And by the way, before I take the next questions, for viewers who are tuning in, you can also give us a call on the number that's flashing on your screen up there. Call us, ask your queries live. The next one that we have is on Balakrishna Industries. This is from Harsha, who's writing us from Vijayawada. He's bought around 33 shares at the levels of 2,400. From a short-term perspective, Vaishali, continue to hold or sell?
Well, so nothing is happening actually in tire stocks right now. So shorter term perspective, I would say just keep a stop loss of 2140. And if we see some bounce coming in, this can perhaps go towards 2300. That would be the range.
Okay. The next query is coming in from Pakshal Jain from Jodhpur. It's on JSW Energy. He has around 50 shares, bought at a price of 638. Gaurang, what is the long-term view on JSW Energy, and if negative, should he switch to some other power counter?
Well, absolutely not, Sumit. Good morning to you as well. The entire power sector looks quite promising to us, and we've been maintaining a positive stance on the entire power sector, be it power generation, power transmission, or modernized power equipment manufacturing companies. As a disclosure, again, we do have a positive coverage. I heard you saying he got in at 600 plus levels. I hope I heard it right. Current levels at about 550 or 555. In case if he's got investable amount, he can definitely add to the stock. The amount of new power generating capacity that is going to come up is not only going to benefit power generation companies, but it's also going to benefit power transmission and power equipment companies. Continue to hold JSW Energy, and if you have investable amount, you can add as well.
Okay, it's time for a rapid fire round now. Gaurang and Vaishali, try to keep your answers as short as possible. The first one that we have is on Cupid. Sushira from Bellary is holding since the levels of 136. 1,577 shares is what she's holding. Should she continue to hold, and what should be the targets? Vaishali?
Continue holding for a target of 250.
The next query is for you, Gaurang. It's on Carborundum Universal. Thomas from Cochin has few shares, 100 shares, bought at a price of 1,180. Should he sell, hold, or buy more?
Well, our targets were in place. We had a positive coverage. Currently, since our targets were in place, we have not initiated any coverage. You can possibly shift to banking stock.
Okay, the next one that we have is on BSE, 180 shares, bought at the levels of 3914. Vijay from Dubai wants to know whether from a long-term perspective, should he continue to hold? Gaurang?
Everything in the capital market related looks quite well. This is a platform provider company for equity segment. Very strong and quite a lot of positive tailwinds in terms of future growth for the Indian capital markets. No specific comments made.
Okay, the next query is for you, Vaishali. It's on Walkhard. Narasimha Murthy from Pondicherry has few shares, bought at a price of 2,025. He wants the outlook for the next 3 months. Can the share price go up to 2,400 or 500?
There is a new round of momentum, so very likely.
Okay, the next one is on Thomas Cook. 4,000 shares bought at the levels of 93. Ratkim from Assam wants to know whether he can continue to hold this one or not. Vaishali, anything on the charts?
Hold with a stop loss of 95 for a target of 120.
The next query is for you, Gaurang. It's on Federal Bank. Murli from Hyderabad has around 100 shares, bought at a price of 117. He wants to know whether should he continue to hold this counter for the next 2 years.
Hold and add. In fact, I would give a recommendation from a long-term point of view on Federal Bank. We have a positive coverage.
All right. The next one is on KC International. Saurabh Shah from Mumbai is holding 700 shares, bought at the levels of 497. Continue to hold, sell. Vaishali, medium-term targets on this one?
KC is sideways, so I think continue holding 480 stop loss and look for a target of 560 to start with.
The next query is for you, Gaurang. It's on Indian Hotels. Anil from Mumbai has around 1,200 shares, bought at a price of 740 rupees. Should he hold or sell?
Hold and accumulate. I would give a positive coverage on. We have a positive coverage on this one, and we expect the hospitality sector to perform well in future.
The next one is on Afcons Infra. Rohan from Kolkata is holding 32 shares since the IPO price. A medium-term target on this one. Vaishali?
Nothing much happening. So 280 stop loss and 350 target.
The next query is for you, Gaurang. It's on Tata Motors PV. Avran from Kashmir wants to buy. Should he buy at current market price for long term?
For long term, definitely yes, but don't put all your money at one time. Start at current levels and add on dips.
Okay, the next one is on Anant Raj. A technical view on this one. Vaishali, this is from our viewer Jay, who's writing us from Coimbatore. Vaishali, on the charts for Anant Raj.
Continue holding, target 650.
Next query is for you, Gaurang. It's on CRISIL. Prati from Raipur wants to know the opportunity on this counter. Should she buy this?
If she is not bought it, then my sense is that there are better sectors to look at. For example, banking and defense look quite attractive. No specific comments on CRISIL.
Okay, the next one is from Gautam, who's writing us from US, asking about IndusInd Bank. He wants to know the technical view on this one. Vaishali, should he continue to hold? His buying price is 1030.
I think continue holding. Look for a target of 1050.
The next query is for you, Vaishali. It's on Kirloskar Brothers. Bharat from Andhra Pradesh is holding 300 shares, bought at a price of 2,180. Any target or stop loss that you could suggest on this counter?
Continue holding. 1850 is a support, likely to go to 2050, 2200.
MTAR Tech for the next 6 months. Vaishali, how is it looking on the charts? Our viewer Jayakrishnan from Kerala has bought at the levels of 7,700. So elevated price, but what would you recommend?
So right now it is in a retracement zone. 6,000 should be taken as final support, and in all likelihood it can bounce from there.
Alright, that brings us to the end of this rapid fire round. Viewers, it's time to slip into a very, very short break. But don't go anywhere. We'll be back with answering more queries on the other side. So do stay tuned.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
Ready for the next big IPO? Apply for it on Grow. Open your free Demat account, check all IPO details, apply easily in a few taps. And that's it. Download Grow now for stocks, mutual funds and IPOs.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति HDTMT।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
Ready for the next big IPO? Apply for it on Grow. Open your free demat account, check all IPO details, apply easily in a few taps. And that's it. Download Grow now for stocks, mutual funds and IPOs.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
That if a boy from Ahmedabad with no capital and no connections could build, then there must be 1,000 more Gautam Adanis sitting undiscovered.
जिनके आइडियाज हैं दमदार, वो सब हैं वंदे भारतम के नेशनल स्टेज के हकदार। प्रो इनोवेटर्स रजिस्ट्रेशन करो wandebharatam.org पर 19 जुलाई तक। An initiative by Gautam Adani.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing
Welcome back. You're watching Ask Profit here at NDTV Profit. For viewers, a gentle reminder, you can either give us a call or send us your queries on the WhatsApp numbers that are flashing on your screen up there. We've got Sandeep Patil, who has done that and asked his query on WhatsApp on Tata Motors PV. He's bought it at the levels of 360.6 and he's got around 4,500 odd shares. He wants to know whether to continue to hold or sell. Gaurang, this question is for you. He's sitting on a huge loss, of course. What would you recommend?
Well, long term, it does not matter, Mahima, whether you run into a loss, because short term hurdles will definitely be there. But if the fundamental company is strong, I think you should definitely hold on to it. Point number one. Point number two, if you got an at an elevated level, and if you're getting the stock at 5 or 10% below the earlier acquisition price, and if you have investable amount, I think you should have further more confidence and commitment to add to it. So hold on and add would be the strategy.
The next query is from Vedant, and he's saying that he has Kalyan Jewellers shares 117, bought at a price of 374. Should he continue to hold this? Vaishali, any view?
So if it's for a short-term perspective, book partial profit.
Next one that we have is from Kanchan, who's writing us from Pune. She wants to know about infrastructure stocks, Gaurang. She's saying as to what should be the outlook for the next 2 to 3 years for counters like IRCON, AFCON's Infra, or something like an NCC. Anything that you're liking in the space?
So, Mahima, we do have a positive coverage on NCC. Other than that, HG Infra and Engineering is something that we have a positive coverage. And the entire infrastructure sector looks quite well poised in terms of the order book coming in from the government, from state level, from center. And of course, execution should pick up space is what we believe. So hold on NCC and HG Infra in case if you have. And one more company we have positive coverage is L&T Finance, L&T Limited, which has got a diversified business portfolio.
Our first caller query coming in from Hyderabad. Jitendra, you can go ahead and ask your query.
Yeah, happy morning to all. I'm Jitendra from Hyderabad. Holding 1,000 shares, HDFC Solutions at 305.
Okay.
So I don't know what is happening in this company. For short term, should I hold or exit, or else will it be a good bet for me?
Okay. Any view on this, Vaishali, for short term office space?
So I would say actually the stock has really been doing nothing, long consolidation after a good corrective move. So now that you've held on and making a loss, keep a stop loss of 280. Maybe in all likelihood, it can just give a bounce up to 330, 340. That would be the level to watch to exit.
Right, okay. The next one that we have is on Indian Bank. Anil Kulkarni from Mumbai has bought around 1,723 odd shares at the levels of 835. He wants to know whether he can continue to hold this one. Gaurang, any view from a long-term perspective for Indian Bank?
Fantastic set of numbers, Mahima, as far as this mid-cap private sector bank is concerned. We had a coverage. Currently, I believe it is under review. So since it is under review, I won't be in a position to give a buy, sell and hold. But the future looks quite strong and bright for Indian Bank. And my personal belief, Mahima, is that this mid-cap can turn into a large cap over the next couple of quarters and months and years.
Okay. Siva from Vijayawada wants to know whether is it a good time to buy either Coforge, not either, it's Coforge and Persistent. Any view on any of these counters, Gaurang?
So long-term mid-cap IT, Somit, I believe, have been doing well. And in terms of earning also, there have been quite decent earnings compared to the other large-cap names. On both of them, from a long-term point of view, we have a positive coverage. So if you hold or if you're willing to buy, if you're wanting to buy it, invest in it from a long-term point of view, you can buy both or choose either of them.
Okay, the next one that we have is coming in, and this is on two counters that our viewer wants to know about, either Syngene International or EPAC Prefab. Which one is a better bet right now from a slightly long-term perspective? Any of this that you're tracking, Gaurang, and any view?
Unfortunately, we don't have coverage on either of them, Mahima, so I would give it a pass.
Vaishali, any view on any of these where charts are looking attractive, Syngene International or EPAC Prefab?
So, as a disclaimer, we have been recommending EPAC and it's already got in a trend. So, I would say accumulate with 240 as support levels and look for a target of 330, 340.
Okay, all right. We've got Shankar who's calling us from Chennai. Shankar, a very good morning to you. Go ahead, ask your question.
Very good morning. I bought 2,000 shares of Suzlon Energy last month for the rate of 58 rupees. I'm ready to wait coming 6 months. What's the target medium-term outlook?
Sorry, can you repeat the stock name for me, Shankar?
Suzlon Energy.
Suzlon Energy, okay. And you want to wait for the next 6 months? Then I'll take this up with Vaishali. Vaishali, his buying price is 58. The stock is currently trading at 53. What would you recommend him? Continue to hold?
So I think actually 50 is the support level and it can go towards 57, 58. That would be the level to watch.
All right, okay. The next one then that we have is coming in on Nalco. This is from E. Venkatramanan, who's writing us from Bengaluru. He's got around 100 shares, bought at the levels of, okay, he's not mentioned the price, but he says he's got 100 shares of Nalco and 50 shares of Hindalco and wants to know that from a 2-year time frame, can he continue to hold this one? Gaurang, metals are back in action, but do you think from a 2-year perspective he can hold both of these? Because he's saying that he's already sitting on significant profits.
Well, if you have time by your side, you should definitely hold on. But one thing is there, Mahima, the way investing is an art in stock market, booking profit is also an art in the stock market. So whenever you're getting the kind of profits you had possibly figured out or anticipated, it is always advisable to book accordingly. But from a long-term point of view, we have a positive coverage on both Nalco as well as Hindalco. And the ferrous, non-ferrous segment, entire metal universe, ferrous, non-ferrous, our sense is that aluminium, copper and zinc should give a better performance compared to the other metal commodities.
All right, okay. So that's the view of Gaurang on metals. And as he rightly pointed out, it's also about art of profit booking. But we've got Srinivasan who's calling us from Hyderabad. Srinivasan, a very good morning to you. What's your query about?
Yeah, my query is actually I was having TD Power System 1,000 shares at 1185.
Okay.
Just I would like to know what is their short-term target. Can I exit or can I hold it?
All right, got your question. Vaishali, what are you seeing on the charts for TD Power? Continue to hold?
I would say so because I think the way it has performed, it is likely to perform even better and it can go for 1,400, 1,500 targets.
All right, okay. The next one that we have is from Ashok Pai, who's writing us from Mangalore. He's asking about IKS and he wants to make an entry at the current market price and wants to know if it makes sense. Gaurang, any view on this?
I'm sorry, Mahima, I'll give it a pass.
Vaishali, any view on the charts? Enough data to provide any view?
Yes, so statically it's doing very well, and when I'm looking at a longer term period also, I think it's still in an upward trend. Very likely this can go towards 2200 levels. That was the previous high, so it can retest those levels.
All right. Okay. The next one that we have is coming in, and this is on Shakti Pumps. Our viewer wants to know whether it makes sense to make an entry right now from a 1-year perspective. Gaurang, anything on Shakti Pumps that you've got?
1,000 plus levels and then a downfall and then a positive tailwind in terms of the government policy. Har ghal mein nal or har nal se jal. And of course, water has been a big issue, but this stock has been a little bit erratic, honestly. We don't track it, so no specific comments. You need to be a little bit cautious.
Right. The next one that we have is on Biocon. Himanshu wants to know as to whether he can continue to hold this one or should he exit, and if yes, at what price? Vaishali, after the Maran exit yesterday, there are a lot of mutual funds that have gotten into this counter. Would you recommend him to continue to hold or sell, because he's not mentioned his buying price or quantity?
Well, I would say this stock has been quite a laggard, but now with yesterday's news, this has sustained above 435, 440 levels. So if it continues to do so, then I think next trading target would come to around 470 levels. So in my opinion, one should continue holding. 470 would be the technical target, and then we can have a relook.
Okay, the next one that we have is coming in, and this is on Hitachi Energy. Jeet from Kolkata wants a particular view on this one. Vaishali, what is it that you're seeing on the charts for Hitachi Energy? It's up 3% at the day's high point almost today. Should you continue to hold from short-term perspective?
So short-term perspective, of course, it has been in a consolidation. We saw good profit booking and then some consolidation. So keep a range. 32,000 for a short-term perspective should be the near-term stop loss, and 35,000 would be the target to look for.
Right, okay, the next one that we have is coming in on Geo Finance. Rajesh from Bengaluru is holding 700 shares, bought the levels of 336. He wants a 3-year view on this one, whether he can continue to hold, maybe average at the current levels. What would you recommend, Gaurang?
Allow me 30 seconds more, Mahima. Geo Finance, we do have positive coverage. Every time the stock has gone to 300, 325 or 350 plus, there has been profit booking and the stock kind of corrects. And there has been a large accumulation that happens in terms of delivery-based buying at levels of 220 and 230. Since you got in at 300 plus, I think first of all, prudent to have a little bit of more confidence and add at current levels to bring down your cost of investment. Don't go all out in terms of averaging. Maybe you can average some percentage of whatever you hold, and maybe closer to about 220 and 225. You can definitely put in a little bit more courage and average a bit more, but hold and average with the strategy.
Next query is from Sampath from Andhra Pradesh. He has bought 70 shares of PNB at a price of 208 for long term. Gaurang, should he continue to hold this counter?
Well, definitely hold on. Since he got in at 208, you're 50% down, Sumit, in terms of your capital investment, first of all. So you need to bring down your cost of investment. And to do that, you need to have investable amount to add to PNB at current levels. We do have a positive coverage on Punjab National Bank, now known as PNB, from a long-term point of view. Prudent to average in case if you want profitable exit. And that averaging should be quite a bit of substantial quantity since your capital is down almost 50%.
All right, okay. The next one that we have is on Ather Energy. Amitabh is holding 5,000 shares at the price of 380, and he wants to sell partially. 2,000 shares is what he's looking to sell. Is this the right time to book those partial profits? Vaishali, what would you recommend?
No harm booking partial profit because it's already shown a good run up. So yes, prudent to book partial profit.
Yeah, because he's sitting on a significant amount of profits for sure. So kudos to that, Amitabh. The next one that we have is coming in on Infosys. Jatin from Chandigarh wants a view on this one. He's got around 100 shares at the levels of 1239. Should he continue to hold? Vaishali, what's the view like?
Take it purely as a trading strategy. Keep 1,000 levels as your stop loss. And I think the stock can go towards 1,200 to 1,300 levels.
The next query is coming in from Ghaziabad. PG Sharma ji, आपका query पूछ सकते हैं?
जी, thank you sir, thank you.
शर्मा जी बोलिए, क्या हुआ?
Sir, I am holding Tata Motor passenger vehicle from 1 year, sir.
Okay.
At 394 ये मेरे को डीमर्ज होके मिला था, लेकिन मैंने पैसेंजर व्हीकल को रख लिया और उसको कॉमर्शियल को बेच दिया, तो वो तो बहुत अप हो गया और ये गिरता ही जा रहा है।
ठीक है, आप लॉन्ग टर्म के लिए होल्ड कर सकते हैं इसको?
सर मैं 1 साल से तो होल्ड करे हुए हूँ।
अच्छा, और
कितने दिन मैं होल्ड करूं जिससे मेरे रेट निकल आए? बीच में आया था अभी 400, तो मैंने बेचा नहीं, मैंने कभी कुछ कमा के बेचे इसको, या 400 तक आता है फिर लौट जाता है।
अच्छा ठीक है, तो मैं टेक्निकल व्यू ले लेता हूँ इस पे वैशाली जी से। वैशाली, एनी व्यू ऑन टाटा मोटर्स पैसेंजर व्हीकल? डू यू सी द स्टॉक टर्निंग बैक टू अराउंड द 400 levels?
No, I would say the stock has once again come back to its previous low, and this should act as a good support level. I think not in a hurry, don't exit right now. This can move towards 380 to 400 to start with.
Okay, all right. The next one that we have is coming in on Vikram Solar. This is from our viewer who is holding 189 shares, bought at the levels, sorry, that's the price I believe. 189 is the price and 4,000 is the quantity. And our viewer wants to know whether he can continue to hold this and the long-term view. Gaurang, Vikram Solar, anything you've got?
Well, the stock is well below its IPO price. Correct me if I'm wrong. IPO was at about 315, 332, if I'm not mistaken. And this IPO was in August of 2025. That was last year. We did give a subscribe, Mahima, as a disclosure for the IPO. I don't know if there is any corporate development, but I don't think so. In a short span of time, there would be any kind of bonus or split that has happened. I'm assuming this. Since he got in at higher level, prudent to possibly average at current levels to bring down the cost of acquisition and hold on to it from a longer term time frame. I think the entire sector looks quite promising, subject to, of course, you having a 1.5, 2 year plus kind of time horizon.
Okay, the next one that we have is coming in, and this is from Murli, who's writing us from Hyderabad, asking about J&K Bank. He's got around 50 shares at the levels of 136. A slightly long-term view on the charts. Vaishali, what would you recommend him?
So I would say this too is doing very well, and it is in a good strong uptrend. Look for a target of around 230, 240. That would be the level to watch to probably book profit.
Okay, all right. The next one that we have is coming in on MV Photovoltaic. Vasudev from Bengaluru says that he's bought 235 shares at the levels of 336. What should he do next? Gaurang, any view?
Sorry, no coverage, Mahima. I'll give it a pass.
Vaishali, enough data on the charts to give a perspective?
Well, I don't track this stock, sorry.
No worries. Okay, all right. We'll get your query answered in the afternoon show. The next one that we have is from Vasudev, who's writing us, and in fact, he's got a question, but he's mentioned the buying price, but not the stock. So I think I'll get back on this one. Tata Power is the other one where Shruti is writing in and asking about the quantity. The quantity that she's bought is around 2,700. The average price at which she's bought is 378, and wants to know, Gaurang, whether she can continue to hold Tata Power from a slightly long-term perspective. What would you recommend?
Definitely hold, Mahima, and this is one of the better placed companies in the entire power generation and renewable power, because they have forayed into solar in a very big way, and all those newer forays in terms of solar energy is going to add to the balance sheet to a great extent. And of course, they are into charging stations, etc., etc. Have a positive coverage, hold, and add on dips would be the strategy.
Next query is on Reliance Industries. Soumyadeep from Kolkata is holding 100 shares, bought at a price of 1,291 rupees. Should he continue to hold or sell from short-term perspective? Vaishali, any view on Reliance Industries?
Well, short-term perspective, continue to have a range of 1250 as support and 1320 is the resistance. Only unless and until it's moved beyond to 1320 can you expect a target of 1350.
All right. The next one that we have is from Abhijit, who's writing us from Patna, asking about SpiceJet. He's got around 1492 shares at the levels of 23. He says that he can hold this for the next 1 to 3 years. Is that a good thing to do, Gaurang? What would you recommend?
I wish things do change, Mahima, not only for flyers like all of us, but also for investors as far as the aviation industry is concerned. And unfortunately, Mahima, aviation industry has seen a lot of downfalls and failures. And you got in at 22, the stock is trading at 50% of your capital amount. I think alarm bells should have rung long time back. No specific comments because we don't cover companies. And there's some ongoing case also, which I believe SpiceJet has to pay some amount to some entity. We like Interglobe Aviation, Indigo in this sector. No comments on SpiceJet.
Okay, all right. The next one that we have is coming in on PC Jewelers. Our viewer is saying that, he's bought it at the levels of 15 rupees, 1,000 shares is what he's been holding, and wants to know whether to continue to hold or exit. Vaishali, what would you recommend on the chart? Because it's come down to 10 rupees.
Well, so same way, it has not been doing well, but today's candle shows a lot of strength. So this strength has to sustain. So I would say now keep a stop loss of 9.5 and look for a target of 12 to 30.
Okay, the next query is from Divya from Abu Dhabi. She wants to know whether is it a right time to enter Bank of Maharashtra from short-term perspective, say for the next 3 months. Vaishali, any view on this?
Well, Bank of Maharashtra, let me just see.
Is up 1.9% today, Vaishali.
It's currently at 80 rupees. I would say, well, it's not showing any clarity. It can consolidate, but I would say I prefer frontline for now.
Next one that we have is from Prasad, who's writing us from Chennai, asking about shipbuilding space. He's saying that is Mazagon Dock, Garden Reach, any of these viable to enter right now from a long-term perspective? Gaurang, what would you say? If yes, is this the right price?
So I think today, I think last evening or this morning, Mahima, we had some news flow as far as the Indian Navy and the Defense Ministry's possibility of orders. All are great companies, whether it is Mazagon Dock, Cochin Shipyard or Garden Reach. On Mazagon Dock, as a disclosure, we do have a positive coverage. So yes, you can definitely look at Mazagon Docks, but all of them, all three are great companies.
Shrikant from Hyderabad is holding Niva Bupa shares, 200, bought at a price of 74 since the IPO. What is the price prediction for short term? Vaishali, any view on Niva Bupa Healthcare?
Well, short-term view would be, say, keep a range of 85 to 90 for now. Nothing much.
All right. Okay. The next one that we have is coming in on Markson's Pharma. Gaurav Baheti from Hyderabad has bought it at the levels of 270. 185 shares is what he's holding. His holding period is 2 years so far. He wants to know whether he can sell it in the next coming week. Vaishali, do you think that should be the right strategy? Probably he wants some money in his hands. Would you recommend a sell in the next week?
So I would say it has got momentum today itself. So maybe my trading target could be around 285 to 290 levels. So, well, short term, that would be the view.
All right, it's time for a rapid fire round now. Vaishali and Gaurav, try to keep your answers as short as possible. The first one is from Sunil Kumar, who's asking about Shriram Finance. He's holding around 9,400 shares, bought at the levels of 679. Should he add more at the current levels? He's sitting on significant profits. Gaurang, what would you recommend?
Well, definitely positive. We have a coverage. Hold and add would be the strategy from a long-term point of view.
Next query is for you, Vaishali. It's on HDFC Bank. Anba from Chennai wants to know whether should he accumulate HDFC Bank for the next 6 months.
Yes, look for a target of 880 to 900 for 6 months.
Okay, the next one that we have is on IRDA. Our viewer Sampath Kumar has bought it from a long-term perspective. Should he continue to hold this one, Gaurang?
I'll give it a pass. No coverage, Mahima.
Okay. Next query is for you, Vaishali. It's on Polymed. Ranjit from Chennai is holding 19 shares, bought at a price of 2,059 rupees. Currently sitting on a loss. Should he hold or exit?
Add more.
Okay, the next one is on United Breweries. Siva from Vijayawada is holding 100 shares, bought at the levels of 1640. He's sitting on a loss. He wants to know whether to continue to hold. Vaishali, on the charts?
Hold and keep a stop loss of 30.
Next query is for you, Vaishali. It's on CDSL. Naveen from Bangalore is holding few shares, bought at a price of 1,435. Any short-term target on this?
As a disclaimer, this is our recommendation. Now that he's bought here, 1,400 should be the stop loss. Look for a target of 1,520.
Okay, the next one is on Just Dial. Our viewer has bought 100 shares at the levels of 790. Baji from Chennai wants to know whether they can continue to hold this one. Gaurang, any view?
No coverage. Stock has rallied almost about 35% plus. Be cautious.
Next query is for you, Vaishali. It's on Dishman Carbogen. Rahul from Tamil Nadu wants to know the next 6 months view on this counter.
Well, it is just in a sideways move, but all likelihood this can do well. 6 months horizon, I would look at a target of 240 to 250.
Okay, the next one is on Kirloskar Brothers. Dr. Lavanya from Eluru has bought 300 shares at the levels of 2180. What is the target and stop loss for this one, Vaishali?
1850 support, 2050, 2200 target.
The next query is for you, Gaurang. It's on IndusInd Bank. Gautam from USA has around 500 shares, bought at a price of 1030. Should he hold or sell? Any view for the next 12 to 18 months?
12 to 18 months, first of all, hold on. If you have investable amount, somewhere sub about 950, below 950, you can add an average.
Okay, the next one is on data patterns. Puneet is holding 25 shares at the levels of 4150. He wants to know whether you can continue to hold this one. Technical view on this, Vaishali?
Technical 4000 is the make or break level, so hold with that stop loss.
Next query is for you, Gaurang. It's on BSC. Vijay from Dubai is holding 180 shares, bought at a price of 3,914. Should he continue to hold or exit?
Positive on the sector, Somit. BSC happens to be a strong player. Positive tailwind in terms of NSE IPO, and of course, likely possibility of Indian capital markets performing well over the next 3 to 5 years.
Okay, CG Power, is this the right time to enter from a one-year perspective? Vaishali on the chart. Sudhir from Bengaluru wants to know.
I would say accumulate with support of 850.
The next query is for you, Gaurang. It's on L&T. Vivek from Himachal wants to buy this counter at current price. Should he do that?
Please buy and preferably do an SIP every month, whatever investable amount you have. We are positive on L&T from a long-term point of view.
Okay, Bank of Maharashtra, fundamental view. We took a technical view on this one, but Gaurang, from a fundamental view, should our viewer continue to hold? He's holding around 53 shares.
Well, I don't know what rate this gentleman has bought it.
Yeah,
point number one. Point number two, no coverage. Prefer Federal Bank and City Union Bank.
Next query is for you, Gaurang. It's on Kalyan Jewellers. Bindu from Hyderabad wants to know whether should she buy from long-term perspective.
Well, the stock has rallied almost about 40% or more. Correct me if I'm wrong, Somit. We prefer Titan company in this segment.
Bharti Airtel, what's the outlook like on the charts? Our viewers bought it at the levels of 1847. Vaishali, hold, buy on dips, reduce. Piyush wants to know.
Well, if it is in a trend, it needs to cross 1970 and look for 1980 as a trading target.
Alright, that brings us to the end of this rapid fire round. Vaishali and Gaurang, thank you so much for taking out the time and helping us answer almost 70 queries in this edition of Fast Profit itself. We'll try to hit that 100 mark in the afternoon edition. But with that, viewers, completely out of time on this edition of Fast Profit. But do stay tuned in because KYC comes up next.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
Ready for the next big IPO? Apply for it on Grow. Open your free Demat account, check all IPO details, apply easily in a few taps. And that's it. Download Grow now for stocks, mutual funds and IPOs.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
Ready for the next big IPO? Apply for it on Grow. Open your free Demat account, check all IPO details, apply easily in a few taps. And that's it. Download Grow now for stocks, mutual funds and IPOs.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
That if a boy from Ahmedabad with no capital and no connections could build, then there must be 1,000 more Gautam Adanis sitting undiscovered.
जिनके आइडियाज हैं दमदार, वो सब हैं वंदे भारतम के नेशनल स्टेज के हकदार। प्रो इनोवेटर्स, रजिस्ट्रेशन करो wandebharatam.org पर 19 जुलाई तक। An initiative by Gautam Adani.
That are propelling India to what we call the Viksit Bharat stage. Those are demographics, democracy and digitization. These three things are instrumental.
Hello and welcome to KYC. You are watching NDTV Profit, and it's a very interesting show where I'm going to get you interesting companies and their stories. Also the stocks which have risen or they have fallen. We'll try to get the entire story for you. But without further ado, let's start the show. The company in focus is going to be there, but you're going to guess that. I'm going to give you a very easy guess. I'm sure you must be understanding by now. This is an NBFC from Muthoot Papachan Group. Of course, it's not Muthoot Finance. The company has delivered a very strong Q1 operational update. Last week, we had seen a good momentum in the stock also. Today also, we are seeing a good momentum. And the stock is up 64% from March lows itself. And a very interesting take, the brand is endorsed by Shah Rukh Khan. It's pretty interesting, right? But let's try to understand which company I'm talking about. And the company in focus is Muthoot Microfin. This is the company which we'll be talking about. But why are we calling this company? Of course, the Q1 operational update is the most important thing. That's what we'll try to discuss. What are the trends looking like? And of course, in the month of July, we are at the mid levels. Has that trend improved? The Vision 2030, first time इन्होंने अपना capital investor day रखा, and they have given a long-term vision, and that shows more stability in this counter. GLG versus non-GLG accounts. What's the product mix change looking like? I'll explain you that in a while. Do not worry about it. NIM guidance for the short term. Is there a little bit of moderation to be there, or there is a cyclical play coming in? Also, we'll be asking the gold financing. This is a step towards more secured financing setup and the new industry trends to track. Where is the overall shift happening in terms of consumption trends? And to decode that, we'll have Sadaf Saeed. He's the CEO at Muthoot Microfin, where he'll talk about these important trends about the company and the industry as a whole. But come over, let's understand the company, what it's all about. Of course, this was featured in, we could say, in 1992, the company was formed. This is from Muthoot Papachan Group. This is the most important thing. Also, there are key segments. There is a small, a medium enterprise, there is LAP, which is nothing but loan against property, and also gold loan. So 3 segments they are working in. And of course, everyone's favorite movie star, Shah Rukh Khan, is the brand ambassador as well. They are trying to penetrate to other markets. They have almost 3.27 million borrowers, 1670 branches, and if you look at it, 16,000 employees. These are the numbers, but let's go more detail. Recently, the cost of funds, they reduced by 75 basis points. For an NBFC, cost of funds is nothing but your raw material. Your raw material costs are coming down. Also, you should know what are the key numbers or the words to track. And if you do that, do take a screenshot, share it with your friends and understand if you are a budding analyst. GNPA is nothing but gross net performing assets. Lower it is, better it is. Also, the second one is NII, that is the net interest income. Higher, the better. That's how you analyze the NBFCs. The third important number is ROA, ROE. That's nothing but return on equity, return on assets. We'll try to understand that, and these are the full form for it. Higher, the better. and NIMS is of course the net interest margins. Very interesting take is the GLPG and non-GLPG. What does this mean? ये है क्या? GLG is nothing but joint liability group. That means it's an informal group of individuals, can be 4 to 10 of them. But there's of course the asset quality might be under question, and that's why the non-GLG segment comes in. That's where the focus is coming in, and that's where the movement is happening. So the non-GLG accounts means the book is more secured. This is a very important point. Do note it down. And these are the accounts, how things are looking like. And companies trying to focus to increase this as well. This augurs well because unka book secured ho jata hai. Also, let's move on and understand how the Q1 performance was. This is where you start looking at the numbers. The AUM went up 18% on a year-on-year basis. Secondly, I would like to point out the overall collection efficiency that went up, the disbursements, 50% almost growth coming in. So that is where the momentum is lying, and this is the numbers of efficiency which I'm talking about. The digital perspective out is also very much important. This is the digital collections that has gone up to 40% from 23%. This is a mega trend, by the way. Do note it down. Why? Because the digitalization is happening in tier 3, tier 4 and even tier 5 categories. And how does the enterprise loan pan out when it comes to the states? Of course, the southern states, Tamil Nadu and Kerala, both of them are having the majority of it. If you just add this 37 and 50%, that's roughly 52% of the book coming in, and the other states it's equally divided, and that's what we try to understand. Let's move on and understand how the loan setup is there for the businesses. कौन-कौन से धंधे में कहाँ-कहाँ loan लगा है? Just to put that in simplified manner, services and agriculture we have manufacturing, and this is where the overall breakup it looks like. But yes, it is skewed towards the services portion and the agricultural and animal husbandry. This is where these three segments are having the highest exposure. But let's move on and understand what else is there or the positive factors for the company. They have a strong parentage, always remember that, and a good analyst recommendations. 5 of them are tracking, all of them have a buy rating. Operational update was strong. Street is expecting the July-August numbers also might be on the better side. Positive industry views and data coming in for the NBFCs. We understood brokerage is also turning bullish, and recently inka jo profile hai, there was a rating upgrade as well, and because of that the cost of funds are down, and it augurs well understanding the entire setup for the company. So these are the positive factors what may work for Muthoot Finance. And also the recent entry in gold financing, mind you, from first quarter these numbers have started coming in. This is where that secured lending portfolio comes in. So that is something to look out for. And I try to understand what's the other side of the coin. Right now the stocks have run up, so the valuations are not attractive at all if you want to take fresh positions. But apart from that, I haven't seen many big major points to discuss. So largely pros are officially outweighing the cons. But let's try to understand the KYC ratings, how things pan out. And of course I have tweaked it. जब भी आप NBFC companies को लाते हैं, then the rating agencies the rating parameters, they change. Now we have the operational parameters where I have got the AUM loan book also. I've got asset quality, I've got return ratio. These are pretty different, and if you are a regular viewer of KYC, and you must be asking where is cash flow. Remember, when you're analyzing these companies, the parameters change. But what doesn't change? Shareholding, street cred. This remains as it is. Valuations, we'll try to understand how the history of valuation has panned out for this counter, and the outlook as well, where I'll explain you the Vision 2030 which was there by Muthoot Microfin. But let's start with income statement and see what's the story looking like. Remember, the Q1 operational update also I have taken in for my analysis in this, and largely the top line growth has been pretty strong. The operational number also pretty much decent, 15% CAGR coming in the last 3 years. Let's pull up the Q4 numbers as well to show you how the numbers were. Net interest income and the net profit, that is where we are seeing a little bit of turnaround coming in. But remember, take things with a pinch of salt when you get at NBFCs. Lot of bottom line adjustments are there, so better to look at operational profit and the net interest income. But net, the margin profile also seems pretty decent, how things have moved on a financial year basis. So I'm going to give this a strong thumbs up when it comes to the income statement. Also, the next one is the operational parameters. This is cost of funds, NIMS, which I spoke about, and cost to income, how things are there. Largely, they have remained in a range bound here. Some parameters are good, some parameters are decent, some slightly weak. So, mila jula, operational numbers देखने मिल रहा है. AUM and disbursements is also very much important, and there has been an increase coming in from FY24 to FY26 for both of them. But is it very big? I don't think so. It's a decent growth coming in. It's largely with the industry or slightly plus minus here there. But net, I'm still going to give the operational parameters a neutral rating. So we spoke about the income statement, we spoke about the operational parameters. Let's go much more into detail. Asset quality कैसा है, return ratio कैसा है, and then we talk about the return ratio, the return on assets as we talk about it. There has been variations coming in, but it's again back. It's a good recovery coming in. It's around 1.3%. We try to understand what's the vision going ahead. Same thing happens for return on assets as well. So largely there is a recovery from the short-term levels, but will it go up going ahead or not? That's something we'll try to understand from the management. So right now, it is neutral when it comes to my analysis for the return ratios. Asset quality is very much important when you get a company like that, and the gross NPAs, if you talk about it, lower the better. And the action is definitely here. That's why it has come down, and this is where it shows a strength in my analysis for the asset quality. So because of that, and of course the net NPA is also coming down, I'm going to give the asset quality a strong thumbs up. Remember, the Q1 numbers also I have taken in my analysis. But let's understand shareholding, and largely we see there isn't much change happening. FIs, DIs, very much plus minus 1-2%, and promoters also around fixed at 55%. So let's move on fast and give a neutral rating right now. But let's try to understand the street cred, what has happened. If you're a long-term investor, I think the stock has tested your patience a lot, because for the last 5 years, the stock is down 10%. Kamai nahi hua. But if you're a medium-term investor, short-term investor, a momentum play investor, that is where you see a good returns coming in. From March lows, stock is up 64%. And even from the other criteria which I have got, a 35 to 44% healthy returns coming in the counter. So to negate the long-term loss, the short-term, medium-term has done well for the company. So I'm going to give this a neutral rating as well. Let's try to understand the valuations where the company stands. Currently, it's at 12-month forward price to book of 1.12 times. The peak is not that far. It's around 1.2x. And if you look at the average, that is at 0.9x. So largely valuations are not that attractive. The stock has run up a good multi-year breakout also. We are near those levels if you're tracking the technicals. But as of now, it's not attractive. So I've given this a thumbs down. But let's talk about Vision 2030. Let's talk about the outlook, what's happening here. The industry asset quality trend is stable right now in the short term. Up till the May data which I have seen, I can confirm that. And also they're targeting 30,000 crore AUM by the year FY30. Remember, the company has launched its Vision 2030. They aim for a 53.4% GLG and 46.6% non-GLG portfolio by Vision 2030. And I remember non-GLG means a better asset quality, because you can put a secured charge on an individual or their personal property. They're targeting a return on assets of over 5% in their Vision 2030. Currently it's around 3%. And also the ROE numbers also, they're looking at a higher space. So outlook is very strong. Street is rewarding the counter, and I'm also going to give this outlook a strong thumbs up. But let's try to understand and get you the entire KYC rating for Muthoot Microfinance. Where does the company actually stand? And we see largely the income statement, asset quality has done really well. Return ratios are still mixed. Operational parameters, same story repeats. And the same thing goes for the shareholding and street cred also. But one thing which I like is the outlook. But the stock has run up, so the valuations are not that attractive right now for fresh positions. So the total KYC rating is largely in line with our analysis. And the number is 5 out of 8 for Muthoot Microfinance. But the story still remains, what's the growth outlook going ahead, especially after a very strong Q1 earnings. And to decode that, we'll have the management with us. Sadaf Saeed will be joining us. He's the management of the company, and he's the CEO of Muthoot Microfinance. And a little bit tidbit about him: he has more than 25 years experience in the industry, 15 years with Muthoot Papachan Group, and also he has held leadership positions. And look at that: HDFC Bank, India Bulls, G, Countrywide, Saturn, and Spanna Spurti as well. So very experienced across the industry. And Sadaf will be joining us in just a while. Stay tuned to NDTV Profit.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
Ready for the next big IPO? Apply for it on Grow. Open your free Demat account, check all IPO details, apply easily in a few taps. And that's it. Download Grow now for stocks, mutual funds and IPOs.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति HDTMT.
Ready for the next big IPO? Apply for it on Grow. Open your free Demat account, check all IPO details, apply easily in a few taps. And that's it. Download Grow now for stocks, mutual funds and IPOs.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
That if a boy from Ahmedabad with no capital and no connections could build, then there must be 1,000 more Gautam Adanis sitting undiscovered.
जिनके आइडियाज हैं दमदार, वो सब हैं वंदे भारतम के नेशनल स्टेज के हकदार. प्रो इनोवेटर्स, रजिस्ट्रेशन करो wandebharatam.org पर 19 जुलाई तक. An initiative by Gautam Adani.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
The eminent juries who are here, and that itself speaks for the commitment towards highlighting the advantage which India is having. What I am looking for in this is that we should be awarding companies and individuals who have focused not only.
Welcome back to Know Your Company, and now we are joined in by Sadaf Saeed. He's the CEO at Muthoot Microfin. Good afternoon, Sadaf. It's always a pleasure to have you with us at NDTV Profit, and of course, congratulations on a strong Q1 numbers also coming in street rewarding. And recently you did a capital investor day. We'll get back to that, but first I want to understand the Q1 trends. What were the important factors for this up move which we saw in your overall operational numbers, and maybe give us a hint of what's happening in the month of July.
Good morning, everyone. Thank you very much for having me here. I think your analysis was spot on. The quarter one has been really good for us, and this is a story of a long-term kind of a turnaround that we have been talking about in the microfinance industry. After the difficult financial year 25 and 24, I think 26 was a good year, and 27 has started a very, very strong year. And in the process, we have made certain transition. We are diversifying ourselves into a multi-product company, not focusing only on JLG, but also focusing on products which are suiting to our customer needs. So our goal has always been to understand the need of a household that we are catering to, and design products to suit their needs. So certain products that we have introduced, like individual loan, which is for entrepreneurs who have been with us for 3-4 years and more, and who have shown trends of progressing forward with their businesses. We are supporting them with individual loans. So these are loans within the range of 1 lakh to 5 lakh. And then we have loans, which is a loan against property, which is an MSME loan, which is slightly bigger enterprise, but they need loans from 5 lakh to 15 lakh on a secured format. So that is one thing that we have introduced. And also being from a Muthoot family, which is a long history of gold finance. So we have introduced these products. All of these combined today contribute around 24% of our asset under management. And largely the asset quality improvement can be attributed to two parts. One is the diversification that we have done, the portfolio that we have built, individual loan, which is now around 3,200 crores, which is absolutely premium portfolio. There's no delinquency, near zero delinquency there. And we have disbursed more than 210,000 loans, and all of them are performing really, really well. We are disbursing only to clients which are having a credit score of 700 plus as per the credit bureau report. And then gold loans, we have done 200 crores, and we have done LAP loans, which is 75 crore. All of them are performing really well. And also,
Sadaf, I want to understand the Vision 2030. For the first time ever, there was this important day. I was checking the numbers, the slides were pretty big, but you had given us a very interesting perspective, not only on your company, but the industry growth. So I want to understand the Vision 2030 for the company right now.
Yeah, I think the vision kind of plays out in the way the economy is developing. If you look at our Indian economy, back in 2010, financial inclusion was needed in a way that we needed to open a bank account. At that time, out of the adult population, only 30% of the population had any sort of a bank account. But after the recent government has taken over, I think there were actions taken like Jandan account, which allowed accounts to be opened to every individual. So almost 90% of the adult population today has a bank account. So to an extent, financial inclusion from the perspective of reach has reached a good amount of numbers in terms of penetration. So the focus now shifts to meaningful financial inclusion. And that is what we are seeing as a demand from our customers. So their aspiration and their needs have also progressed.
Right. And Sadaf, just wanted to understand the GLG business and the non-GLG business, how your product mix is moving and why this is necessary. A little bit technical it gets for our audience. If you could just simplify it for us.
Yeah, so our aspirations are, as you have correctly pointed out, around 55% of JLG and around 45% of non-JLG business. I think non-JLG business, which we are building, is a business that we are building on the base of our microfinance customers who have progressed over the time. What we have done, we have studied around 3.2 million borrowers of ours, and we have seen that where they are borrowing from. And we have seen that almost 1.2 million customers are borrowing from retail lending space, which includes loan like business loan, personal loan, loans like gold loans, loan against property. So these are the products that we have catered into our basket. And now we are trying to offer these loans to our customers. So without over leveraging them, we are giving them better product, better services from the Muthoot fold itself. So that's the effort that is going to play out till 2030. And we're going to transition the customers who are borrowing from outside to come back and borrow from us and have a larger relationship beyond just a JLG relationship. So that is what is playing out. Our short-term target is we should be at 75-25, which we are very close. We will overachieve this target in this financial year. We will be somewhere close to 70-30, 70% JLG, 30% non-JLG by end of this financial year. The progress is really good. And quarter one has been great. We have almost disbursed 2,600 crores of loans, out of which around 1,300 has been non-JLG business. So a good amount of mix will be achieved, and this will give us stability in terms of earning. The volatility which is there in terms of microfinance because of seasonal fluctuations, that will be avoided by
Sadaf,
this.
Just wanted to understand the short-term NIM guidance. What kind of NIMs are we looking? Is there a moderation at play, or the story is different here?
No, our NIMs are expanding. Our cost of fund is reducing. If you see from the last financial year, the cost of fund reduced from 11.02 to 10.27%. And recently, we have also had a rating upgrade. We have been upgraded to AA-. So that will also reduce our borrowing cost. So we feel that our cost of fund will reduce by 25 bips. Plus our yield is also expanding on the portfolio as the asset quality mix improves and we have a better asset quality. There are more yielding asset than the non-performing asset. So that will give us more yield on the portfolio. So we anticipate that by end of this year, this NIM will go to around 12.5 to 13%. And going forward in the long term, we anticipate around 13.5 to 14% NIM.
Fair enough. So NIM guidance is pretty strong coming in from Sadaf. But the gold financing business, of course, there is a strong parentage also. But now you're moving towards the secured financing setup. So how does this change in your product mix going ahead, say next 1 year, 2 year?
I think that is a very good question that you put. We are in a very strong position to offer this product to our customer because of the parentage, because gold finance needs a lot of understanding of the business and also investment in the infrastructure. So the way that we are offering gold loans to our customer is in the co-lending partnership with our parent company, Muthoot Fincorp, where we have 60% share and Fincorp has a 40% share. And Fincorp offers us the expertise of underwriting in terms of assessing the gold and also storage of the gold, while Muthoot Microfinance continues to source the business through its client and its wide network of branches. So it's a very strong relationship, and which is a unique kind of a proposition because not many of our competitors have an experience in gold and they have the infrastructure of gold. So this we feel that will really scale up fast. We are already disbursing around 100 crore per month in gold. We have a target of around disbursing 1200 crore this financial year, and we'll be around 500 crores of AUM for gold by the end of the financial year. The only thing that gold runs off fast, but it adds to your ROA very healthily.
Sadaf, the last question, and this is something for an analyst or a student who is, looking at you for the first time. What are the new industry trends right now which have changed from the current or the future? What things will happen in your industry?
See, one thing which is very clearly changing is that microfinance, which was largely focused at the woman borrower, is now moving towards the household needs. And household needs may vary from just an unsecured loan to maybe a finance of a two-wheeler vehicle, maybe a business loan, or a finance of a consumer durable like a computer for the child who's studying, or positioning from just an inclusion space to meeting the needs of the borrower in a holistic way. And the more the people are able to offer multiple products to the customer and create a wallet share into the customer's wallet, I think the better they would be and the stronger would be the relationship. And also there is a digital wave which is happening. So customer is now having access to digital payments. So 40% of our collection is happening entirely digitally. Whole of the portfolio that we have built on non-JLG is entirely on a digital collection model. So all the installments are non-JLG is entirely on a digital collection model. So all the installments are is changing and transforming into a formal financial setup.
Yeah. Sadaf, that's a very interesting take coming in the industry, and for a budding analyst, they should hear what you are saying. But before we favorite football teams also, I keep following you on Twitter. But if you had to say, who is expected to be the FIFA World Cup winner for you?
My favorite team is out. France, I was supporting to finals, so hopefully England will lift the cup after 6 to 6.
All right, so the cup comes back home. Thanks a lot, Sadaf, for your views on the industry, football, and your company as well. It's a pleasure to have you with us at NDTV Profit, and best of luck. So a pretty interesting conversation with Muthoot Microfinance. Investor Day, and Street is quite bullish going ahead as well. So for interesting stories like this, stay tuned to NDTV Profit and keep watching KYC.
Presented by Tata Azura, हर रास्ते का सुपरस्टार।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Details apply easily in a few taps. And that's it. Download Grow now for stocks, mutual funds.
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो
लांच की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार।
Open your free DMAT account, check all IPO details, apply easily in a few taps. And that's it. Download Grow now for stocks, mutual funds and IPOs.
Investment in securities.
That if a boy from Ahmedabad with no capital and no connections could build, then there must be 1,000 more Gautam Adanis sitting undiscovered.
जिनके आइडियाज हैं दमदार, वो सब हैं वंदे भारतम के नेशनल an initiative by Gautam Adani.
Benchmarks hover close to today's highs with the Nifty inching towards 24,200 level. Sensex gains more than 400 points. PSU Bank, Oil and Gas lead the gains. IT and metals on reported a sharp earnings miss and flagged softer enterprise software spending, raising concerns ahead of the sector's earnings season. Oil prices extend their rally as President Donald Trump of the US threatened further strikes. Supply concerns firmly in focus for crude. Tata Elxsi remains under pressure after its June quarter results as brokerages flagged sharp business segments of the company. Ather Energy shares jumped up to be completed through a preferential issue within the next 15 days. Markets at 12. I'm Nisha Podar. Let's take you through the markets. And yes, Nifty 50 in the green. Touch and then finding it difficult to stay on to that position, but still maintaining the gain. Markets, and yes, that is also in line with the key indices with 0.5% gain on the mid-cap universe as well. When we talk about what are the sectoral, play that is really taking place, what's helping the overall market momentum and what's not? Well, it's IT, again, a problem sector. Once again, with global cues being weak from IBM's precautionary statement. beta metal sector, that is also a top dragger. But what we are talking about here is financial services, PSU banks, oil and gas. These are the sectors which are the top gainers. In fact, taking a look at Nifty Bank, that is the one which is taking the lead and the charge when it comes to the benchmark indices, really playing up today and performing. So if you take a look at the contribution chart coming in, the top performers are from the banking space. And you know that with the war worries, either the economy is looking good or is on the downward side. And that's where the play really comes in big banks, especially from the private sector. So HDFC Bank, ICICI Bank being the top gainers today. Along with that, Reliance Industries, their results come in on Friday this particular week, and middle of the week, that is really on the gaining streak. On the downside, from yesterday, but at the current moment not touching 24,200 levels or sustaining from yesterday, but at the current moment not touching 24,200 levels or sustaining at that when we talk about Nifty 50. Feroz Aziz, joint CEO of Anand Rathi Wealth Limited, joins in now. Feroz, always a pleasure to welcome you on NDTV Profit. Of course, it's not the day-to-day movement anymore about the market, but the long-term vision that you have said is on the bullish trend. Looking at the last week when we spoke to this week, any new factors that have really emerged which changes the themes or the investment strategy?
I think between last week and this, what has changed to my mind is the fact that the FIIs have been topsy-turvy in terms of they'd given a good 15 days of positive inflows for the second half of June. That kind of consistent trend doesn't seem to have emerged in the last 1 week. They're more sellers than buyers. They have been more sellers than buyers. That's one. Second, what's heartening or what is giving me some degree of comfort is the fact that markets are, from a FII short standpoint in the index futures, is 91% short. Whenever markets are so heavily short in the cash market, FIIs have sold, and in the futures market, if FIIs have sold, automatically there is hardly any more selling from the big boy, which is FII, expected to come. And domestic guys got another 29,000 crores in June. Of course, 32,000 crores of SIP number, which was predicted. Of course, it's a writing on the wall, and the projection for the year end, financial year end, is 36,000 crores. So SIP numbers came in. FIIs who were almost trending changed. A good part is they're also net short 91% in index future. That's why I last time told you markets are going to be resilient. Bad news coming from Trump Sahab will not get us come back to 23,000 so easily. And even if it went there, of course, anything can happen. But staying there will be difficult.
Right. So there is enough support levels really coming in, Feroz. But looking at the earnings season so far, and IT is something that has been a spot of worry and actually very volatile. And most of the experts I have spoken to in the market have now stated that since IT is going through a lot of understanding and turbulence, it is more of a trading play than an investment strategy. What's your view?
I have exactly the opposite view. It's surely not a trading play. Why is it not a trading play? Because it derives its betas not variable. And one result in the US of a company can move a stock by 24%. IBM fell about 20%, then rose again. The kind of volatility they throw up, you know what's the volatility of Dell stock, which has been there for decades? 112% is the standard deviation of that stock. So what I'm trying to tell you is Indian IT is not a trading play because it is deriving its volatility from the US IT. And US IT's volatility, if somebody put it on an Excel sheet, which most people don't do, but they have an opinion, unfortunately, you will be shocked. Dell is quoting at an implied wall of 112. January 5th will be shocked. Dell is quoting at an implied wall of 112. January 5th options. That's what I'm trying to tell you. Would I trade a standard deviation? Then it's okay. But if I'm buying and selling underlying stock, no. when the volatilities are high, you have to just go long or short gamma, depending on what your opinion on the volatility realized and implied are. So that's one. Second is, I think it's still an investor's bet, because 2-3 adversities for IT have come together. The AI thing is one part of it. I don't think AI has created that kind of damage alone. There are other 2-3 factors which are hardly spoken about, unfortunately. The other factor is IT top 2, in Nifty, just about 6 months back, there were 2-3 companies in the IT space in the top 15. So when they share an index with MSCI, largely from the $2 trillion, which follows this index, MSCI Emerging Market Index, where every country has a standard index by MSCI. We have 164 stocks representative in the, may not be in a few days, but in a few months or years or quarters for sure.
All right, so positive view coming in on the IT sector. And Feroz, then which are the sectors where you see the valuations at current levels looking mouth-watering for a long-term investment?
Statement. Anytime a sector as large as 36% of Nifty, 36% of Nifty is banking and financial services. If that is quoting at 1.5, 2 sigma lower than PBs it has quoted for the last 10 years, and last 10 years have not been astronomical valuations. Have compounded at 12.9. So people might say valuations are concerned. I don't know where they come up with this. The largest weight of Nifty is quoting at 2 sigma lower than the mean and median valuation. Probability to those numbers which are there in 2047, banking has to be a huge lot of cleanup which has happened after COVID. We were one of the smartest countries where we didn't distribute cash to people. We distributed extra loans. So I personally think banking is mouth-watering. Sorry for the longish kind of an answer.
No, Feroz. So yes, banking, and whenever the FIIs really return, the first it's always a pleasure speaking to you right here on NDTV Profit. Thank you. All right, we have been speaking about the IT sector, and the first set of IT earnings has really largely met the lowered expectations. AI execution, deal momentum and demand trends really remain the key monitorable. And what is the larger overview? Jasmeet, our in-house expert of IT, gets us all the details in summation.
For the Indian IT, this has been a roller coaster year, and where Nifty IT is down about 20 to 25% on Y20 basis. Now, when you look at the earnings season, we're seeing a churn in the overall IT space, and the results. TCS, the numbers have come in line, where we also see a good deal momentum for the company, and also company was added recently by Kotak into the model portfolio as well, and since then we are seeing a good momentum in the stock as well. Now, Tech might cut its guidance as Accenture has cut on the back of the slowdown, but HCL Tech has maintained its guidance, and also the over TCS and Infosys. Now, when we look at LTM, while LTM becomes the third company in the top, fourth company actually in the top 10 IT space, where Nifty IT space, where they have come out and declared the AI revenue of $150 million. When you compare LTM's revenue with TCS or HCL Tech, LTM's currently for the company. And in Q4, we had seen LTTS had moved away from the low margin projects, and in this quarter, we are seeing a turn that last year on the valuation aspect, the current IT valuations are anywhere between 13 to 14 times, which are compared to Accenture or Cognizant international players, and they have been always slightly expensive. And yesterday we had also seen IBM report its overall earnings, which was a miss in terms of the estimates. Yesterday we had also seen IBM report its overall earnings, which was a miss in terms of the estimates, but the overall cross hit for Indian IT was negligible. And the consulting business for IBM has stayed resilient and has also grown in the Q2.
That's right, Jasmeet. That's an important point to make. And yes, thanks for summing up an exhaustive research. Now, Sandeep Agarwal, the fund manager and co-founder at Suwailo Investment. News points you are enriched with the data coming in from a few of the IT companies already, giving you a view of the entire picture for this earnings season, and IBM also making a picture for this earnings season, and IBM also making a big announcement which really impacted our stocks and our ADR. Now, Sandeep, the AI budget shift. What is it that's really hurting the Indian companies, and how much of the cognizance will you put from IBM commentary on the Indian IT services sector?
Hi, good afternoon, and thanks for having me on the show. So, right now what is happening that every which so whatever is happening in the US market, for example, the way Accenture has been thrashed, Cognizant has been thrashed, and resultant in India also, everyone is a lot of money has been lost in the sector. Honestly, the index is down 50%, and so the challenge, I will tell you, what I see in most of the cases is that almost everyone who is invested in IT or who wants to be invested, we have seen last 20 years 3 disruptions, but cycle is different. So in every will get benefited, and then slowly, because we are at the last leg of the value chain, that means we are the last leg of beneficiary, so that cycle remains same. Unfortunately, everyone who is invested in massively negatively impacted in the initial phase of disruption, and we massively benefit at the fag end of the disruption. But unfortunately, still, despite seeing it so many times, people are not believing it. Every time when disruption comes, they say that this time it is different, and this time our IT industry will be completely destroyed.
Got your point, and to a large extent, this particular earnings season, almost all the IT companies have up on their balance sheet. And how do you read into this? Also, now levers being templated, the capacity of each of the companies well discovered. Don't you think the focus of new upgrades or downgrades have shifted towards the TM has over 12% contribution in terms of revenue. Of course, the base is smaller than TCS, but TCS has 8% coming in from the AI revenue. How do you read into these new matrices? And my second point to this, which we can deliberate on also, is the outcome order as well as the potential for each of the companies. How do you see this?
So, the right way to look at the very important metrics which most of these companies are reporting is the AI revenue as a percent. In AI. So the right way to do the maths is that, if 12% is, let's number, right? And that is the gap which these companies have also filled. So to arrive at what was the actual non-disrupted or steady state growth, that you can arrive by doing that to 14%. And because they have lost in the renewal, which has come in the AI side, 30%, we all know that, AI is at least 30% more efficient in terms of effort. So they obviously 12% of the revenue, which means the total growth would have been in the range of 12 to 14%, which is reflecting as 0%. So that is very important point for me, because best of my understanding, the math, I think that, maybe this quarter and maximum September quarter is where all the deflation will be accounted for, which means that whatever you grow, that whatever 10, 12% you grow, it starts reflecting. Now, growth will start showing up from December quarter is my call. And if that happens this time, because there are no additional direction, where 6-7% dollar revenue growth and 12-13% PAT growth and a cumulative for over next 3 years cumulatively, which means the CAGR of EPS has to be 12 to 18%, which is a very good, phenomenal CAGR. Even without any re-rating, that is the kind of return you should make.
The IT sector. Some of the stocks are still gaining in momentum, like Tech Mahindra, Coforge, which made a big acquisition towards the AI thrust. HCL Tech, which was down yesterday, is now seeing some. So a little bit of impact of IBM, not across the sector. Now, I want to understand one particular aspect. Looking at the AI attempts, do you have a segmented for the IT services pack, which are part of the IT index?
No, it is very simple. So, you don't have to do any research on that. It is there. Data is there. You have to just do the calculations of given the AI revenue. So leave aside the ER&D companies where I have still negative opinion. So just to give you ER&D should fall by 70%. Now, IT services have fallen by 40-50% on an average. ER&D still has fallen only 45-50%. So we have another 20% correction which should happen in ER&D, because I firmly believe is where you are using, you cannot afford that talent, so you are taking very small quantity of that talent, you are training your existing talent so that you need this much AI revenue. Problem is the supply chain. There are not so many talent who can come and deliver, and they are very expensive right now. So I
That's
think
right, Sandeep. Yes,
this will rationalize.
Yes. Challenge right now, and that's why you've seen some of the companies really go in the path of collaboration, in this direction. And also recently HCL Tech has invested in Sarvam AI. How do you see this particular combination really going forward? And in terms of your last bit of outlook for the IT is
the only way, because we are not into the first leg. So the first layer is the hardware. To the services. So as soon as you will see continuous ramp up in enterprise AI implementation of this collaboration will train your workforce much quicker than otherwise. So I think we are in the right path. On outlook, I have clearly said that next 3 years I see 45 to 70% return in the sector X of ER&D, and I stand by that. And I feel that markets are generally very smart as soon as they start to call that. But I am very positive. I think that X of ER&D, everything will do phenomenally well from here.
All right, very important takeaway. And in 3 years, about 70%, upside, and may be baked in much earlier as the recovery is seen. That's the big highlight, Sandeep. Always. Let's take it across to other stocks which are in focus today. Let's see what makes it to the list. Parth is standing by with all the stocks which should be on our radar. Tell us, Parth.
Yeah, so 4-5% in the last two sessions due to strong results on the back of better pricing and strong execution as well. Which reported a furnace explosion in the second unit of its Tamil Nadu plant, and the production has been temporarily suspended while the damage assessment still remains underway, and the losses are being covered. Mr. Kishore Rajkaria has tendered his resignation. It was due to personal reasons, and his relieving date is yet to be announced. So these are the stocks that you should have on your radar for today.
All right, Parth, thank you. On markets at 12, but market movement, action and news and views continue on the other side. Keep it with NDTV Profit. Thank you so much.
Superstar.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
Ready for the next big IPO? Apply for it on Grow. Open your free demat account, check all IPO details, apply easily in a few taps. And that's it. Download Grow now for stocks, mutual funds and IPOs.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पीमार्क मस्टर्ड ऑयल में ही खाना बनाती थी। ये आपके लिए।
कुछ तो बात है इस दिल में।
P-Mark, the mustard specialist since 1933.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
Ready for the next big IPO? Apply for it on Grow. Open your free demat account, check all IPO details, apply easily in a few taps. And that's it. Download Grow now for stocks, mutual funds and IPOs.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
That if a boy from Ahmedabad with no capital and no connections could build, then there must be 1,000 more Gautam Adanis sitting undiscovered.
जिनके आइडियाज हैं दमदार, वो सब हैं वंदे भारतम के नेशनल स्टेज के हकदार। प्रो इनोवेटर्स रजिस्ट्रेशन करो wandebharatam.org पर 19 जुलाई तक। An initiative by Gautam Adani.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide. We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
As India's mobility
Hello and welcome to NDTV Profit. You're watching Trending Stocks at NDTV Profit Suzlon Studio as we speak right now. I'm Hiral Tatia and with me is Sharad Dubey, who's as always standing at the profit market bit. Sharad, interesting day of trade right now as we speak. If you just pull up the heat map in terms of Nifty 50 and if you have to look at the sectoral indices as well, you'll actually see the kind of moves that are coming in. What is interesting is the resilience that IT has been showing in spite of what IBM has done. You have Eternal, Shriram Finance, Ultratech, Bajaj Fin, Indigo, interesting names that are bucking the trend today. What's losing out is the Power Grid, Hindalco, few of the IT names which the cuts, the maximum is 1% in terms of Infosys. You have HUL as well, which is under pressure, and a JSW Steel. But clearly 120 points uptake, we've been able to sustain above the 24,150 mark as well in terms of Nifty 50.
Right, that's right. Good afternoon, Hiral, and we are seeing a market seeing a good rebound coming in. Both Nifty, it's above that 24,100 mark, that 23,800 which we are talking about. It's really nice, you could say a good support level bounce has come in. Same thing for Nifty Bank, but the interest rate sensitive stocks are doing really well. Nifty Bank setup is looking much better. Let's pull in the Nifty Bank chart also to give you the entire picture of how things are panning out. The BFSI space, a good buying, numbers are coming out strong, be it banks and even the broking house numbers. Will get you those details as well. But majority of the asset classes have stabilized, and this is of course on the macro developments which are happening, and street might be overlooking what Donald Trump had did the weekend or last week itself, and both of them rebounding after two sessions and a good momentum coming in both of them. The technical setup, of course, Nifty Banks is much better, but let's get into much more details, especially the sector specific moves. The interest rate sensitive Nifty PSU, banks, all of them doing really well. A good buying coming in. The IT stocks have shoved off the IBM scare which was there, and this was the trend which we had picked up earlier and the first amongst everyone in the morning itself, that there is no major scare happening from that. Value buying back in Smiths, and this is a good reaction. Look at Nifty Small Cap 250 Index and even the Nifty Mid Cap. They are doing well and better than Nifty Index. Also, if you look at the other important factors, the options data are suggesting more further technical up move here as well, and this can sustain going ahead, but of course there will be some MSCI adjustments in the last moment. Global cues, soft US inflation data, and that has triggered the risk on sentiment across the asset classes, emerging markets, crypto, you name it, and that's where the momentum is there. But today rupees has strengthened and even the yields have cooled off as well. But what should be there in your radar is also important. The India-UK FTA has come into force. Textile stocks are buzzing. Can have a look along with United Spirits. And also Q1 earnings, HDFC Life, ICICI Lombard and HDB Financial, they are going to come out with their numbers ahead of it. All of them are buzzing positively in the trade. And of course the main one, FIFA World Cup 2026 semi-final between England and Argentina is also there, and excitement is there. But the market's also showing a good excitement going ahead. Back to you, Hira.
Okay, so it's the FIFA World Cup excitement that's going to be there as well in terms of the day today. But very quickly, let's just pull up a Patanjali on the screens, because 18 to 19% is the kind of intraday cuts that we've seen on this counter. There has been a mild recovery that has come in, and what's happened over here is, if you see in terms of the stock, large volume action, almost 23.5 million shares traded so far in the first half of the trading session versus a 20-day average of close to 2.5 million shares that were traded. Now, what they've come out and said on exchanges is that they continue to remain focused on growth. They are carrying out their business operations in ordinary course, and there has been no material event requiring disclosures currently. There is some bit of a clarification coming in on some of the news rumors that were doing rounds. So that's with regards to where Patanjali goes. We will try getting the management as well to understand as to what's really happening and what is getting this kind of pressure there. But clearly, if you just pull up let's just pull up a 1 year chart of Patanjali and see what's happened there as well, because that stock has been on a downward trend since quite some time. If you see the 1 month, 21 to 22% is the kind of cuts. Can we get a 1 year chart as well of Patanjali to understand the trajectory that has been followed on this one?
If you see in the last 12 months, 42 to 43% is the kind of slide that we've seen. So the stock has been on a downward trend. Where are the concerns is the question that we need to check with the manager. Patanjali is concerned in today's session. In fact, Sanjeev Asthana, CEO at Patanjali Foods, joins in. Mr. Asthana, welcome to the show. Always a pleasure to speak to you at NDTV. This is Hiral on this side. My question to you is, lots being spoken about right now as to what's happening. The volumes are pretty large in terms of the stock as well, down nearly 17 to 18% in intraday trade. What do you have to tell? Pretty large in terms of the stock as well, down nearly 17 to 18% in intraday trade. What do you have to tell investors?
So there is absolutely no adverse sort of news to report. It's business as usual for us. The company is on a very strong footing, and as we've always said, that we are still completely debt-free. The business is running as usual, and so in the normal course of activity. So really, in terms of what's happening at the stock market end, I would not be able to speak much, but I can assure you, and that on behalf of the company, that everything that we are doing is absolutely in the normal course of business.
So, Mr. Asthana, people or, there were market media reports indicating that there were front.
So there's none at all. As you do know that the Food and Drug Administration as part of, on the food matters. To answer your specific question, there is nothing that has occurred in the last 15 days. And even prior to that, there's nothing adverse, nothing of that kind.
So when was the last regular routine FDA
Vedic medicines, which was not even Patanjali Foods, a listed entity, and it was a very insignificant, value of the business that we do in a particular product. So this has got nothing to do with Patanjali Foods.
So. One, and was there any observation that was given out, even if it was not for the listed entity?
It was not. This is, I'm saying, it's all a dated information. That way, it's as a part of the routine examination.
I agree. Amongst investors right now. So if they are getting a clarification which says that it is not related to Patanjali Foods, puts all the worries to rest, hence the clarification.
So that I've already said that whatever has happened, and the point I'm trying to say is that anything that has happened is more than a month back. Another promoter entity, which is Patanjali Ayurved, which has got nothing to do with the listed entity.
Mr. Asthana, we're talking about the large deals which are happening. Is there a big
that, when this information is declared, I mean, we get routinely the information from stock exchanges. Exchanges already reported on the business front as to, what is going on, and as business as usual. And to the media as well. That's exactly why I'm here talking to you. They do that. We watch the stock market, but that's of least interest to us. We're focused on our business.
Mr. Asthana, just a follow-up question for you, and that is a significant part of the promoter holding is pledged. Has that pledge numbers gone up or something like that? And due to this, there is a sharp fall coming in the price. What's your comment on that?
So just to correct that. There's no significant part of pledging, etc., which is done. It is something, it's a very different positive news only that, the promoters have committed not to sell the shares. So there's absolutely, as we speak now, that there's nothing which has been pledged by the promoters.
Okay. So, Mr. Asthana, what you're saying is zero promoter holding is pledged, number one, correct?
That's right.
Shares where you would have to pledge more. So that concern is away as well.
No pledge, so there's no question
Agreed.
of value
Got it. We had one show, on our show, where there were queries coming in from a perspective that what's happened from a business side of it. Because in the last 1 year, there has been deterioration in terms of stock price as well. You have a tall target to achieve in terms of the guidance that you've given for FY27. Anything stands revised there? I think we've lost Mr. Down nearly 17 to 18%, a mild recovery coming in from the day's lowest levels, but a 15 to 16% decline. Just to reiterate for all our viewers, there has been no FDA inspection when it comes to any of the units of Patanjali Foods. That is what the management has clarified on NDTV Profit. A month back, yes, there was a FDA inspection, but that entity. And when it comes to pledged shares as well, zero promoter holding is pledged is what the management is indicating right now. And hence, the value deterioration that we're seeing in terms of the stock price has no relation with regards to where the overall pledged share value goes. And very EQG could be one of the promoters, one of the entities that would have sold. There is no conflict. The data that we will be awaiting post the markets close as well. In fact, let's get in Deven Mehta from IDBI Capital Market as well. Deven, welcome to the show. You're seeing what's happened with the Patanjali food in trade right now.
The way stock has given correction, and I think until and unless the results are showing some good signs, I think one should not buy this particular counter. This can correct towards 305 as far as technicals are concerned.
Right, Deven, let's start the rapid fire round right now, and the first stock in focus is Nuvoco. The operational numbers were strong and the earnings as well. Your views on that?
Yeah, I think the stock has given a strong breakout above 368 levels. So those who are holding and hold with the stop loss of 368, the stock can move towards 430 and 440 levels.
Right, the next stock, Ather Energy, good volume-based buying coming in, and also additional investment announcement of 1,000 crore in Hero Motor. Do you think there's going to be more sustainable momentum in this counter?
Yeah, I think overall structure is positive, but we have seen higher and higher lows from last 4 consecutive weeks. So I think one should try to book some profits as we can see, it has entered an overbought zone on daily and weekly chart. One should try to book profits in this particular counter.
And Landmark Cars also, if you look at it, a strong operational update, good follow-on buying. And Landmark Cars also, if you look at it, a strong operational update, good follow-on buying.
Has moved, and yesterday we have seen that stock has given a breakout over 465. So those who are holding further move towards 625 levels. So yes, definitely one can hold this counter.
Demand is also at play. Just wanted to get your views in this. Is there a risk-reward ratio or a trade to be
into a range? On the lower side, there is support around 225, whereas on the higher side, 250 will be acting as a resistance. So one should try to avoid until and unless it do not cross the range.
as well. Anything on the charts here?
No, I think one should avoid this particular counter. We have seen correction in this counter, and there's a slight bounce back from in today's move. But again, on the higher side, it has a resistance around 520. So one should avoid till it closes above this particular level.
Right, and Grow is also doing well in trade after the earnings has come out. Good time to enter this counter. Do you think the run-up has already been there in the stock now?
I think wait for the closing. Today's close is very much important, about 210. So if it closes above 210, then 225 to 227. So yes, closing about 210 is positive.
Right, so that's the end of the rapid fire round. Over to you, Hiral. What are the Google trending stocks? Is it the earnings? So that's the end of the rapid fire round. Over to you, Hiral. What are the Google trending stocks? Is it the earnings?
Patanjali has had with NDTV Profit, and that's one which is seeing a good amount of recovery, 14.5% downtake, a recovery from the day's lower. Stock which was down nearly 18 to 19% is trade, has recovered and is now down 14.5% as we speak. But on Google Trends, it's very interesting right now because it's just the new listing which is trending. None of the stocks from the secondary market have made it to Google Trends today. It's Kusumgar, a stock which listed today. The stock is nearly up 43 to 44%. Volume's also pretty okay coming in there, but I don't think so. This is a conversation that we can have with Deven Mehta right now. But Kusumgar, the IPO which actually listed today, is trending as we speak. But moving on, you know, you have OMCs that are in focus as well. And Sharath, I think the Morgan Stanley note is pretty bullish. What are you picking up with Somit?
Exactly. Thanks a lot, Hiral, for that. Somit is joining us. Of course, Somit has a good coverage on this OMC space. But what's the brokerage take coming in?
Well, Morgan Stanley has come out with this very bullish note where they've hiked the target price for all the three oil marketing companies, IOCL, HPCL and BPCL. And now the upside post this target price hike for IOCL and HPCL is more than 50%. Hence this excitement coming in for the oil marketing. High target price to 588 from 511. For BPCL, they have maintained their overweight rating and have hiked the target price to 444 from 385. This also suggests an upside of nearly 46%. They are saying that refining margins are on an uptrend and they will continue to remain on the higher side despite the losses that they might be seeing on the marketing side because of an increase in the crude oil prices. Refining margins would continue to remain on the higher side and that would surprise the earnings going forward. They have also clearly every time oil marketing companies have come out much stronger, and that is what they're expecting this time as well going forward.
Thanks a lot, Somit, for that. And of course, a lot of momentum is there in the earnings also. Hiral, anything on the earnings side right now?
Yeah, right now you just have Union Bank numbers which are flashing at the bottom of your screens as we speak. Let's just pull up the intraday chart as well. Your net interest margins have improved on a sequential basis. Two of your screens as we speak. Let's just pull up the intraday chart as well. Your net interest margins have improved on a sequential basis. 2.8 versus a 2.64 is what you're looking at. The stock did see that mild spike but has recovered and come back there. If you see in terms of the net interest margins is the number that we've already spoken about. The credit cost, that has gone up slightly. In fact, I would say it has doubled on a sequential basis. Loan growth has come in at 13% on a year-on-year basis. I think the stock is trading at, 173 as we speak. In terms of the operating profit, a 15 to 16% growth is what you're tracking. 8,000 odd crores versus a 6,900 odd crores is what you're looking at as well. The provision number is out. The provisions have gone down slightly. 979 odd crores is the provision number for the first quarter of FY27 versus 1,055 odd crores that was reported in the fourth quarter of FY26. So one, your net interest margins have improved. Your provisions have gone down slightly. The overall number in terms of profitability is also looking pretty okay. NII, 10% growth at 10,000 odd crores versus 9,100 odd crores is what you're tracking in terms of the NII as well. And your asset quality has remained absolutely stable at 0.47% versus 0.48% on a sequential basis. In fact, if you talk about the gross NPAs as well, they've come down. 2.65% versus a 2.82% is what you're looking at. And the profits have seen a growth intraday chart. I think 2% up move is what you're seeing right now as we speak. Lancelot Dikuna is with us. Lancelot, what do you make of the first cut of Union Bank numbers? Because asset quality has remained stable on a net basis, gross basis improved, provisions have gone down, and if you talk about the net interest margins, there is a mild improvement coming in there.
Good afternoon, Hiral. I think yes, the results have been good, and I think it should. Hiral, I think yes, the results have been good, and I think it should help in terms of the outlook for the year should be much more positive. And based on the results that are announced, I think the stock should get re-rated maybe a bit on the higher side. So we should probably see some improvement in the price maybe once the entire outlook is known for the year.
Right. Speaking of earnings, Gro has also come out with a very strong set of numbers. If you look at the PAT number, there's a good 7% sequential growth coming in. But the other businesses, be it the M2F business, this is a margin trading facility, commodity derivatives, and interestingly, they have added 115,000 net active NSE clients as well. A little bit of bullishness coming in the non-broking business as well. And you see the stock is also doing well. A good follow-up buying happening post results. Lancelot, your views on Gro?
So, while growth has been good for Gro, we have seen, both revenues as well as profits have increased significantly over the last, but it is still trading at an extremely at a high valuation. It trades almost 65 times earnings. So I think to pay for that kind of valuation, there is a risk reward issue, because in terms of if there is any quarterly of the target price, and that could mean a significant loss. So from a risk reward perspective, it's not really attractive at this point in time. While yes, growth is good and the outlook is continuing to remain firm going forward as well.
Right, growth is good, but valuations is a concern. But we'll give you more details at 2:30 when we are tracking the con call of Gro as well. But another stock in focus is Delivery. And interestingly, their arm has formed or got an approval for an NBFC. A logistics company and NBFC. What's the story? This is Jasmeet here with us. Jasmeet, what's this, and is there any impact?
Well, Sharad, thank you for that. In terms of the impact, I can already see the stock is about 3% HDFC, which is an ND, that means a non-depository. Now, while Delivery had created this arm earlier, HDFC, which is an ND, that means a non-depository. Now, while Delivery had created this arm earlier in this year itself, and now they've gotten the nod as well. Now, if you look at the reason why Delivery is getting into all of this is to leverage its a financial subsidiary forming of under their own name makes it easier for the company to lend loans, and generally financial services is a higher margin business compared to logistics. So as of now, this is the update from the company that they have received an RBI nod for the NBFC license, but it's a wait and watch of how does that pan out for the company going ahead. And just to give a comparison, a lot of platform players like Amazon, Delivery and other players have also gotten the NBFC license approval, and they run their own NBFC. For example, Flipkart and Amazon in India. So they have their own financial arm that gives and lends money to their clients in D2C brands. So that's the same way Delivery is following the same path, but as of now, it's a wait and watch.
Right, wait and watch. Thanks a lot, Jasmeet, for that. But clearly the markets are not liking it. This might be an initial knee-jerk reaction, but thanks a lot, Jasmeet, for that. But clearly the markets are not liking it. This might be an initial knee-jerk reaction, but the long term.
So I think the logistics space is here to stay and grow because, as the economy grows and as the country infrastructure as far as logistics has been growing significantly, we've seen a lot more spend on new airports, on new roads, and logistic hubs that have come up. So I think logistics is the heart of a growing economy, and companies engaged in those will benefit significantly going forward. However, if you look at the companies that are already there, we have Blue Dart Express, which has. If you look at the companies that are already there, we have Blue Dart Express, which has both in the aviation logistics space as well as in the road logistics space. So they are doing well, and you have some of the smaller players also. There are Gati. There is some specialized logistic companies like Aegis Logistics, which are specialized in niche areas, transporting certain equipments, etc. So I think each of these companies are areas which one can look at focusing on and maybe look at adding them to the portfolio depending on the valuations of these companies.
Fair enough. Thanks a lot, Lancelot, for your views on the markets and the stocks and fundamental perspective. It's always a pleasure to have you with us at NDTV Profit. But folks, we are out of time right now for the show. Trending stocks from me, Hiral, and the entire team that put together this wonderful show. It's a bye, but stay tuned to NDTV Profit.
Presented by Tata Azura, हर रास्ते का सुपरस्टार. Presented by Tata Azura, हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे. केसरिया से मन जोगी हुआ.
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
माँ भी हमेशा पी-मार्क मस्टर्ड ऑयल में ही खाना बनाती थी.
कुछ तो बात है इस दिल में. P-Mark, the mustard specialist since 1933.
सरसों से सरसों. अम्बा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अम्बा शक्ति SDTMT.
Ready for the next big IPO? Apply for it on Grow. Open your free Demat account, check all IPO details, apply easily in a few taps. And that's it. Download Grow now for stocks, mutual funds and IPOs.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
That if a boy from Ahmedabad with no capital and no connections could build, then there must be 1,000 more Gautam Adanis sitting undiscovered.
जिनके आइडियाज हैं दमदार, वो सब हैं वंदे भारतम के नेशनल स्टेज के हकदार. प्रो इनोवेटर्स, रजिस्ट्रेशन करो wandebharatam.org पर 19 जुलाई तक. An initiative by Gautam Adani.
As India's mobility story is racing into a new future, it's in search for a new fuel map. Electric, ethanol, hydrogen, CNG, hybrid. What will power India next? India's sharpest mobility minds come together to decode the fuel mix that will define the road ahead. The NDTV Automate Fuel and Future Summit 2026 on 15 July only on NDTV Network.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV Jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
First of all, my compliments for NDTV to bring back the leadership awards and
Vinay C. Sekar, Chief Executive Officer, Investment Manager of Cube Highways Trust joins in. Vinay, welcome to the show and congratulations on filing the DRHP as well. You know, I mean, I'm going to start off with a question which is with regards to the OFS. How should the investors who you are expecting to come in interpret the selling by the shareholders whose decision is to partially exit? Because the question is this going to be a growth opportunity for them rather than simply an exit event for the current shareholders?
Thank you so much for that question. Yes, the current OFS is structured, or the IPO is structured as an OFS. The reason behind the IPO is more strategic in nature. Over the last 3 years since we were privately listed, what we've seen is that there's been a huge amount of upswell of interest from domestic investors, and based on their feedback, we've decided as a strategic move to convert ourselves from a privately listed InvIT to a public listed InvIT. We believe this will open us up to wider pools of capital domestically, and also will lead to better liquidity and price discovery. And in order to facilitate a reasonable sized IPO, we had to request our existing unit holders to participate in the offer for sale, for which the sponsors have accepted, and that's how we've built up this size. Having said that, the sponsors are demonstrating their commitment towards the business by committing to add 4 more assets, which have enterprise value of over 7,000 crores. And those assets they will contribute by way of swap of units. So they will get additional units as part of a preferential issuance in a future date, and therefore they will continue to be invested in the business. As I said, we currently have 27 assets, and with these 4 assets we will get to 31 assets. We listed 3 years back with 18 assets, so we've shown a consistent track record of growth as well. So what you therefore get is a mix of both a stable and a high quality portfolio with inherent capability to grow.
So Vinay, then the question comes up about for investors is how should they actually think about the distribution yield post listing? What's that trajectory that you have in mind from where it stands currently?
Yeah, so over the last 3 years, we listed at 100. In the first year, we distributed 10.09 rupees per unit. In the second year, we did 11 rupees. And in the third year, we've done 13.77 rupee. This increase is largely driven by 2 reasons. One, our toll portfolio organically delivers growth because the revenues are linked to both GDP. As people consume more goods travel through our roads, and therefore traffic keeps increasing. And similarly, as people have more disposable income, they tend to travel more and they pass through our toll plazas more often. That organic growth contributes to growth in DPU on a consistent basis. The second reason, of course, is that we've been able to keep adding assets, and each acquisition tends to be accretive from a yield perspective as well. So we expect the future, while of course I can't give you forward-looking statements, but we expect the future to be in line with how we've performed historically.
Okay, any target payout ratio that you have in mind going forward in terms of CAGR growth?
The historical yield has been between 9 to 10%. and that's the, as I said, we're likely to perform similar to how we've done in the past.
In terms of the proportion of distribution, how much comes in from toll collections versus the annuity income?
Okay. So as a percentage of our cash inflows, 70% of our cash inflows comes from toll assets and 30% comes from annuity. However, in terms of assets under management, the toll assets contribute to 85% of value, whereas the annuity assets contribute to the remaining 15%.
Okay. And overall, if you have to look at the operational risks as well in your portfolio, where would they stand currently? Because the portfolio spans around what? 27 operational road assets across multiple states. So how are you looking at that aspect?
Yeah. No, I think the for an investor, the key risk to really consider is traffic. Now, this portfolio of 27 assets has a long operating history of over 9 years on an average, and it has consistently delivered over 6.3% traffic growth over this period in time. As against this, our future projection is 4.7%. So there is a significant amount of conservatism that we've built into our projections. Of course, that is the key risk for people to consider. From our side, we've made sure that our numbers are conservative to keep into account the future risks involved. In terms of operational risks, while the operations of a toll plaza and a road project tends to be a little noisy, there's a lot of stakeholders who either pass through the road or who live around the road. But these are not material enough to have an impact on.
Good afternoon, you're tuned into Lunchtime Trades, and that was the management of Cube Highways also talking about their IPO. But before we get you a roundup in terms of everything that is happening in the world of commodities, news and updates on the top buzzers at this hour, all while you grab lunch, let's take a very quick look at the markets first things first, because it's actually a sharp fall that you saw coming in, whether you talk about Nifty or Sensex right now. So quite a sharp sort of downtick coming in, as you can see on your screens as well. Erased most of the morning gains. That's Nifty 50 for you, and even Sensex with that really sharp about 300 odd point plunge also coming through. Let's also talk about the entire list of sectors that are in focus right now. So it's still PSU banks holding up quite resilient with that 1.5% gain also coming in. Oil and gas, pharma, bank, financial services, energy, as well as auto, all of those sectors doing quite well for themselves. What's not doing quite well right now is something like an IT, metal, FMCG, realty, media, all of those stock sectors as well under tremendous pressure right now, especially IT down and out in trade for yet another day. And you do have IBM, that's quite the overhang coming in when you talk about IT. But when you talk about PSU banks, you do have something like a Bank of India standing out with a 3.5% gain, Union Bank of India, Central Bank of India, all of those counters doing quite well for themselves. And what's also buzzing away in trade is something like a Nuvoco Vistas on the back of quite positive commentary. Second day in a row that this stock is up and away in trade, 12.5% uptick coming in for this particular counter. When you talk about the Nifty 50 top gainers, this is the entire list that I'm talking about in terms of Ather Energy as well. You do have that Hero MotoCorp investment that's really cheered up this particular counter. So 7.5% uptick coming through for this one. Aegis Logistics, L&T Tech, some of the other counters that are doing quite smartly right now in trade as well. But you know, when you talk about the entire list of losers as well from within the Nifty 500, there's something like a Patanjali Foods, and you did hear out from the management also coming in saying that business is as usual, and slight bit of recovery coming in for this particular counter as well, 14.5% downtick nonetheless. Tata Elxsi, you do have the results that are in focus as well when it comes to this particular counter, and something like a Power Grid, Hindalco, and some of your IT counters, the likes of Infosys as well as Wipro, in focus as well when you talk about the entire Nifty 50 pack. But that said and done, let's quickly take a look at the oil prices right now and how they're trading right now as well, because it's quite the interesting picture yet again. for yet another day. You do have oil prices really extending gains right now as we speak. As you can see on your screens, about $86 a barrel thereabout for Brent as well, and WTI about 1.5% uptick. So $80 thereabout is something that you're looking at when it comes to WTI. Let's also get you a check going in terms of all of those factors that are in focus right now, and what are those insights that you should be keeping on your radar as well. Kunal Shah, Head Commodities Research, Nirmal Bang joining us on the show right now. Mr. Shah, a very good afternoon to you, and thank you so much for taking time out and speaking to us as always. Just wanted to try and understand if you think that this sort of momentum that we're building up, right, when it comes to oil prices, do you think that this is sustainable right now?
I believe that until there is a concrete solution to the ongoing problem, whether the shipment from the Strait of Hormuz go back into the normalization phase, the likelihood of oil crashing is very less right now. But if there is a solution, if there is a taco trade happening, where you see the way Trump said that earlier, he said that 20% of the tariff is going to put, okay, and then suddenly he flipped that, okay, I'm not going to put it. Same way, he shows some soft stance on Iran, and I think that can lead to profit taking. But till then, fundamentally, oil market is pretty tight right now. The only good news is that the Chinese imports are down by 2 million barrels per day. So that is a much big breather for the market, because if China was importing aggressively at this point, then prices would have really taken a big sharp up move rather than this small upside what we saw in last 3-4 days. So my view is that up $88, $89, that is what we see Brent can go to these levels. But for that, if it has to move up beyond that, then this crisis has to be more prolonged, and there has to be more production losses. Then only it can go. But 88, maximum upside.
No, absolutely. And thank you so much for helping us out with that quick take coming in terms of oil prices as well. Let's also very quickly zoom out and take a look at the resultant impact when it comes to the market as well. In fact, Sharad is joining in terms of a more detailed outlook in terms of whatever is happening with the markets, and quite the sharp fall coming in.
Exactly, and we saw a good rebound in the last two sessions, which we saw a good momentum coming. But look at Nifty and Nifty Bank, how it has fallen. Just last 5 minutes, there is a big fall coming in. Let's show the Nifty Bank also. Earlier, even Nifty Bank was doing well. Currently, it's still green, but see the fall which is happening. Also, a very big cut happening here. Of course, remember the geopolitical tensions are still there. If you just show the rupee and the VIX also to give you the entire picture of the macro system, what's happening. And yes, India VIX also is a big spike happening here as well from the lows. We thought that things are normalizing, but it seems like there is something much more there. Maybe a geopolitical development. Let's pull in the rupee also, because the rupee had started giving initial signs of weakness as well. And that's why the concern is back. So this signs has started to come at least 10 minutes ahead of the market. So overall, you can see that the mid caps and small caps are also taking that kind of a pressure. But on the domestic front, there isn't much happening. Just pull out the Nifty small cap also to give you that entire picture what's happening. And lastly, I would like to point out the sectoral indices where the things have changed. IT was, of course, shrugging off the IBM fears, but this is the place. Earlier it was one or two reds. Now you're seeing that defense as well as realty, the sell-off has intensified. So nevertheless, exact reason is not known in the market, but definitely there is some adverse impact coming in, and it can be globally also. That's a little bit of concern coming in.
No, absolutely. And thank you so much, Sharad, for joining us with that entire detailed outlook as well when it comes to prices. And, this is something that we've been discussing since the beginning of the show. You do have some of those sectors that are very much in focus, and we'll get you some of those updates as well coming in when it comes to all of this. But, let's also talk about the geopolitical developments that we have right now in terms of the US carrying out strikes. And that's quite the latest development coming in terms of the fourth day of strikes. And that's also something that's very much in the spotlight as well. Other than that, you do have IRGC claiming the damage really coming in when it comes to US Gulf bases. And that is also a very important update in terms of oil prices. And that's why it's also quite in focus as well. So that's really oil prices for you right now in terms of some of those factors to watch. You do have Trump really threatening further strikes as well. And that is all the more reason why oil prices right now are in the spotlight, as you can see on your screens very clearly. That impact really trickling through to our markets as well. But let's also focus in on another sector, like I mentioned earlier, bringing our focus to AI, artificial intelligence is beginning to really reshape hiring, and that's across India's banking sector as well. You do have several lenders reporting lower workforce additions and a little bit of a decline coming in when you talk about employee strength. In fact, Piyush is joining in with a more detailed picture when it comes to this one.
Well, that is right. Banks are increasingly cutting down on their active workforce and in fact hiring lesser number of people thanks to the progress they've made in terms of adopting AI. Now, the top banks' annual report shows that, collectively all the top banks have reduced their workforce. HDFC Bank, for example, hired 45,902 employees in FY26, which is lower than 49,713 employees they hired in FY25. The bank's active employee count also, the total workforce reduced by around 3,343 employees to 2.11 lakh employees in FY26. Now, Axis Bank too has seen a reduction of its total employee workforce. The bank's staff strength has come down to 1.11 lakh from 1.14 lakh the last financial year. Kotak Mahindra Bank also has seen, employee workforce going down by around 1,000 employees. Its its employees as on March 31, 2026 stood at 74,054, which is lesser than 75,323 last fiscal. Now, what are banks using AI for and how are they able to cut these employee roles? First is a majority of the banks are using AI for customer servicing. They are generating fresh leads from AI. HDFC Bank, for example, is saying that it is using AI for real-time credit decision making. They are able to, AI in some cases is able to approve real-time loan request. The loans are being sanctioned instantly because of AI. Further, it is reducing manual intervention for HDFC Bank, and the bank is using AI across document processing, advanced customer analytics, and credit card generations as well. Axis Bank is now saying that it is moving away from pilots to bringing new projects which are fully backed by AI. The bank is using AI across its operations, call centers, software development. In fact, the bank says it will use 40 to 50% all of its operational journey, 40 to 50% of it will be backed by AI. Further, in terms of call centers, the bank is saying it will cover 50% of its call via AI by the end of current financial year. Kotak Mahindra Bank CEO Ashok Vaswani says AI is a clear inflection point and the bank is implementing first the guardrails for governance and the cyber risk that comes along with AI. Back to you.
No, absolutely, and thank you so much, Piyush, for setting that context right. It's also the time is ripe to have a detailed conversation about this right now and get some more insights when it comes to all of these trends that are emerging. Quite interesting to say the least in terms of how they're playing out. In fact, Amit Das, founder and CEO, Think360.ai is joining us on the show right now. Thank you so much, Mr. Das, for taking time out and joining us this afternoon. First things first, just wanted to try and understand from you if you think AI is taking away bank roles. If yes, which are the roles that you think are becoming redundant right now and are under the scanner in terms of the new roles as well? Which are the new ones that you're seeing pop up?
So I think primarily it's a fact, right? That there is a shift in the average productivity of every process that a bank has, whether it is on the service side, origination side, life cycle management, everything. And to that extent, yes, the roles are being taken away, but unevenly, I would say. Not like every department, every function is going through the same change. The departments where we see major productivity improvements and hence possibly a larger percentage shift would almost always be around operations and back office. There's a lot of older manual processes that over the last 10 years, actually not just now, have gone through significant AI-led or algorithmic automation, I would call it. So KYC, underwriting, documentation, parts of the contact center businesses, these are all kind of going through significant, I guess, AI intervention, as you call it. There will be some offset that will happen because the role for, I would say, AI product managers or the governance and cybersecurity functions, there was a window of time where we were looking for very, very interesting prompt engineering or Gen AI engineers sort of roles. But around these, I believe the idea of governance, control, security posturing, that will have to simultaneously increase in the near term for it to be an offset from roles perspective, but it will not be a one-to-one offset. So we are looking at something which will have a meaningful long-term impact on productivity and hence the headcount that is required for the same sized operations. So unless the operations grow meaningfully up, we should expect these changes to stay.
No, absolutely. That's about the entire inflection point as well. And it's really, changing from just being a dinner table conversation to being a very important reality, right? So you do have front and back offices that are undergoing a transformation. But that said and done, when you talk about just the facts and the numbers, right? We'll come to the numbers in a bit. But, when you just talk about the plain facts that are in front of you, you do have Axis Bank that is now moving from pilots to, scale development as well. Do you think that that shift is really taking place in a very meaningful and substantial manner as well? Inflection point aside, in terms of just moving on from being a pilot or being a little bit of an experiment, do you think that it's really cemented its place right now?
I would say three changes. A, the number of pilots that you can and you have ongoing at each of the larger banks, each of the smaller banks also, it's probably about 8 to 10x of where it was earlier. So because, most of these pilots also have a parallel notion of bank having the bandwidth to run these pilots, right? You need the different functions and stakeholders to kind of come together. So right now, with the advancements in AI technology, that number of pilots that you can, POCs that you can undertake is much larger. So even if you operate at the same sort of success ratio of pilots to scalable product outcomes or scalable projects, you still are probably looking at a lot more happening and scaling up in production environments. So to give you an example, are there processes today which are absolutely automated with no manual intervention at all? The answer is yes. Do we have a bank branch which is absolutely no human intervention? I think the answer is no, and we'll get there. So to that extent, I would say that you will see trend number one, a lot more POCs, a lot more pilots that are going there. Two, which automatically implies that a lot more of these will eventually see production scale. Three, the timeline is not 3 months or 1 month or 6 months or something like that. I think it's a trend that we should monitor for the next 4 to 5 years. We are now witnessing a set of changes. The output that we are seeing now is sort of the outcome of changes that started 5-6 years back in the form of technology, state modernization, and automation. And now AI is basically adding a lot of spice to it from a conversation perspective. AI's real impact is probably 2-3 years down the line.
No, absolutely. And I just, just before we let you go, a very important question that possibly is on the minds of investors or even everybody who really invests through banks, which is pretty much everyone, right? The main question right now is that AI-led risks like Mythos, you do have a lot of governance, guardrails concerns. Do you think that there's enough that has been done right now? Or do you think that there is a room for improvement there when it comes to building guardrails?
So I think, no. The short answer is we are not in a position to do enough in terms of capabilities and competence yet. That is one. Are we investing enough in developing those capabilities? I think not really at the bank level, but I think the private enterprises, the funded startups, some of them are kind of trying to solve that problem independently. And I think they will bring these solutions to the banks from an implementation perspective. And three, I think this is the most important thing that I want to kind of leave you with, is some of what we are seeing is this upswing will also have a counter force which will come through the security concerns like Mythos that a lot of institutions have. And funnily enough, I won't be surprised if a couple of institutions actually scale back what they thought were very, very fascinating AI pilot outcomes because they're not particularly convinced about the security posture or the guardrails that they have. So you may see, interesting conversations, not seeing the production scale.
No, absolutely. And that really went from fascinating to a little bit worrying very fast. Thank you so much for taking time out and joining us on the show. So as we wrap up on this edition of Lunchtime Trades, though, let's talk about UK Minister for Trade Policy, Chris Bryant, in terms of his commentary exclusively to NDTV's senior executive editor, Aditya Rajkol, as well, from tariff cuts on Scotch whisky and automobiles to the sensitive politics when it comes to dairy, immigration fears around the double contribution convention as well. Let's go across and listen in to that bit of commentary.
How big do you think, Minister, is this remarkable achievement for the ties between the two countries? Will this be clearly a game changer in the bilateral cooperation?
Well, first of all, I know you used the word finally a couple of times because this is finally it's the entry into force of a deal that we struck last year. But actually, it's the fastest we've ever gone from signing a deal to actually bringing it into force. So I'm really pleased because there's been lots of work that had to be done on the Indian side and on the UK side to make that happen. And I think that's a symbol of the energy and the determination that both sides have to make this a really groundbreaking moment for relations between our two countries. Look, the truth of the matter is, of course, we've got strong historic ties, and I know I've not been to many Indian weddings in the UK, certainly, where there hasn't been quite a lot of Scotch whisky consumed. And I'm really glad, for instance, that the tariffs on Scotch whisky are tumbling from 150% already to 75% from immediately and then further over the next few years. But it's also about automotives and beauty products being cut from 22% to zero. So, companies like Charlotte Tilbury and so on, who are already present in the Indian market, will be able to be much more available to lots more consumers in your growing economy.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ.
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
आपका पार्सल फिर से हमारे घर पे आया है.
कुछ तो बात है इस दिल में.
माँ भी हमेशा पीमार्क मस्टर्ड ऑयल में ही खाना बनाती थी. ये आपके लिए.
कुछ तो बात है इस दिल में.
P-Mark, the mustard specialist since 1933.
Ready for the next big IPO? Apply for it on Grow. Open your free demat account, check all IPO details, apply easily in a few taps. And that's it. Download Grow now for stocks, mutual funds and IPOs.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
That if a boy from Ahmedabad with no capital and no connections could build, then there must be 1,000 more Gautam Adanis sitting undiscovered.
जिनके आइडियाज हैं दमदार, वो सब हैं वंदे भारतम के नेशनल स्टेज के हकदार. प्रो इनोवेटर्स, रजिस्ट्रेशन करो wandebharatam.org पर 19 जुलाई तक. An initiative by Gautam Adani.
As India's mobility story is racing into a new future, it's in search for a new fuel map. Electric, ethanol, hydrogen, CNG, hybrid. What will power India next? India's sharpest mobility minds come together to decode the fuel mix that will define the road ahead. The NDTV Automate Fuel and Future Summit 2026 on 15 July only on NDTV Network.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
The eminent juries who are here, and that itself speaks for the commitment towards highlighting the advantage which India is having. What I am looking for in this is that we should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of the jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com.
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit with me Somit Sarkar and my co-anchor Varsha. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade either on the back of price or volume. So let's see what's on the show today. Firstly, we'll be speaking with the management of NAC Packaging, a recently listed company. Decent listing is what we have seen, but what's the way forward is something that we'll try to pose the questions to the management on the show today. Apart from that, it's SG Finserv which has been buzzing. The stock has snapped its 6-day losing streak and the stock is up nearly 95% since Feb 2026 and they are expecting a strong growth going forward. When it comes to Philatex India, Sunidhi Brokerage has come out with an initiating note, quite a positive note that the brokerage has come out with. Apart from that, it's one of the beneficiaries of UK FTA and Q1 is also expected to be quite strong for the forward textile players. The stock is trading at its highest level since December 2024. When it comes to GSP Crop Science, the stock is trading at its all-time high. 5 consecutive days of gains is something that we have seen for this counter and the stock is up nearly 25% in the last 5 trading sessions. And lastly, when it comes to Popular Vehicle, that stock has touched its intraday high since May 2026. It saw its biggest single-day gains since April 2026 and the stock has been buzzing also on the back of strong volumes. So what could be the potential reason behind this move is something that we'll try to decode with our fundamental guest on the show today. Now if you look at the market, for the better part of the trading session, we were trading close to 150 points higher in trade. But in the last half an hour, we have seen a sharp decline coming in. Some support around the 24,000 level is something that we have seen and currently Nifty is trading just 20 points higher. If you look at the sectoral indices here, on the top loser side, we have the PSU names and the metal names which have been lagging in trade, but on the gaining side, it's Nifty Oil and Gas, largely led by the oil marketing companies. PSU names, PSU banks specifically, have also been gaining in trade. But despite this volatility in the benchmark index, the Nifty Small Cap, that continues to be higher by around 0.6% in trade. But Varsha, which are the key stocks here that have been buzzing?
You know, a lot of stocks actually. First, let me start with Vanbury. If you see, in the last 5 days, the stock is up 24%. A good upside we're seeing here. Today also, the stock is buzzing almost, 5-6% in trade. You have Landmark Cars also buzzing in trade. Now, this is on the back of, business update that yesterday company had posted. The stock is up almost 10% in trade. You have Advait Jewels is also buzzing. Recently listed company. Is actually buzzing in trade. You have LN Electronics also, strong volumes over here, 10x of its 30-day average. The stock is up almost, if I'm not wrong, 10 to 12% in trade. LN Electronics, 10x volumes of its 30-day average. You have Carousel also, stock is up almost 5% in trade on the back of volumes. DAM Capital, well, the stock was up almost 5% in trade. Carousel is up almost 3%. DAM Capital is up almost 5% in trade on the back of volumes of 3x of its 30-day average. But NAC Packaging is one such stock which we are going to discuss. Recently listed IPO, their Borisana facility is actually the next growth trigger for the company. And to tell us more about that, we are here joined by Alpesh Patel, who is the chairman and managing director at NAC Packaging. Mr. Patel, welcome at NDTV Profit. Pleasure to have you. The Borisana facility will materially increase your capacity. I want to understand, do you already have customer commitments for this capacity, and what's when can this capacity go live?
First of all, thank you for inviting here for their studio. Thank you, ma'am. Definitely, we have a very good customers. Like right now, we have 1950 customers, and that 13,000 SKU we are taking care of it. And we have a global customer like Cargill. We are supplying to like 8 countries, including US and everywhere. So we have a 3 type of strategy. First of all, customers using the normal packaging, and we have a specialized high-ended pinch bottom bags. So they are shifted to regular production to the pinch bottom bags. Then their individually growth is grow up. Secondly, that industries, like we are supplying to so many pet food industries, rice industries, grain and pulses, many industries, like 27 industries. So pet food industries is 2-digit growth. So that is the second growth path of the company. And third, we are exporting more than 71 countries. So we have a very good global presence in all over the globe. So we are increasing that share into individual countries as well as increase the countries as well. So this is a 3/4 growth drivers for our next expansion quantity we will share over there.
What's the revenue, incremental revenue can this capacity generate for you at peak utilization?
See, we are trying our level best. Last 3 years, we have a more demand than our production capacity. So we are increasing our capacity to reach our customer demand. So we are trying our level best. See, our production planning is we are starting just building and all. Already we land development we already started and building and everything, machinery installation and everything. Then October 2027, we are planning to run our plant for 100%. And then we slowly, gradually, we capacity utilizations.
Okay. Sir, given that you're a packaging company, could you just give us some understanding on what percentage of your raw material is either directly or indirectly related to crude prices? We just want to understand that whenever there is an increase in crude oil prices, by how much percentage would your raw material cost increase?
Sir, our total cost is like a 60%, 61% is our RMC cost. And including that, there is a polymers almost 40-45% to our polymers based raw material. But sir, we have a very good 3 things in our company. First is our company is working on SAP S/4HANA. So we have very good forecasting systems. So we have a very long, that is the one thing, forecasting systems of our purchase team and our professional, we have a very good planning for the polymers. Secondly, we have a very good relation, local refineries relation. India have a very good refineries, 6-7 refineries, and we have a 30 years experience with them. So they always give a good priority as well as good relationship, and always we don't have any face problem with the polymers, including this COVID war. I say COVID war, that time also we can get the good polymers locally availability. So our 90-95% polymer we buy from the locally. So we don't have face any time this polymer issue.
Right, sir. I completely understand that availability of raw material will never be an issue for you, given the fact that you have such strong relations with your suppliers. But I wanted to check on the pricing front. Despite having a good team, the kind of volatility that we have seen in the crude oil prices in the last 3 odd months, that is not something that anyone would have predicted. But this would have definitely had some impact on your financials, specifically in the first quarter of FY27. Could you give us some understanding on that front?
Sir, definitely. Sir, this polymers business, our customer is already know. If polymers price go down, we always go down to the price, and when polymers go up, we always increase the price. It is like a petrol and diesel price. So our end customers, everyone know nowadays, if polymers price go down, so we reduce the price. So our ultimate try to get our conversion, operational revenue remains same. So always we are trying to get good transparency with our customer, and they all also trust on us. And basis on that, we always get the upper price as well as we reduce the price. So we don't have any face the problem. And our 40-45% business is a contractual business, like Kargil, India Gate, Tilda, Dawat, Kohinoor, rules. We fix our conversion cost, and the basic price increasing, they increase the price, our conversion including the margin remains same. So that kind of long-term contract we have. So that is, we don't face any problem for this all the areas.
But I believe that would be happening with a lag effect. Overall, say for the full financial year, there won't be any impact. But 1 quarter here or there could be some impact, right?
Sir, in the first year, this next first year result will come within a short time. So definitely we'll come up with you with the result. So honestly saying, sir, that as per our experience, we never faced this kind of big issue in our financial. So hope so best, and our result will come up with the short times. Always in our business, pass on risk. This pricing functionality is already set up in the market. So that is a good part of the industries.
Right. So since result is expected soon, so I'll not I'll not bother you on Q1, but overall for FY27, because if you see in March 2024, you had a sales growth of around 27%, and post that we are seeing some kind of pressure in sales growth. It was 12% for 25 and 11 and 12% for March 2026. What's the growth expected in FY27? And since you said you don't have much impact when it comes to margins, overall margins, EBITDA margins, can one expect that 18% of margin to be sustainable in FY27?
Two things, ma'am. Very honestly saying, see, our packaging is not a commodity packaging. Our packaging a very specific industries, very specific product. We are mainly into the pinch bottom bag. So very niche market we have. So the customer, they know the pricing about the packaging cost, and the overall the best part is what, like I can say, give you one example. If basmati rice, they are packing into 25 or 30 kg rice into the one bag, and the bag cost is less than 30 rupees. So it is less than 1% cost of the premium packaging material. So that is not also more impact on that cost part. So for that, we have a very good customers. We have very good transparent systems, long-term customers, long-term contracts. So basis on that, we are trying our level best to get all the result on track.
Got that, understood, sir, but still did not get my answer when it comes to the growth that you're expecting, maybe for FY27 for the next 2 years. What is the revenue growth that you might have a target to reach to, maybe by FY28? So any highlights on that?
See, from last 3 years, you can see our growth journey. So same pattern we are also following for the furthers. And also we are trying our best to get the same result on future coming years. So for the sales, and we have already very good sales strategy as well. So we are definitely, and today we are capacity of 90-95%, we are utilize our capacity. So after expansion, this is a 1 year still we have. So we are also planning to get the good customer on board. And so after 1 year, because our onboarding process is also long-term process. So we are trying to get the good customer from today as well. So when we come to the next year, 27 October, when we come into the production, definitely we have a good customers with good lineup to almost all the customers, and adding more customers for the further growth plan. So same way, I will see you as per the last 3 years, whatever we get the good result in the last 3 years, same pattern we are planning for the further growth plan.
And lastly, sir, I believe you're looking to increase your presence in the Latin America and North America as well. If you could just give us some understanding on how much exports contribute right now, how much do you foresee that to contribute, say, over the next couple of years?
So right now we are exporting 71 countries, as I told you, and 56% revenue comes from our export revenue. And so definitely, yes, our focus is India as well as export. So where we can get the good margin, definitely our company's policies, if we are selling the much more higher volume over there. And we have a very retail kind of customer. There is not a big customer. Only Cargill, we have a 17% customers, those who are buying, and they are buying for the 8 countries. So that's how we change we have strict our policy. We are very good retail marketing, 1,950 customers, 13,000 SKU, and the same pattern we are following to the further growth and the margin as well as the growth journey. And export revenue, we are increasing the 71 country to more countries, and adding that same country, we are trying to more customers.
Got that point. Well, thank you so much, Mr. Patel, for joining in and having a conversation with us. Thank you so much. Well, this was NAC Packaging outlining the growth prospects for the next 1 to 2 years. But with that, let's also invite fundamental guest for our show, who is Narendra Solanki, Head Fundamental Research Investment Services at Anand Rathi Shares and Stock Brokers. Narendra, you heard the management, recently listed company. What's your view when it comes to this sector and of course about NAT packaging, and what will you advise to investors?
Yeah, good afternoon. Let me first start with disclaimer. We do not have any active recommendation on the stock. Now, having said that, it's a recently listed IPO. I think around 160, 170 was the IPO. The business is very unique. Also, if you see the overall sector dynamics, there is high transformation happening, especially in our unorganized market, where gradually the players are shifting from unorganized to organized, and this increases the demand for packaging solutions and various kind of innovations into the packaging solutions. So the company is operating in a decent growing demand environment where we see around 4 to 5% kind of a volume growth coming in the domestic industry. Also, the company's business is highly diversified into both domestic market as well as it has also presence in international markets. So it is able to capture both domestic as well as international revenues. So I think medium to long term, the things are well placed for the company. The only concern would be to keep watching the high concentration risk, both in terms of raw material as well as the customer concentration risk, which the company has to manage. I think there is a single customer having presence of around 15% in share of revenues. So that is one of the risks. And if company manages that, then I think it's a decent or medium to long term.
All right, got that view. Well, time for a short break. Don't go anywhere. Stay tuned to NDTV Profit.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
माँ भी हमेशा पीमाक मस्टर्ड ऑयल में ही खाना बनाती थी.
कुछ तो बात है इस दिल में. PMark, the mustard specialist since 1933.
Ready for the next big IPO? Apply for it on Grow. Open your free demat account, check all IPO details, apply easily in a few taps. And that's it. Download Grow now for stocks, mutual funds and IPOs.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
That if a boy from Ahmedabad with no capital and no connections could build, then there must be 1,000 more Gautam Adanis sitting undiscovered.
जिनके आइडियाज हैं दमदार, वो सब हैं वंदे भारतम के नेशनल स्टेज के हकदार. प्रो इनोवेटर्स, रजिस्ट्रेशन करो wandebharatam.org पर 19 जुलाई तक. An initiative by Gautam Adani.
India Inc.'s most respected.
Welcome back. You're watching Small Cap Buzzers on NDTV Profit. The first small cap stock that we'll be discussing right now is GSP Crop. The stock has been buzzing in trade for the last 5 consecutive sessions. Today also it's up nearly 6%. Varsha, anything to do with the fertilizer subsidy that is expected to come in? What could be the reason behind this move that you're seeing?
Actually, yes. So today in cabinet meeting, they are expecting some kind of subsidy, and also there will be some kind of announcement when it comes to the urea. So keep a watch on that, and do listen to the cabinet meeting at 3 o'clock. But about this company, well, this company focuses on fungicide, insecticide and pesticide, basically is into agrochem. The domestic mix, if you see, stand at around, the B2B stand at around 40%, supplies products to almost all major agrochemical companies. And they also have B2C, wherein they sell through 5,000 distributors and has presence across 24 locations. Talking about exports, they do have 20% exports. The contribution is at 20%, and they export to almost 37 countries, and they are expanding differentiated product offerings globally. They're also into white label and white label model, wherein they develop patented product under its own brand and later give them to the co-marketing partners. And the patented products, if you see, contribute almost 17 to 20% of revenue, and contribution has risen sharply in the last few years. And management wants this share to increase further, as it is kind of a high margin segment. The existing facility can support 1,900 to 2,000 crores of revenue, and the peak utilization can reach around 90%. They do have expansion strategy where the current capacity is sufficient for the next 3 years. Debottling can create additional capacity, and focus is shifting towards low volume and high value products. So do keep a watch on this counter as well. Well, Narendra, coming to you on this, GSP crop, the stock is already up 5 to 6%. What's your view on the overall fertilizer and agrochemical sector, and of course on GSP?
See, overall in agrochemical sector, we prefer agrochemical companies in comparison with the fertilizer companies. And within the agrochemical companies, our topics are Sumitomo Chemicals and Sumitomo Chemicals, because it is having a balanced portfolio of technical as well as formulated products with a well backward integrated manufacturing facilities for some of its product, and its parent also has a very wide portfolio wherein the domestic Indian company can actually fall back upon to its parents in order to launch new products as well as new molecules in the market. So Sumitomo Chemical we prefer in this space right now.
Got that view. Well, moving on, Philatex India, let's see what that stock is doing, because the stock is up almost 30% in July so far. Today it's up almost 10% and at highest level since December 2024. But we do have Jasmeet to give us more details on that.
Well, Varsha, thank you for that. Let's quickly understand what does the company do. Well, the company operates as a platform which manufactures and trades in synthetics material. Now, in terms of the industry they serve into, they serve textile, apparel, technical textile customers, both domestically and globally. If you look at the stock performance, as rightly said, the stock has been in traction and gained about 30% so far in July. The stock is seeing traction on the back of various fronts. The first one is the overall UK FTA deal being signed on July 15th. That's getting the momentum for this particular counter, and even the management has stated that they remain bullish on this particular trade deal as well. The second reason is the brokerage are getting bullish on this particular counter given the growth it has given in the past. Now, when you look at the performance of this company in last 5 days, it has gained about 13%. Now, let's quickly understand the FY26, which was a quite strong year for the company. If you look at the profitability, the profitability has stayed strong for the company. Though the revenue was flattish, the bottom line grew pretty well for the company. In terms of the overall production and other details, the company's production has stayed flat on YOY basis, and also even the sales has stayed flat for the company. If you look at the capex plan, the company is bullish on its capex, is planning to almost invest about 690 crore in the coming years and to build more factories. And the company also states the current utilization is at 75% versus industry level 60%. And they call out due to the West Asian war, they had impact on the overall input cost by 40 to 50%. And going ahead, they plan on hedging all this cost.
Right. The next stock that remains in focus today is Popular Vehicles. That stock has been buzzing. Let's get in part to understand what could be the potential reason. At one point of time, the stock was trading around 98, 99 rupees. It has come up from the day's highest point. But Parth, anything that you're picking up here?
Yeah, that's right. At the day's high point, the stock had hit the highest level in the last 33 trading sessions, and this was the biggest single day gain the stock had seen since April 2026. In fact, volumes today are also 6 times the 20-day average. If we talk about the company a little bit first, then they basically act as a dealership for many big car brands like Maruti, JLR, Audi, Bharat Benz, Tata CV, and Ather as well, and they operate across various states like Kerala, Tamil Nadu, Karnataka, Telangana, and Punjab as well. Now, the key trigger is that they're shifting their focus towards that high margin recurring services. Of course, FY27 was really good for the company after the GST 2.0 pushed that passenger vehicles, and also the infrastructure spending has given commercial vehicles a really good growth. But for FY27, management has guided has given a good guidance of high double-digit revenue growth while targeting EBITDA margins in the range of 4.8 to 5%. The management is also expecting sustainable PAT profitability from Q2 of FY27 with a focus on that service repairs and spare segment, which basically gives them higher margins. So the key growth drivers from now on for the company will be that increase in passenger vehicles and commercial vehicles demand, along with that EV business scaling up, because they also act as a dealership for Ather as well. And the key monitorable going forward will be that how quickly they are able to scale their services business, because that is something that gives them quality earnings and better margins.
Right, understood. Well, thank you so much, Parth, for that. Moving on, SG Finserv, let's pull that stock up, because yesterday the company came out with its Q1 results, and post that they've given a good guidance as well, and hence we are seeing the stock is up almost 4%. But let's bring Shivam to give us more details on that.
The stock has witnessed a strong momentum on the back of the Q1 FY27 results, and the company is mainly in supply chain financing. And talking about the Q1 FY27 results, the company has achieved its all-time high loan book, and also due to the cost optimization, the cost to income has remained below 15% for this quarter. The company has said that it will focus on mainly the product launches, partnerships, and cost control going forward, and the company also remains well capitalized, and the company believes that there is enough headroom for growth going forward too. In terms of loan book, the company has gone up, the company's loan book has gone up by 82%, and the PAT has also increased substantially by 119% on YOY basis. In terms of guidance, the company has said that maintain the AUM guidance between 25 to 30% on a CAGR basis. In terms of returns on asset, it will be maintained on around 4.5 to 5%, and the one important thing to note is that the NPAs are still negligible, and going forward also net non-performing assets are expected to be in the same range. In terms of stock performance also, the company has given a positive returns on a year till date basis.
Well, NPA is negative, and PAT growth expected at 30 to 35%. Thank you, Shivam, for that, for all the details. But with that, viewers, it's time to wrap this edition of Small Cap Buzzer. Stay tuned to NDTV Profit.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
आपका पार्सल फिर से हमारे घर पे आया है.
कुछ तो बात है इस दिल में.
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी. ये आपके लिए.
कुछ तो बात है इस दिल में।
PMark, the mustard specialist since 1933.
बरसों से सरसों
Ready for the next big IPO? Apply for it on Grow. Open your free demat account, check all IPO details, apply easily in a few taps. And that's it. Download Grow now for stocks, mutual funds and IPOs.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
That if a boy from Ahmedabad with no capital and no connections could build, then there must be 1,000 more Gautam Adanis sitting undiscovered.
जिनके आइडियाज हैं दमदार, वो सब हैं वंदे भारतम के नेशनल स्टेज के हकदार। प्रो इनोवेटर्स, रजिस्ट्रेशन करो wandebharatam.org पर 19 जुलाई तक। An initiative by Gautam Adani.
As India's mobility story is racing into a new future, it's in search for a new fuel map. Electric, ethanol, hydrogen, CNG, hybrid. What will power India next? India's sharpest mobility minds come together to decode the fuel mix that will define the road ahead. The NDTV Automate Fuel and Future Summit 2026 on 15 July only on NDTV Network.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need
Good afternoon, you're watching Ask Profit afternoon edition on NDTV Profit. This is the show where we get all your stock related queries answered from our fundamental and technical guests. Well, before we start that, if you look at the markets for the better part of the trading session, we were trading close to 150 odd points higher in trade. But in the last 1 hour, we have seen a sharp fall coming into the markets. Nifty tried to find some support around the 24,000 level, and right now we are trading just 30 points higher compared to what we were doing yesterday. When it comes to the Nifty Bank Index, that's relatively better placed, up around 250 odd points. 57,700 is the level where we are trading at. And when you look at the indices, Nifty Metal and FMCG are the top sectoral losers in trade. FMCG partly also because of the sharp fall that we saw in the share prices of Patanjali. And on the gaining side is the PSU Bank Index and Energy. Energy is up largely because of the oil marketing companies that we are seeing trading higher in trade, while PSU Bank's gains here are largely led by stocks like Bank of India, Union Bank. Union Bank came out with its numbers. Central Bank of India, Bank of Maharashtra. So smaller PSU banks have been gaining in trade, and that is one of the major reasons why the PSU Bank Index is also up in trade. And on the FNO side, it's ABB India, Bandhan Bank, Hitachi Energy, GE Vernova, all up more than 3% in trade. ICICI Prudential Life came out with their Q1 numbers. The stock is up nearly 4% in trade. And when it comes to the losing side, it's Patanjali, as we mentioned earlier, down 15%, followed by Tata Elxsi, weak set of numbers, down 5%. Delivery down around 3 odd % in trade. But let's welcome in our fundamental guest. Firstly, Tapan Doshi has joined us, and let's start the first query coming in is from Manshu, and he's holding the shares of Biocon, and he actually wants to know whether should he continue to keep this stock or sell at the current price post the exit that we have seen from one of the investors, that is Mylan. Tapan, any view on Biocon?
Good afternoon, Soumit. Now, see, Biocon is struggling a little bit. If you see, they have already high debt. And again, now USA, FDA regulatory issues are already there. Generic pricing pressure is there. Again, now in future, biosimilars growth will be there, but I think still the margins are not going up. Again, the R&D expenses on the higher side. Honestly, I am not too much bullish on it. So if it comes up, no, better to exit from the stock and go to other good pharmaceutical companies.
Well, the next query is coming in from Rajesh from Bangalore. He's holding 700 shares of Geo Finance, bought at a price of 336. He wants to know whether should he continue to hold this counter, average it at lower levels. He can continue to hold this stock for the next 3 years. Tapan, any view on Geo Finance?
Yeah, see, because his tenure is on the longer side, not 3 years. I think this stock will come up. Of course, the lending AUM is scaling rapidly. Mutual fund business is also expanding. Digital finance platform is also scaling. The only thing is the valuation is on a higher side, but I think all these segment will start giving good profitability in future. So maybe 1 or 2 quarter things will be changing. So yes, hold this stock for the longer term. It's this level, yes, you can hold it.
Let's also welcome in the technical guest Rahul Sharma, Executive Director and Head of Technicals and Derivative Research with JM Financial. Rahul, the first query coming to you is on Hitachi Energy. Jeet from Kolkata wants to know, he has bought few call options of Hitachi Energy and he wants to know whether can the share prices move higher side in the next 7 to 8 days. Any view on Hitachi Energy?
Yeah, I think he can continue to stay put in the call options. In the last 2 trading sessions, the stock has reversed. The volumes today are specifically on the future side are pretty strong. So one can look to stay put in the calls or stay open in the calls. The targets are in around the vicinity of 35,000 in the next 3-4 trading sessions.
Queries from Reddy from Mysore. He's holding few shares of NCC, bought at a price, bought at current market price. He wants to know whether should he continue to hold this counter for long term. Tapan, any view here?
Yeah, please hold this stock. I think the valuation currently is okay and many contracts are there with them. Of course, the revenue growth will be 15 plus from here. Order inflow is healthy, strong infrastructure pipeline, and I'm okay with the valuation. So please hold this stock currently.
Queries for you, Rahul. It's on Suzlon. Vijayan from Chennai has bought Suzlon. He wants to know whether any targets on this counter that he could give for the month end.
So Suzlon, if you look at the way the stock has taken a beating, especially in the last 10 or trading sessions, it is trading very close to a crucial support of 50 rupees. My sense is it should see a bounce back from around 50 odd levels. Advice to keep a stop loss placed just a shade below that, maybe at 49.5. And if the bounce back happens, I think the first target should be placed around 58.60 on the upside. So as of now, the view is to be buying on the dip. 50 is a crucial support to keep an eye on in the next couple of trading sessions.
Next query is for you again, Rahul. It's on Paras Defense. Raj wants to know whether should he make a fresh entry from short-term perspective on this counter.
Yeah, so defense counters have been losing steam after the run-up that we saw recently. Paras Defense in particular is trading close to its support area of 1200, and the view is to wait for the first move to happen in the stock. In case the stock trades below its 5-day EMA, approximately around the 1235 mark, we should see a bit of a momentum coming back into the counter where targets would open up for 1300, 1350 as well. So I would rather wait and watch, keep this on my radar. The moment it crosses 1235 on the upside is when I look to buy into this counter with the stop loss maybe at 1190.
The next query is for you, Tapan. It's on JB Chemicals. Siddhi Amre has bought few shares around 515. She wants to know whether should she continue to hold this counter or exit. She's currently sitting on some profit here.
No, hold this counter. No, if you say the last few quarters, things were better. Again, some new patents are coming. Also, the management is quite bullish. They are saying that double-digit growth will be there. Again, across geography, their export is also expanding. So yes, please hold this stock. I think 1 or 2 years, this will give you a good return.
Right, our first live caller is coming in from Bangalore. Sangeet, you can go ahead and ask your query.
Good afternoon, sir.
Good afternoon. You can ask your query.
Sir, I am holding currently ICICI Prudential Life Insurance stock of 5,000 quantities at 500 per share. Can I hold or spare it off?
For long term or short term?
Short term.
Okay, Rahul, any view on ICICI Pru?
Yeah, we maintain a positive outlook on the same. Technically, the stock has headroom until 550. on the upside. So one can stay put with the revised stop loss of rupees 500.
Is for you, Tapan. It's on Mankind Pharma. Gautam from USA wants to know whether is it a right time to enter this counter for the next 12 to 18 months.
Yeah, the stock is good. Even if you see the profitability is good, good pipeline. Again, no, their margin is increasing, and domestic segment is doing very well for Mankind, especially generic department. So if he wants to enter, I think around 2,500 he can enter. I think the stock is good. Keep it for the long term.
Next query is again for you, Tapan. It's on Protein eGov. Lakshmi from Hyderabad is holding 15 shares, bought at a price of 770, currently sitting on a loss. Should she continue to hold this counter? She's a long-term investor.
No, I'm not too much bullish on this stock. No, again, specific segment, also no, quite vulnerable if some policy changes. If you see last few quarters are also not so great. So if she gets chance, and once it comes up, please get out from the stock and move to other good quality stock.
Okay, the next query is for you, Rahul. It's on Power Grid. Daksh from Pune is holding few shares of Power Grid. He wants to know whether can the share prices touch the level of 300 rupees in coming days.
Yeah, so power stocks have taken a backseat after the onset of the monsoon in most parts of the country. Now, technically, the stock is pretty much sideways with supports placed at 278 on the downside, resistance at 287 odd. So as of now, it's literally no man's land. I think once it crosses to 288, 286 on the upside, that is when one can expect a bit of a momentum to come back with targets opening up for 294. In case the long positions are there, keep a stop loss placed at 278 on a straight basis.
The next query is for you, Tapan. It's on IRB Infra. E. Venkataraman from Bangalore is holding 2,950 shares of IRB Infra, bought at a price of 23, currently sitting on a loss. He can hold this counter for more than 1 year. Should he do that?
Well, honestly, I am not too much bullish about this stock. No, it's not been performing well. Again, lot of volatility. Also, interest cost is much higher side. Project execution risk is there. Again, regulatory, traffic risk is also there. So yes, I'm not too much sure about this stock. So my take is to sell and go to better quality stock.
Okay, the next query is for you, Rahul. It's on Bank of India. Bhaskar from Telangana has bought 3,000 shares at a price of 153. He wants to know whether should he sell or hold.
Yeah, as a disclaimer, we have recommended this stock to our clients today. The stock is technically coming out of the recent consolidation, and we remain positive on the same for a target of 160 on the upside. So one can continue to stay invested in the same. And as a stop loss, 142 is what we recommend at these levels as a stop loss.
The next query is for you, Tapan. Mehta from USA is holding shares of Chambal Fertilizer right from the time of IPO. Currently sitting on a good amount of gains here. He wants to know whether should he continue to hold Chambal Fertilizer or reallocate the money to some other sector.
No, better to reallocate. No, if you see, no, it's been very volatile stock. Again, no, government policy dependency is there. Gas price volatility also persists for this stock. Again, monsoon variability also risky. So a lot of if and buts are there. So if he is there for the long term, I think better to sell as he is already in a good gain. I think better like bank, NBFC, defense, power. These are some of the area even, So these are the area where he can enter.
The next query is for you, Rahul. It's on HFCL. Krishna from Chennai wants to buy the shares of HFCL around 100 odd shares for the next 3 to 6 months. Should he do that?
Yes, so the stock is pretty strong on the daily charts. I assume it is trading at an upper circuit, but the trend remains very much positive, and we could very well see the stock head in the vicinity of 240 to 250 on the upside. So in case the circuit filter opens, look to buy around 220 odd levels with the stop loss placed at 205 and maybe a time frame of 5 to 10 trading sessions is what we see.
Okay. The next query is from Madhav Ratna. It's again a short-term query coming in for you, Rahul. He has shares of Vinlas Biotech, around 1,100 shares that he has bought, and at a price of 845. Should he continue to hold this Vinlas Biotech?
Yeah, so as of now, the technical setup of the stock is not so clear, so it wouldn't be prudent to advise on the same. However, as a stop loss, one can keep a stop loss at yesterday's lows level for the same, and in case the setup improves, one can look to add at the higher levels. As of now, it is in a no trade zone.
The next query is coming in from Kiran from Bangalore. He's holding 200 shares of KRN Heat Exchangers. Average purchase price is 1,338. Any short-term view on this, Rahul?
Yeah, so this looks pretty solid on the charts. Today it has broken out. Volumes have been higher than average. From a positional perspective, one can expect 1360 to 1380 on the upside, and can be bought at these levels. The stop loss placed at 1220.
Next query is coming in from Bangalore. Nandagopal wants to know whether is it a right time to enter Kusumgarh for long term. The stock listed today sitting on a gains of around 40% on the listing day. Tapan, any view on this recently listed counter?
See, today, of course, the stock has a good listing, but valuation is on a higher side. Of course, if you see the segment which this stock is, it's quite good. Defense, aerospace, and no, they have a niche area. But I think the valuation is on a higher side. So wait for the dip, maybe 15-20% down, he can enter for the long term.
Next query is for you, Tapan, again. It's on Bajaj Hindustan Sugar. Jivan Sharma from Ghaziabad is holding 18,400 shares, bought at a price of 22 rupees. Nearly 2 months back. He wants to know whether should he continue to hold this counter given the turnaround in results that we had seen, and also given the fact that Bajaj Hindustan is a good ethanol story.
Well, your entry and exit should be very good, honestly, because see, currently, if you see the debt already is the concern for this company. Sugar price volatility is always there. Of course, ethanol demand remains strong from here, and government policy is supportive, but working capital intensity and all that is putting pressure on the margins and all that. See, I'm not too much bullish about the stock. Long term, no. I think for a swing trading and all that you can do. So if it comes up, better to get out.
Next query is for you, Rahul. It's on Cupid. Gokul from Chennai has bought 300 shares of Cupid at a price of 200 rupees. Should he hold, sell, or buy more?
Well, the stock is still very much in an uptrend. We saw the recent dip get bought into in a very classical way, so can stay invested in the same. I think next probable targets are in the vicinity of 240 to 245. However, a trailing stop loss is mandatory, and 213 would be the trailing stop loss at current levels.
Snigdha from Delhi has bought few shares of Jindal Saw at a price of 214, currently sitting on some profits. Should she continue to hold or sell? Tapan, any view on this, Jindal Saw?
Well, this stock, I think a lot of volatility will be there. And currently, if you see the financials and all that, that's okay. But still, I feel a lot of margin pressure will there in the future. I think one should wait for the next quarter and take a decision. So currently hold, but just see the quarter. If not, then I think she should move out.
Next query is for you, Tapan. Again, it's on LG Equipments. Shri from Coimbatore wants to know whether is it a right time to enter this counter for the next 1 year.
LG, okay. LG Equipment it's a good company. If you see the profitability is good, management commentary is good, and again the segment which are is quite in demand. I think some of the new products also coming which will have a good demand in future. So just please hold this stock for the long term.
Next query is for you again, Tapan. It's on Vinati Organics. Ramesh from Chennai wants to buy or has bought around 100 shares of Vinati Organics at a price of 1,315. Should he continue to hold for long term?
Well, I think now still the margin pressure will be there. Again, now you can see the sales revenue is not going up so much. Volatility will be there. Again, the demand is still in the pressure. So currently, this is not the time. I'll wait for 1 or more 2 quarters to get into this stock. If he's already holding, please hold it. But I think don't add the stock.
Well, before we take our next query, let's get in Rishabh to understand what are the changes or what the cabinet has cleared when it comes to the semiconductor policy here.
Absolutely. What we have coming in from the cabinet is the approval for the ISM 2.0 or the Indian Semiconductor Mission 2.0. This is the second iteration of India's chip mission, and this is going to be bigger and better is what we're given to understand. Roughly 1.25 lakh crores worth of outlay is what has been given for this particular mission. Remember, the first one had an outlay of roughly 76,000 crores, so this one is just about 50,000 crore rupees bigger than the previous one. The term for this one is also expected to be extended from 5 years to 12 years, so as to give a longer gestation to these projects, because chip projects, chip facilities, they take a lot of time to mature and develop, and that is something that they also want to be doing. What we also have is, of course, the fact that the cabinet has cleared the new investment policy for the urea sector as well. That's what we can confirm here on NDTV Profit. There's the continuation for the urea subsidy that is also being given for the year of FY26 and FY27. That is what we can expect. Apart from these two, another big announcement that is expected from the cabinet is the clearance for a new mobile manufacturing scheme. Now, the exact contours of which will be shared later, but what we are given to understand is that this will be yet another step in India's ambitions to sort of become an electronics, big electronics export hub as well as an electronics manufacturer. This is a sector that has done really well over the past 5 to 6 years. Electronics have become a very, very large chunk of India's total export. And now what we'll see is that the mobile manufacturing is set to receive yet another impetus. So 3 key decisions, apart from more that could come in from today's cabinet briefing.
Right, thank you, Rishabh, for all that information. Moving on to our rapid fire segment, would request both our guests, Tapan and Rahul, to keep your answers short. Starting off with Anant Raj, it's for you, Rahul. The viewer wants to know whether should he buy this counter from medium-term perspective.
Yes, one can look to buy for a target of 625.
Yeah. The next query is again for you, Rahul. It's on Tata Motors passenger vehicle. Rahul Sharma has... Okay, it's actually for you, Rahul. So, yeah, the viewer has bought around 2,200 shares at a price of 393. Should he continue to hold this counter?
Exit.
The next query is for you, Tapan. It's on NTPC. Manav from Gurugram is holding 50 shares at an average price of 350 for the last 20 months. Should he continue to hold?
Yeah, please hold.
The next query is for you, Tapan. It's on Texmaco Rail. Raja from Chennai is holding 78 shares, bought at a price of 257. Should he hold, sell or average?
Hold.
Average.
Okay. The next query is for you, Rahul. It's on Anant Raj or Tata Power. Mahesh wants to know which counter should he buy from short-term perspective. Rahul?
Yeah, so between the two, Tata Power has better risk reward.
Next query is for you, Tapan. It's on PI Industries. Dilip wants to know whether should he invest in PI Industries from long-term perspective.
Yeah, on dips.
The next query is for you, Rahul. It's on Nuvama Wealth. Suraj from Dubai wants to know whether should he continue to hold the 75 shares that he has for the next 12 months.
Can continue to hold.
The next query is for you, Tapan. Prakish from Kochi is holding 1,250 shares of Imami, bought at a price of 418. Should he continue to hold this counter?
Hold.
The next query is for you, Tapan. It's on Gujarat Pipa Vav. Ramesh from Chennai wants to buy this counter. He has already bought 500 shares. Should he continue to hold this?
Yeah, maybe 5-10% down he can buy.
The next query is for you, Rahul. It's on Sansera Engineering. Bindu is holding 30 shares, bought at a price of 1,350. Should she hold, add or sell?
Sell, book profits.
Next query is for you, Rahul. Again, it's on Chalet Hotels. The viewer wants to know whether it's the right time to buy this counter.
Yes.
Okay, the next query is for you, Tapan. It's on Paras Defense. Matthew from Bangalore has bought 600 shares at a price of 1,275. He's a long-term investor. Should he continue to hold?
Yeah, please hold.
The next query is for you, Tapan. Sugunakar from Vijayawada is holding 69 shares of M&M, bought at a price of 2,963. Should he continue to hold or sell?
Hold, and you can add also on dips.
The next query is for you, Rahul. It's on Sagility. Raja Shekhar from Hyderabad is holding 1,000 shares of Sagility. bought at a price of 43. Can he hold or sell?
He can add a target of 46, 48.
The next query is for you, Tapan. It's on Force Motor. The viewer has around 9 shares of Force Motor, bought at a price of 18,817. Should he continue to hold?
Yeah, please hold.
The next query is for you, Rahul. It's on KPIT Tech. The viewer has around 1,000 shares, currently sitting on a loss. Should he continue to hold, sell or average?
Sell.
Well, that was the last query. Thank you, Rahul. Thank you, Tapan, for joining us and answering all the queries of our guests. We managed to take around 123 queries in the morning edition and in the afternoon edition. Well, with that, it's a wrap on this edition. Stay tuned and keep watching NDTV Profit.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी.
कुछ तो बात है इस दिल में. P-Mark, the mustard specialist since 1933.
सरसों से सरसों.
Ready for the next big IPO? Apply for it on Grow. Open your free demat account, check all IPO details, apply easily in a few taps. And that's it. Download Grow now for stocks, mutual funds and IPOs.
That if a boy from Ahmedabad with no capital and no connections could build, then there must be 1,000 more Gautam Adanis sitting undiscovered.
जिनके आइडियाज हैं दमदार, वो सब हैं वंदे भारतम के नेशनल स्टेज के हकदार. प्रो इनोवेटर्स, रजिस्ट्रेशन करो wandebharatam.org पर 19 जुलाई तक. An initiative by Gautam Adani.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
As India's mobility story is racing.
Hi, thanks so much for joining in. You're watching India Market Close. My name is Alex Matthew. With me is Hiral Dadia. We're coming to you live from the NDTV Profit Suzlon studio. It's been an action-packed day so far because we've touched the highs and we've swung all the way to the lows. Pull up the intraday chart for the Nifty 15. You'll see what I'm talking about. We started strong and then look at that. We just crashed off a cliff and we're trading not too far away from the low point of the day.
What is interesting is that we did not really break that 24,000 mark, so there is good support coming in there. What is interesting also, Alex, is where there is no reason for this fall. It is not expiry.
Yeah.
You've not seen any major selling that's come in. So what has caused this is something that we need to see over here. But again, from the lowest levels, we've recovered slightly. Not sure if we'll be able to recover the full 200 points of the cuts that have come in so far from the day's highest levels. Let's actually first look at the Nifty heat map, and then we'll look at the sectoral heat map as well.
Yeah, let's look at the heat map for the Nifty 50. There is actually more green on the screen than when you started the session. Of course, earlier on, during the time when the equity markets and the Nifty 50, the benchmark, was at the high point of the day, of course, you would have had more green on the screen. But what's gaining ground, you have Eternal, Ultratech, HDFC Life. That texture was a little different at the start. You had Shriram Finance, for example, that was up and about. You had a couple of other financial names. Axis Bank was in the top, whereas Axis Bank is now trading with cuts of about 0.8%. Bharti Airtel also trading with cuts of thereabouts. So Infi, Wipro, and
the cuts
a couple
have
of
deepened
others
slightly over there.
No, they started off very weak.
Yeah.
The IT pack as a whole, they've actually come off. So if you pull up the Nifty IT index before we go into the sectoral picture, you'll see what I'm talking about, because at one point you had very sharp cuts at the bottom, right? And then you've come off quite sharply from that point, now trading.
We're trying to get back to the day's highs. I think let's look at the contributors on Nifty 50 as well, because that will also give you a fair bit of an idea as to which are the stocks which are languishing right now. Interestingly, it's L&T which is contributing the most, along with the Bharti Airtel. Infosys was there to some extent. Axis Bank, which Alex was mentioning. What's caught up to the rally is a HDFC Bank. Good recovery there. Eternal, Bajaj Finance, Ultratech is what you're looking at. Let's look at the sectoral heat map, and then we look at the broader markets as well, because everyone is looking at the broader markets in terms of trading bets. But right now, majority of your sectors are trading in the green. What's not working today is metals. Slight bit of softness coming in there, 0.6% lower. Consumption, IT, real estate, and infra. That's where the pressure points are. But consumer durables is interestingly up in trade. Oil and gas, oil has not really done anything in terms of Brent, but you are seeing those gains of 0.8% there. PSU Bank Index, Alex, that is very interesting. 0.8% higher. So there is that outperformance coming in from the PSU banking space versus the private banking space to some extent.
And the Nifty Bank is also outperforming the benchmark Nifty 50 as things stand right now, possibly on account of the PSU banking pack, which incidentally over the course of the last couple of sessions has been under a tad bit of pressure, particularly in trade yesterday. But pull up the intraday chart for the mid cap index and the small cap index. The small cap index is where you're seeing strength. So you've gained quite a bit of ground from the low point of the day, those gashes that took place, 0.5% gains for the Nifty mid cap 150 and about 0.7% for the small cap 250. Pull up the advanced decline ratio also just to complete that picture, because you will have seen quite the closing of the gap. This is when the markets dropped quite considerably across the board, and you're still seeing advances that are ahead of declines right now.
Yeah, let's look at, even the NSE 500 or the BSE 500 components in terms of individual stocks. Nuvoco Vistas, 2 consecutive sessions of gains to brokerages are absolutely positive. Aegis Logistics, in fact, the entire logistics space is seeing some bit of a buzz. L&T Tech reacting to numbers. Birla Corp, Avanti, Shoppers Stop, HFCL, a few of the other ones. Tata Elxsi reacting to numbers again. It's very interesting because L&T Tech and Tata Elxsi, somewhere similar kind of businesses, and both of them have reported numbers and trading in opposite reactions. Zensar Tech, Adani Power, Adani Green. Delivery is another one on the back of the NBFC ARM license that they're procuring. A logistics company getting into an NBFC side of business. And I think that's what the street is not happy with.
You spoke with the management of Patanjali, didn't you?
Yeah, and Patanjali, that's one what I missed. But that has also seen a sharp recovery from an 18 to 19% drop. The stock has recovered, now seeing cuts of around 13 to 14% as well.
We should talk about the factors.
Yeah, this is interesting right now in terms of individual stocks, but let's actually address what's happening in terms of individual levels as well. Your support range, 23,800 to 20,400 is what you're tracking in terms of Nifty 50. So there is that volatility that continues, and that's what you've seen on the screens. Bank Nifty support range is coming in at 57,200 to 57,600 as well. So these two numbers become absolutely crucial. Now, as Alex was mentioning, your small and mid cap space is way better placed as compared to your benchmarks, or better placed than the benchmark. So that is a factor you should be looking at. A concerning factor is the rupee weakness right now. So that is something you should be watching out for. Again, PSU buying, strong buying in PSU banks. your IT stocks, you know, the anticipation was that because IBM cracked in trade yesterday on the back of the commentary and numbers, you could see a major reaction, but there is some bit of resilience with regards to where IT stocks go. So that's with regards to where overall IT counters are concerned, Alex. So I think this is interesting right now.
Let's cut across to the Union Bank presser where Piyush Shukla is in conversation with the management. Let's listen into what they have to say.
So I think you all have noticed that it was a pseudonova sort of thing, and it was not any base of that. Whomsoever, you know, has circulated that. And the stickiness, my CFO has told, which is around 94, 95, 96.
Okay. So I think we're having a little bit of an issue with that feed. We'll find out what exactly Piyush asked the management, and he should be available soon after the press conference to tell us what they're saying. All right. So the action today that you need to watch out for, the India-UK FTA comes into force. You have the FIFA World Cup as well, but you'll have to stay up pretty late to watch that. Hiral, are you going to catch it?
Let's see. But you know what's happened is in Bangalore, I think they've kept all the eateries open till 3 in the morning only for screening the match. And that's a special permission that has been given in terms of Bangalore. So that is going to be interesting, at least for citizens of Bangalore.
And I don't know if that is the case, then I wonder if the delivery partners are going to be delivering late tonight as well.
I'm sure at least they will be if we are not open. So let's try watching it and then see.
No, but the other thing is also there's an angle for revenue generation, right? For the quick commerce companies and for the food delivery companies. If restaurants are open, and particularly for an event of this scale, then that's when they make a lot of money.
And extra margins because you're able to charge a surcharge fee as well, right? So that is the cherry on the topping for all of these companies. So interesting, but I think we do have the audio from the Union Bank press conference. Let's listen in.
2 states, more than 700 panchayat accounts we have opened in last, I think maybe 20 days. It is not a matter, but then we are telling you that to what extent we are going for this. And see, again, it is more than 2.35 basis point, 2.35 percentage point CASA, and we are sticking to it. We are sticking on a quarter to quarter. I think that is also a very good color that we are having the. Yeah.
Okay, all right. So Union Bank of India has posted its numbers. By the way, you'll have the ability to listen to a conversation with the management later today. Stock is not doing too much, up about 1.4%. I think it might have reacted initially to its numbers and that's cooled off just a tad bit. We've got Nilesh Jain, who's the Vice President, Head of Technical and Derivative Research at Centrum FinServe, joining us, as well as Deven Choksi, the Managing Director of DR Choksi FinServe. Gentlemen, thanks so much for taking the time. Let me first ask you, Nilesh, what do you think of the benchmark action today and the market action broadly as well? Because you saw falling off the cliff midway through the session. What are the reasons why you think that would have happened, and what's the kind of strategy that you would suggest?
Very good afternoon to you, Alex. Good afternoon, everyone. Alex, it's kind of a similar move that we saw yesterday as well, where the Nifty has found support at 24,000 and cooled off from the highs. But today, it made an attempt to test 24,200 levels, but could not surpass the same. If you look at the derivative data, 24,200 on the call side is a strike which has meaningful OI concentration. That is restricting the upside for the Nifty index. At the same time, good part is that the Nifty is finding its support at 24,000 in last 3 consecutive sessions. So as long as it trades above the same, there are high possibility of Nifty breaking about 24,200 going forward. So the broader setup is no doubt looking positive with a buy and decline kind of a strategy, keeping a stop loss below 24,000 on the closing basis. Another positive development is that India VIX volatility index also cooled off by 3%, and it is trading comfortably near about 13 level. The good part, another positive factor is the banking that is showing some bit of outperformance along with the broader markets. So 57,200 is strong support for the Bank Nifty, and we expect a gradual uptick towards 58,000, and a break above 58,000 will attract a short covering towards 58,500 and above the same. So overall, looks like a consolidation going on in the market as of now, and focus should be on stock specific action.
So focus on stock-specific action. There is some bit of consolidation that's happening. In fact, let's get in Deven Choksi as well. Deven, good afternoon and welcome. This is Hiral on the side. My question to you is, in mid-day of trade, we've seen the sudden volatility that has come in. We have corrected from the day's highest levels. What is the setup looking like? Are you seeing any reasons for this correction today?
Yeah, good afternoon, Hiral. Not really, frankly. I think this market is going to be volatile market, and that is what is fully understood by all of us for a variety of reasons. I don't think that any particular move has spooked the market at this point of time, and maybe I always believe that I think this kind of fall in the market in individual stock case, I think is becoming a buy opportunity, because yes, do agree that uncertainty on the in the Iran-US related activity, I think is definitely putting many people off. But at the same time, some of the individual stocks, they definitely give you the opportunity during this kind of fall, or maybe I think the kind of volatility that you are experiencing. So our eyes are largely trained on the quarterly results, the commentary coming out of that quarterly results, and where exactly the prospects lying ahead for the companies in the balance 9 months of the financial year. That's where I think we are right now more focusing at this point of time.
Right. So that's where the focus is. In fact, Nilesh, before we get to our next piece, which is the stock of the day, what would your top picks be?
Yeah, Cyril, couple of recommendations. First of all, Voltas is showing a very good momentum in last few trading session, and the setup is looking strong on the chart. Even on derivative front, we have seen some bit of a short covering move as well. So overall, looks good for 1410 to 1430 kind of levels on the upside. So keeping a stop loss below 1355, Voltas is a buy. And apart from that, if you see another stock that is looking positive is BHEL, BAIL. This particular counter has also found a very good support at 375, 380 level, and we are witnessing a strong momentum in last few trading session, and also given a good breakout today. So follow-up trade is something that we are expecting in BHEL towards 425 to 430. So keeping a stop loss below 405, BHEL is also a buy.
Okay, all right. Let's head over now to talk about bullish brokerages, recycling, venture, capacity expansion, and sustainability tailwinds that are seeing Philatechs going towards a growth path, and the stock is up as much as 12.5%. We've selected it as a stock of the day. Bear in mind, though, that this is a stock with a market capitalization of just over 3,000 crore rupees, so it could be prone to volatility. But we've got Jasmeet joining in to talk about why the stock is buzzing in trade today. Jasmeet?
Well, Alex, thank you for that. As rightly said, this counter is quite interesting given the way company is pivoting itself. Bit about the stock performance of this company, it's up 12% in today's trade, but over last 5 years, the stock has given a return of 24%. That basically means per year the stock has grown 3 to 4%. Now, in terms of the key triggers in today's trade and what's happening with this particular counter, is the brokerage, the Sunidhi brokers initiates coverage on this particular counter, and they see an upside of roughly 120% from here on, and they're targeting the overall stock price to reach 150 rupees by in this particular year. Now, when we look at the other key triggers, we also have UK, India, FTA as well coming in line from 15th of July, where the management also remains bullish on expanding its business via the UK subsidiaries. And the next one is the company's pivot that the company is doing and converting and transforming itself from a regular polyester textile manufacturer to a recycled textile manufacturer. So what the company is doing is, the company's current business model is to acquire raw materials, convert them into polyester, and then supply to textile manufacturers. But now company is moving this entire business via its arm Ecosys, where it's trying to make cloth, the textile, from the waste. So basically from old waste, it's trying to convert and make a cloth. So that's the new business model. It's one of the India's first business model so far, where we have seen people make textile out of the PET bottles, but the company is trying to make it out of the old clothes. And the reason why the company is doing it is for the increased margin, and that's why the stock is buzzing as well. The current business provides company a margin between 7 to 8%, but the recycled business will provide the margin to the company of about 30%. Now, what is company doing for the same? The company is creating a plant where the first plant would be somewhere between 26,000 MTPA, and further plans to 5x in the coming year and reach 1.5 lakh MTPA by FY30. But we have also seen that the company would plan to increase the entire structure of IX, and they also see overall strengthening of this, given that it's a sustainable initiative by the company, and the company also notes there are a lot of traction from the EU and from the UK where they want to shift them to sustainable material, and this would increase business spans for the company. Well, if we look at the next key trigger point for this particular counter is the deals that they have signed. Company has signed MOUs with Decathlon India and also America's firm E&E, where they are planning to expand and transfer the portfolio and sell the things to that particular, and they've already signed the MOU for the same. If you look at the next trigger points for this particular counter, the company is also trying to reduce the power by moving itself to a stream distribution system and reduce the overall power required to generate the textile. And lastly, the overall combined impact of the margin given the change in the textile portfolio is expected to be between 150 to 200 BPS by FY28. All in all, these are a few key trigger points for the company, and that is when stock is pivoting. And if the ecosystem, what the company is planning on, works out for the company, then the stock would see further hand of growth.
Thank you, Jasmeet, for that. In fact, Nilesh, on the charts, what do you make of an Ather? Because strong moves coming in there. I'm sorry, of a Filatex India.
Right, Hiral. So a very strong momentum. We have seen a very good breakout. A multi-year falling trend line breakout is visible on the chart. So look strong, and we can expect further upside towards 75 to 80 kind of levels on the upside. So overall, buy and decline should be the strategy. Not advisable to chase the momentum after 13% kind of a spurt in today's trading session. But it is still looking strong. By keeping a trailing stop loss below 65, one can stay invested, and fresh entry can be taken on declines.
Thank you for that. In fact, another stock that I want to discuss with Deven is Ather Energy. Now, from IPO price, if you have to look at Ather as well, a sharp surge is what we've seen. The stock is up nearly 300% from its IPO price. You have Hero Motor, which has pumped another 1,000 odd crores in the company. And as on June 2026, Hero Motor held close to 29.5% stake in Ather Energy, and it is classified as one of company's promoters as well. Now, they've approved raising 1,200 odd crores via equity. This is to India-Japan Fund at 1,230 rupees per share. And they will be allotting 76 lakh warrants to Hero Motor, for which Hero Motor has committed around 1,000 odd crores. So interesting numbers coming in there as well. But what do you make of Ather Energy, Deven? Because overall, you have the EV segment, which everyone is focusing on as well in the two-wheeler space. Ather somewhere is trying to catch up in terms of race as well, in terms of market share now.
Hiral, I think probably if you go by the China model and see how exactly in post-2020 in particular, how exactly China has penetrated the electric two-wheelers and particularly two-wheelers into their markets, I believe that I think there is a cue to be taken from this particular subject out here. The electric two-wheeler ecosystem is now fairly in place. We are also having a reasonably cost control and the battery side of the activity. And at the same time, battery as a service, I think, which is also available along with the finance. So given that kind of a move that we are experiencing in electric two-wheelers, some of these companies are experiencing significantly large amount of traction, which includes likes of Bajaj along with for the Chetak range of vehicle, and also their investment in Yulu, which is largely used for the services spectrum, I think, by the quick commerce guys. So I think this is where probably you are likely to see higher amount of growth prospects. And the kind of money that they are infusing in Ather at this point of time does suggest that they're seeing the roadmap ahead for higher amount of growth. Of course, the math will have to be carried out as far as I think what could be the total number and the prospects thereon, which I believe in due course of time, we have more information, we'll be in a position to do so.
Deven, a view on the broader automotive pack though, and let me throw in the CVs as well. In your pecking order, which would be your preference? Because you had a situation where the CV pack as a whole was expected to get a leg up with the ending of the geopolitical tension, but once again you have crude oil that spiked to 85. So is that a concern for you at all? And therefore, would you play the strong demand that seems to be visible in the passenger vehicle space?
Alex, the passenger vehicle will certainly be experiencing more demand. I think the argument goes same as it goes for the two-wheeler in the EV space. And largely, I think the passenger vehicles with the EV focus are likely to see higher amount of growth and the prospects thereon. In fact, just out of the study, I think on last Sunday, stepped into, I think, both Tata Motor as well as Mahindra and Mahindra showroom to see how exactly the consumer is behaving. And probably, I think if you notice, those consumers are basically wanting to shift into the EV. That is what I think one message comes out very, very clearly. So, from a perspective of looking at passenger vehicle along with two, three wheelers, I think definitely the roadmap goes very clear as far as the EV is concerned. For the commercial vehicle segment in general, I believe that I think the growth is continuing and it is going to accelerate. Two or three important reasons. Of course, I think the economy per se is growing. Infrastructure projects are demanding more and more such kind of activity across, and that's where the commercial vehicle demand is. More importantly, we are also seeing traction due to the scrappage policy, which is now systematically, I think, getting inside as far as I think the scrapping of vehicle is concerned. And that's where we believe that I think the demand scenario is going to be remaining relatively strong. Likes of Tata Motors or even for that matter Eicher, I guess I think they remain relatively stronger companies. Ashok Leyland looks I think interesting too with the electric bus order that they have. However, slightly more expensive compared to other two. So maybe Tata Motors and Eicher Motors, I think both these companies remain relatively better in the commercial vehicle space from the investment perspective.
Okay, those are interesting picks coming in there, Devin. But stay with us. Somit Sarkar joins us with all the chatter from the dealing room. Somit, interesting one. Ather Energy, buzz of QIP opening soon. That khabar is confirmed. You did tell us on the 13th of July.
That is one thing that has been confirmed on that front. But yes, the company did not go ahead with the QIP. But yes, a fundraise has been confirmed from that news. But many other stocks that remain in focus. Firstly, it's Container Corp and Bandhan Bank. Dealers indicate that there are strong buy flows on institutional desks. Both foreign and domestic institutions have been accumulating this counter. Bandhan has been trading on the higher side right from the start of the day. Container Corp was down in trade but has recovered swiftly, and delivery volumes are expected to be on the higher side for both the counters. For RK Forgings, there's a buzz of a potential block deal happening very soon here. For Polycab, there are sell flows on the large HNI desks. Now, dealers are expecting a weak Q1 volume growth to come in, and post the results, dealers are also expecting a block deal that could happen when it comes to Polycab. For Kalyan Jewellers, there is the stock has gained over nearly 50% in the last few trading sessions. Now, this was largely on the back of a large FI buying shares from the open market, but dealers are now indicating that the last leg of buying is now happening and this will get over very soon. So keep an eye out for Kalyan Jewellers as well. Then there are a host of other counters like SRF, Jana Small Finance Bank and Tech Mahindra. There are buy flows on the large HNI and PMS desks. Dealers are expecting strong Q1 numbers from all the three names. And lastly, when it comes to the FMCG as a whole pack, there are sell flows across the board that we are seeing here. Dealers indicate that a negative note from a foreign broking firm is expected very soon on the entire space. So keep an eye out for the FMCG sector as well.
Got it. All right. Thanks so much, Somit, for that. So quite a few interesting stocks that Somit has already mentioned in that list. I do want to ask about a couple of them, though. The ones in which there seems to be buy flows on institutional desk, and that's Container Corporation of India, Concor, as well as Bandhan Bank. Nilesh, for both of those two counters, what's the view on the charts?
Well, Alex, out of both these two counters, Bandhan Bank is looking very strong on the chart. We have seen a very strong momentum of late, and today it has given a good breakout as well. So the setup is looking strong with a good OI build up in today's trading session of close to 1.5%. So we may see a follow-up more on the upside towards 220, 225 kind of levels. 210 should be the stop loss. On the other hand, Container Corporation, we have seen some bit of rebound from the lower levels. Earlier there was a kind of a dip we saw all the way towards 450 level, but now with that rebound the counter has reached to its 200-day long-term moving average, which is placed at 498. So the next leg of up move can only be seen post breakout above 498. Then the upside will open up for 520 to 540. At current level, one can keep a stop loss below 480 and remain on the long side.
Okay, so that's with regards to Container Corp as well. But moving on, let's just pull up Amara Raja Batteries and see what that stock is doing in trade. We know that, the company has a Giga Corridor, which is a major 9,500 crore advanced energy and lithium-ion battery manufacturing facility, which they have in Telangana, which spans over close to about 260 acres. And the project had aimed to establish a 16 gigawatt gigafactory for Leon cells and a 5 gigawatt battery pack production plant. In fact, my colleague Puneet, who is at the Amara Raja Giga Corridor in Telangana as we speak right now. Puneet, good afternoon. I know you've just reached the location. What are you picking up from there right now?
Well, thank you for that. As you rightly mentioned, this is the new plant in Telangana, and this will house the new energy business of the company. Now, you have to note that Amara Raja largely centralized in Andhra Pradesh. They have 10 plants there. And this is the first Giga Corridor coming up in Telangana. So this is about 90 minutes from Hyderabad. So we've flown through Hyderabad, 90 minutes to reach this particular location. And while we are still awaiting some more details, this could be a landmark event for the company and the start of their lithium-ion business, because this will have the customer qualification plant processes essentially. Now, in Q4 of FY26, the company had mentioned that the customer qualification process will start somewhere around June or July. So this could be one of those key events. Now, what does CQP mean? Is essentially that the company makes their lithium-ion battery products, which goes into electric two-wheelers and electric four-wheelers in smaller batches. And that is given to the customer to qualify, validate the same in their vehicles. Once that goes through, then come the big orders. So the one timeline that you have to note is that by 2027, somewhere around June, is what Amara Raja has already put this out, that 2 gigawatt capacity of the lithium-ion battery cells will come through. And today might be a landmark event for the start of that. So we're still awaiting some more details. As I mentioned, the Chief Minister of Telangana will also be here to go through the plant as well as the customer qualification process of what that is. But a lot more details will come through and emerge through. We'll also be speaking to the management at 5 p.m. today, Vikram Guruneni, who is the Executive Director of the new energy business. And the plant behind me, which you can see, will house this new business venture as well. So a lot more details to watch out for, but it is a key landmark event for Amara Raja today.
Thanks so much, and exciting to get those visuals coming through, and also we're curious to find out what the management has to say. Devin bhai, your thoughts on this massive capacity is being created in this business line that Amara Raja is working towards, and of course this is from the perspective of mobility. But even in the broader battery energy storage space, which is, I think, something that a lot of people are focusing on, capacity is being built. Where do you see the opportunities?
In fact, the tailwind has happened more because of the government's regulation, particularly for the renewable energy segment, wherein they made it mandatory from 1st April onwards to have 20% of their renewable energy capacity as a storage, I think, requirement, compulsory storage requirement. Now, given this compulsory storage requirement, which is basically happening, it is giving birth or maybe accelerating the process of battery energy storage solution, that is BESS. And many of the companies which actually I think started getting into it, I think they have started building the plant. Now, for companies like Exide or Amara Raja, they are actually, I think, getting into the cell manufacturing, and from cell manufacturing to the battery management system for the storage purpose is a complete value chain that they are incorporating into the setup. I believe that the current start which they are having with the capacity could possibly be a starter, because the amount of new energy storage requirement that the country would be experiencing in next 4 to 5 years, given the size of renewable energy that we are building in. Today, we are about 286 gigawatt of renewable energy portfolio in the country, which is likely to be 500 gigawatt, or even in 2030, or maybe even before that. That's what I think we get to hear from the companies. Should that happen, then most of these BESS companies, including the lithium-ion cell manufacturers and the battery management solution provider, I think will be in significantly high amount of demand. Remember, well, it's a tailwind. Capital investment in this business is really high, And the kind of return that in initial period that you would get, I think would be really small. That is what I think we calculate from numbers. So investors must exercise caution not to get carried away with it. Yes, demand scenario is going to be big, but at the same time, I think the profits will take some time before it actually start maturing into the books of this company.
Devinder, stay with us. You know, L&T Tech and Tata Elxsi, two stocks that you should be watching out for. And both of these ERD players are giving you different and opposite reactions. L&T Tech, 6.5% up move on the back of earnings versus a Tata Elxsi, which is down nearly 5% in trade. In fact, L&T Tech has stayed ahead of Tata Elxsi in the first quarter as well. I think in the past also its performance has been like this. And this has mainly been helped by the mobility growth, deal wins and margin expansion. Jasmeet is here to highlight the execution gap between the two ER&D players. Jasmeet, what do you have for us? Because this is a very interesting comparison that we are putting out.
Well, Hiral, as rightly said, it's quite interesting comparison to compare LTTS and Tata Elxsi, given both are in the same industry, caters to same type of clients and operates in the same geography, but one Q1 quarter and the reaction is totally opposite. Let's quickly understand what LTTS has done and what worked for that company versus what did not work for Tata Elxsi. Well, the first point, LTTS saw a broad-based growth across its segments. Q4 was weak for the company, but Q1 saw a recovery, and the majority of the growth was led by the mobility, the biggest segment of the company. Now, in terms of Tata Elxsi, we did see a growth coming in through other sectors, but the major sector, that's the overall transportation, that was weak for the particular counter. If we look at the next key aspect, we also have seen the growth trajectory for Tata Elxsi has come in terms of the media vertical, which is smaller than Tata the tech vertical, but still that medium vertical has grown for the company. But apart from that, the overall analysis does show that the broad-based growth is something that has led to the growth of LTTS. Let's quickly draw out the main table and understand what's the difference and how it has grown for the company in this particular quarter. When we look at the CC growth for the company, it has come in at 1.5 for Tata Tech, for Tata Elxsi, and Tata Elxsi is 1.3 for L&T Tech. It's at 1.5%. In EBIT wise, we see a jump of 50 BPS for LTTS, but for Tata Elxsi, we see a downtick of 330 BPS, and this downtick is on the back of extended costs that the management saw in the Q1, and brokers are estimating this cost would solve out in next couple of quarters, but still a sharp margin decline, what was not estimated. The third aspect is the overall growth. In LTTS, the growth was led by the sustainability segment that grew the most, up about 4.3%, and for Tata Elxsi, the growth was led by media and communication, about 2.9%. If we look at the next key hang, the overall European market, the largest market for ER&D space, and even KPIT Tech has come out and given out its opinion that, given out its outlook that the European market is weak for the company. And when we look at something for LTTS, the European market has seen a slight degrowth of 0.9% versus a degrowth of roughly 2% in the previous quarter. That has improved in this particular quarter. But for Tata Elxsi, the overall degrowth